on Wall Street. Pull up the GIF Nifty as well, and looking by the implied open, it's a 106-point gap up is what the implied open is currently suggesting, indicating that the December series is set to begin on a positive note for the benchmark indices. But to set you up for today's trading session, our research team is here with the trade setup, the stocks that should be on your radar, and of course the setup on the F&O side of things as well. Firstly, Ekta joins in to get all the market cues we need to watch out for today. Ekta, good morning. It's a 3-day jinx on the last hour for the benchmark indices, but what are some of the other important cues you're watching out for today?
Well, like you said, Hormuz, good morning. The markets did lose ground for 3 consecutive sessions. The last hour fall dragged the Nifty below 25,900, and the mid-cap index was in focus along with the Nifty Bank as well. What also stood out was the rupee, because it has been showing weakness, but yesterday it closed nearly flat with the rupee ending at around 89.22. Now, the FIIs did sell much less than what they have been selling in the past couple of trading sessions, and there was quite a hefty DII buy figure which came through yesterday. Now, in terms of the setup today, the US markets are higher, Asia is higher on hopes of a possible Fed rate cut increasing, and we have the GIF Nifty, like you mentioned, showing a positive start. So let's see whether that sustains and whether we manage to climb back to levels of around 26,100, which is one of the levels that we could not sustain earlier this week. Now, in terms of cues, we have the GDP growth rate, personal income and personal spending data coming in from the US. Back home, we have the FM pre-budget consultation meeting, which would be something to watch out for. Infosys, their 18,000 crore share buyback window will be closing today, and we have a listing from Excel Technologies, which was subscribed around 45 times, 500 crore IPO, but nonetheless will be interesting to see.
Ekta, thank you for that update. Over to Sudarshan now, who list out the stocks that should be on your radar today. Sudarshan, good morning. What's on your list?
Good morning, Harmaz. So I'll start with Bharti Airtel, a Nifty stock which is expected to see another block deal in 3 weeks, and this time promoter Indian Continental Investment is likely to sell around 0.6% equity, and that is worth almost 7,100 crore. Last time on November 7, we had seen that Singtel had sold shares via block deals, and that block deal was of more than rupees 10,000 crore. Indian Overseas Bank, keep an eye out because it has got the positive order from Income Tax Department. It's the tax refund order of more than rupees 830 crore. Zydus Life has got final US FDA approval for verapamil hydrochloride tablets that basically reduces the high blood pressure, and total annual sales in the US of this drug was of more than $24.5 million. NCC has got order of more than rupees 2,000 crore from Assam government. It's for the expansion of Guwahati Medical College and Hospital. Welspun Corp has filed claim up to $43.5 million, and this is against Vasco Coatings, with which company had signed JV agreement in 2015, and now Welspun Corp is saying that that company had violated the agreement, and against that it has moved arbitral tribunal in London. NTPC Green 1-year shareholder lock-in for this company ends today, and as per reports, we believe that more than 55,000 crore shares, rupees 55,000 crore shares will open up for trades. Ask Auto promoter has sold almost 4% equity via block deals to meet minimum public shareholding norms. An entire 78.6 lakh shares have been bought by SBI Mutual Fund. Last one, HEG, that stock has been in the focus for the last few sessions, and we understand via block deal data that promoter has bought more than 6.7 lakh shares, and that was 0.3% equity.
Interesting, and the stock was duly higher as well in yesterday's trading session for HEG, and of course NTPC Green. That should be on your radar as the shareholder lock-in is ending today, and the stock at around 95 rupees is trading well below its IPO price of 108 and even below its post-listing high, which is 155. But Sudarshan is still with us. He'll now tell you what you should expect on the F&O side of things as it is the start of a brand new series. Sudarshan.
It's a start to December series, and as you have been talking for the last 3 days, we have been seeing a sharp fall in the last hour. And yesterday also we have seen the sharp fall, and because of that Nifty slipped below 25,900. But good part was that Nifty managed to hold the levels above 20 DMA, that is 20-day moving average of 25,815. And for today, the good part is global cues are positive. We have seen a big move in all the 3 major indices, mainly on the back of positive talks that we are hearing about Russia and Ukraine. Now, Also, another good part is that in November series, when we had started November series, FI was short, heavily shorted. Longs exposure was around 7%. This time also it has increased a bit, but again FI has been heavily shorted. So if any positive news comes, then we might see a huge short covering. So let's take a look how the previous few November series panned out. In 25, this time we have seen a fall of 0.2%. In 2024, again there was a fall of 1.2%. But in 2023 and 2022, we had seen a sharp move up in the range of 4 to 7%. But what about December series? Last time we had seen a fall of almost 1%. But in 2023, it was an up move of almost 8%. But in 22 and 21, there was a down move in the range of 1.4 to 1.9%. As I told you, FIs remain heavily shorted, so longs exposure remains at the start of the series around 15%. On the short side, 85%. On the options data, we have seen 26,000 call and 26,200 calls were the most active ones, where the increase in the open interest was in the range of 26 to 41 lakh shares. And on the put side also, 26,000, 25,900 were the active ones. First support, I keep it immediate support will be 25,850, that is 20-day moving average. Next support comes around 25,500. Resistance remains around 26,250. Some of the cues that I'll keep an eye for December series. First one, India-US trade talks. If there is any positive outcome on that, Russia-Ukraine deal talks have been ongoing. Parliament update. Winter session of Parliament starts on December 1, and there is an expectation of something coming out, especially especially on insurance. And last one is SEBI board meet is also on December series. Apart from this, FOMC and RBI MPC will also be holding meeting in December.
There's a lot to track in the December series, Sudarshan. Thank you for that. Take a short break, get you all the developments from the White House in our special segment Trump Watch on the other side. Welcome back. On to action from Wall Street. Then the indices ended higher for the third straight session as expectations of a rate cut by the US Federal Reserve sparked a rally. The Dow surged over 1.5%, gaining 650 points. The S&P 500 and the Nasdaq also recovered from the lows of the day to end higher. Alphabet was among the top gainers, gaining around 1.5% and surging to new record highs after the information reported, citing sources that Meta was considering spending billions of dollars on the Google parents' AI chips. Now, U.S. Treasury Secretary Scott Bessent expects President Donald Trump to make a decision on the new Fed chair before Christmas. In a CNBC exclusive, he said that there is one more interview to go and he was not ready to speculate as to who might get the job.
Talking to these candidates, I realized the Fed has become this very complicated operation. It's no longer just a price setting of money. There's this very complicated calculus between the monetary policy, the balance sheet, and regulatory policy. And we've really emphasized in the interviews what's the interplay for that calculus in terms of the best way forward for the American economy. And what is each person's point of view in terms of protecting the American people, protecting the economy, and moving forward with the dual mandate.
Can you give us a hint? We often talk about the two Kevins, Kevin Warsh and Kevin Hassett, being the front runners. Is that still the case?
Andrew, I'm still got one interview left, so I don't think it would be prudent to give any hints. And I think that there's a very good chance that the president will make an announcement before Christmas. But it's his prerogative whether it's before the Christmas holidays in the New Year's. But things are moving along very well.
The Treasury Secretary also spoke about the 30-minute phone call between Donald Trump and Xi Jinping, saying that the US and China will always be natural rivals, but the two countries' relationship is in a good place.
President Trump initiated the call 30 days after the historic meeting in Busan, South Korea, between the two leaders. They have a great relationship. And as far as the soybeans, the Chinese are right on schedule in terms of the cadence of their purchases. Over the next 3.5 years, we're going to see the 87.5 million metric tons purchased by the Chinese, minimum, and they are right on schedule. U.S. position on Taiwan is unchanged. And on Ukraine, President and Party Chair Xi agreed that the peace in this Ukraine conflict, they must move forward, and they agreed to work together on it. President Trump showing leadership that sort of calm things down between the two countries. And look, we're always going to be rivals. We're always going to be rivals. That's natural, but are there things we can do together? Yes. We have the relationship in a good place. President Trump is going to do a state visit to Beijing. Xi is going to come to the U.S. for a state visit. He'll also be in the U.S. for the G20 at Doral, and President Trump may attend the APEC summit in Shenzhen in November. So if there are 4 meetings during the year, I think that gives the relationship great stability, and stability is good for the American people and good for the world economy.
Back to the markets then. Paul Christopher of Wells Fargo Investment Institute says that he's a big believer in the AI trade. Listen.
We think there are years left to go as AI and other technology developments continue to evolve. Cybersecurity would be one. Digital assets would be another one. We already have some automation in the economy. We think that expands quite a bit more. And artificial intelligence could be an adjunct, could be a helper for all of these other technologies, in addition to standing alone by itself in helping people in their daily lives. So we think there's further trend to go. We're still in the early innings. But because we're in the early innings, there's a likely tendency for markets to get a little bit extended at times.
And on to our special segment, Trump Watch. Winnie is here to tell us more on the latest Donald Trump-related developments. Winnie.
Hi, good morning, Horma. So starting with the top headlines, President Donald Trump has announced that a deal to end the war between Russia and Ukraine is getting very close over the past week. His administration refined the original 28-point peace plan with inputs from both sides. Let's listen to what he had to say.
I've also ended 8 wars in 9 months, and we're working on that final war. It's not easy, but I don't know. I think we're going to get there. 25,000 soldiers, Ukraine, Russia, In the last month, 25,000 soldiers have died. So I think we're getting very close to a deal. We'll find out. I thought that one would have been gone quicker. We did 8. I thought that would have been an easier one, but I think we're making progress.
However, a few points of disagreement still remain, and Trump has now sent his special envoy, Steve Witkoff, to meet with President Putin in Moscow. At the same time, the army secretary will be meeting the Ukrainian officials. Now, Trump will be briefed on the progress by the Vice President Secretary of the State, the Secretary of the War, and the White House Chief of Staff as well. The president has said that he looks forward to meeting with both the President Zelensky as well as President Putin, but only once the deal is finalized. Now, the US president also emphasized that the plan which was drafted by them is not his final offer, and that negotiations are still ongoing between the Ukrainian officials, and have also expressed cautious support for the framework, though they said, the Ukrainian officials, that the sensitive issues remain unresolved as of now. Now, Ukrainians President Zelensky says that the principles in the document could be developed into deeper agreements, and they count on the continued active cooperation with the American side. He added that that all of this, in terms of the deal, much of that depends on the United States, because it's America's strength that Russia takes most seriously. He also thanked and also said that all those who stood with Ukraine were important to them as well. So that is an update that has come in there. Now, other than that, we also have in other headlines, Kevin Hassett, that said that the White House that maybe he is actually one of those National Economic Council directors, is emerging as the front runner to become the next Federal Reserve chair. Now, this is all according to the Bloomberg reports. And lastly, we also had some top headlines that came in that White House has denied reports that President Trump is considering removing the FBI Director Kash Patel, calling the story completely made up. And a photo of Trump and Patel together at the Thanksgiving turkey pardoning was shared to reinforce this denial. That's all that we have in terms of the White House as well as Trump-related update today. Back to you, Hormaz.
Vinny, thank you for those updates there. Take a short break, get you cues from the commodities market on the other side. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. There's a lot happening across the globe. What is that impacting commodities?
Oh, well, yes. First of all, Hormuz, it is the U.S. data weaker than expected, really, whether it was about the retail sales, the PPI numbers were in line, and the private labor data also saw a bit of a decline. So the U.S. data that is coming in is clearly not so supportive. And that tells you that markets are assigning a higher probability now of 25 basis point rate cut for the month of December. That has led to some support coming back for the metal prices. So copper is trading at a 2-week highs. Aluminum has rebounded from a 1-month lows. Iron ore prices are trading at a 3-week highs, and we have seen various industrial agriculture commodities start to do well as well. So whether it's palm, it's cotton, that one is trading at a multi-week highs as well. The only thing that is not towing that line is the crude oil prices. That is trading at a 5-week lows. You have gasoline, heating oil prices trading at a 1-month lows. This is after the U.S. president's statement that negotiations are near complete for Russia-Ukraine peace agreement, and the potential resolution could lift sanctions on Russia, bringing more oil to the international market, which is already looking at a surplus for 2026, is what's weighing onto that space. Having said that, there is a third quarter GDP numbers coming in from U.S. today, and much more data also expected out of U.S. That is where the street will keep an eye on.
Manisha, thank you for all those updates there. Moving on to some updates from back home. The thick cloud of ash from Heli-Gabbi volcanic eruption, which swept across Delhi, Gujarat, Maharashtra, Punjab and other parts of the country, has completely exited India, according to the IMD. Airlines like Indigo, Air India and Akasa Air have assured passengers that safety remains their top priority following the eruption. Meanwhile, the air quality in the national capital remains at hazardous levels. AQI levels are currently around 306, which is the highest level of severity in the scale. Concerns also arose over whether the volcanic ash from Ethiopia could worsen the air quality levels. However, the IMD has stated that the ash clouds have passed India and were now drifting towards China. And before we call time on this edition of Power Breakfast, just pull up the GIFT Nifty, still holding on to gains of around about 110 points. So it is anticipated to be a positive start for the December series. Remember that last hour jinx over the last 3 sessions has been dragging the markets lower, and the Nifty now currently stands at that very important 20-day moving average level. But with that, we call time on this edition of Power Breakfast. From me and the team, thank you for watching. Bazaar Morning Call sets you up for trade on the other side.
morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studios. It's Wednesday morning. It's a very hazy sort of outdoors here in Mumbai, and those of you who are tuning in from Delhi, I can tell you it's not true. It's gotten worse here in Mumbai as well over the last couple of days specifically. So something we'll report on as we go on as well. But we've got markets to track, guys. Morning.
Hi, morning guys. Yeah, absolutely. I guess that's the real negative Q. Market cues we can handle, but the fact that you're dealing with 300 plus AQI in Mumbai, very, very poor visibility, the capital also choking. It's just unfortunate. That's all one can say. And now we're looking up to the rain gods for some relief.
Well, that's right. Every time you heard about those visits to Delhi and people saying that it's really hazy and really polluted, well, getting a sense out here. You wake up in the morning and you just look outside the window and very, very dull. I think AQ. Oops. I hope something.
Do you guys use air purifiers at home?
Yes, I have two.
Discussions have started now.
So I've never used one, and I think I've come close many times in the past.
Yeah.
But this morning I was just looking. I think I was checking out. Philips makes one.
Yeah.
Sold out. On I think checking out the website, the Philips website, and a few others as well. So obviously this is a common problem across the board with many facing it.
Well, I plan ahead of time. I got the second one just a couple of months ago because I don't know. I fear this, So and it's really helpful because when you go to clean it, you see the kind of the only investment I think I've made in the entire year. Worth it.
My logic so far has been maybe twisted that you got to do this. You're going to do this inside, right? But you got to step out.
Yeah.
So are you actually weakening the body a little bit to be able to deal with what is actually out there? So but now I'm not so sure looking at the situation outside. But well, that's air quality, right? And I think you're driving through a fog. Here in markets as well, you're kind of sort of driving through a fog. You don't really know, not very much clarity at all. And I think the markets are reflecting it over the last 2 or 3 days. Very indecisive. Broader markets seeing a fair bit of pain. Large caps hovering near highs even after yesterday's sell-off. So, that's essentially where we pick it up from. Now, global cues are better and better for the third day running. US equities bounced, and this is the third day straight rally. S&P 0.99%. NASDAQ ended about 0.67% higher and recovered about 1.3% intraday from a drop earlier in the day. That's the story. So actually, if you look at it, about a 2.5% intraday bounce on the NASDAQ by close. Just in terms of these stocks, large stocks, because they singularly have become so important for what the index does, right? NVIDIA, for example, ended about 3% lower on news that Meta could buy chips from Google. The TPU chips. AMD, and this is the point that I was making earlier, yesterday and day before yesterday as well, the fact that Google it's perhaps the most full stack AI company, but was not focusing so much on AI. Maybe they didn't put their energies behind it, but they got chips, they've got distribution, they've got social media, they've got, and of course, everything basically, right? Most integrated, vertically integrated player. And the market's been, of course, focused on which is the winner, which is the OpenAI ecosystem. But now you've got suddenly this Alphabet and Google, which perhaps are in play as well. So there is that dispersion underway as well. So it's not just sort of, if you want to play AI, this is it. I think it's getting a little more dispersed. AMD was down about 4.5%. Dell reported strong earnings after close and shares were higher. You got one more gentleman from the Fed once again calling for large interest rate cuts, but of course he's Mr. President Trump's man on the Fed. So maybe you got to discount that a little bit. Now, the more important thing is there's reports that White House National Economic Council Director Kevin Hassett has emerged as the front runner to serve as the next Fed chair. This is important because President Trump has repeatedly said that when Chair Powell retires in May, that is May of 2026, he expects rates to come down dramatically. Will it happen or not is a very, very different question, because it's not just up to the chair, it's a vote. And as we've seen in recent months, many have opposed large rate cuts, many have been in favor of it. So it looks like it's not going to be as easy if you just get your man to occupy the Fed chair's chair. Macro markets, 10-year yield down 2 basis points. Oil prices 1.5% lower, $62.5 a barrel is where we finally ended. And in terms of Russia, Ukraine, as we've been saying, and we discussed this yesterday, that we look to be closer than we've ever been to ending this war, at least a ceasefire. And Trump essentially was quoted as saying that he's going to meet Putin and Ukrainian President Zelensky when the deal is in final stages. That's the global picture, the global news flow. As I said, it's a little muddy, unclear. Here in India, I'll just leave you with supports. The Nifty, with the sell-off that we saw, ended exactly almost at the 20-day moving average, which is 25,847. And I think we ended 15-20 points above that level. We touched it, by the way, and then kind of bounced a bit. Nifty bank support is 58,398, which is the 20-day moving average for that index. And there is some distance to go before that comes into view, clearer view. So that's the picture. GIFT Nifty gives you a quick sense of how we're likely to start, and we'll pick it up from there. 100 points higher is the indicative open on GIFT Nifty. Let's go across to Nigel, who's standing by with the F&O positioning and the stats there. Nigel, over to you.
Well, the final series of the year does kick off today. That's the December series. And the Bulls, they thought they had it in the month of November as well as in the November series. However, towards the end of it, you did have the Bears that did fight back. And that's why you had a flattish with a marginally positive series that played out in November. But the Bulls will want to end the year with a flourish. And that's the hope with regard to the December series. And if you look at the last 10-year average or thereafter in terms of returns, it's not been too bad. The Nifty and the Nifty Bank, they have a 50% hit rate, and the average returns, hover anything between a little less than 1% on the Nifty Bank to around the Nifty at around 1.5% or thereabouts. So the Bulls will be hoping for something on these lines for the December series. Now, the biggest skew is going to be the India-US trade deal. Even at the start of November, there was hope and there was some optimism that will come about. Now that time is passing, and now you'll want to see it sooner rather than later, because otherwise a sell-on news can play out once that news does come in there. So the India-US trade deal, that's going to be the key monitorable for the December series itself. Moving to the rollover picture, well, the market-wide rollover picture, that's more or less in line. However, if you compare the Nifty futures rollover and compare it with an average of the last 3 series, it's a little bit lower on that front, because the index itself, the Nifty futures open interest is lighter in comparison to the previous few series. So if you just look at it at the start of the series, that's the data point. We start December much lighter in comparison to what we have seen in the past. And that's reflected with regard to the FI positioning as well. Because the FI as well at the start of the series, they are net short, but not as net short as what we have seen in the past. In percentage terms, it's at around 85,000 contracts, while 85%. And in absolute terms, it's around 95,000 contracts. Clients on the flip side, yes, they're net long, but not as net long as what we have seen in the past. So you have the FIs that are short, the clients that are long, but not as long as what we've seen in the previous few series itself. What else is the FIs in terms of positioning? Yes, they're short in index futures, but on stock futures, they continue to remain net long. And if you're looking at the options data, the number of calls that are written at the start of the series are more than the number of puts, which is telling you at higher levels, you're expecting some kind of resistance to come in, going by the FI positioning in the F&O market, which brings us to the levels. Till the Nifty holds on to that 25,500, 25,800, which is around the 20 DMA, 25,800, you'll say that the Bulls believe they want to seek higher levels. They'll want to end December with a flourish. And I won't rule that out, actually, that December could actually be a pretty okay month because the kind of selling we've seen in the last few days. Resistance, though, comes in at around 26,150 because they've gone to this level numerous times and we're getting rejected at these levels. So that becomes an important number. Data points that we're looking at, India Q2 GDP number, that'll give you a sense about domestic, the economy, how's it doing. The trade deal, as well as the US, that Fed rate cut is something that the Bulls will require to see. So it's going to be an interesting series. The Nifty could hold its ground, but I'll be more interested to see the broader markets actually participate because that's been the pain point in the last few days and for the November series as well. So performance in the mid and small caps is something I'll track.
Oh, absolutely. And for the timing, actually, on that rate cut, the probabilities jumped to as high as 83%.
Yeah.
If you go by the FedWatch tool, the CME FedWatch tool, that is. Market is overwhelmingly positive on the chances of a rate cut in December. Actually, we have to talk about that rate cut and also what happens with a potential final deal to end the war in Ukraine. And the US President, Mr. Trump, has announced that a deal to end this war between Russia and Ukraine is now getting, quote unquote, very close. Listen in.
I've also ended 8 wars in 9 months, and we're working on that final war. It's not easy, but I don't know. I think we're going to get there. 25,000 soldiers, Ukraine, Russia. In the last month, 25,000 soldiers have died. So I think we're getting very close to a deal. We'll find out. I thought that one would have been gone quicker. We did 8. I thought that would have been an easier one, but I think we're making progress.
Okay, yeah, well, delegations have been meeting. There were some of those so-called red lines for Ukraine, which included ceding territory. And it seems that's where some back and forth is still underway. Anyway, the other big talking point is who will be the next Fed chair? Now, U.S. Treasury Scott Bessent expects President Donald Trump to make a decision on the new Federal Reserve chairman before the Christmas holidays. In a CNBC exclusive, he said that there is one more interview to go, and he was not ready yet to speculate on who might finally get the job.
Talking to these candidates, I realized the Fed has become this very complicated operation. It's no longer just a price setting of money. There's this very complicated calculus between the monetary policy, the balance sheet, and regulatory policy. And we've really emphasized in the interviews what's the interplay for that calculus in terms of the best way forward for the American economy, and what is each person's point of view in terms of protecting the American people, protecting the economy, and moving forward with the dual mandate.
Can you give us a hint? We often talk about the two Kevins, Kevin Warsh and Kevin Hassett, being the front runners. Is that still the case?
Andrew, I'm still got one interview left, so I don't think it would be prudent to give any hints. And I think that there's a very good chance that the president will make an announcement before Christmas. But it's his prerogative whether it's before the Christmas holidays in the New Year's. But things are moving along very well.
So maybe Christmas. Prashant, I don't know the first part of that answer on what exactly is the mandate of the Fed chair and what are the qualifications for the top job? I thought that was really convoluted. I didn't read between the lines. Listen to the White House. That seemed to be a criteria there.
Absolutely. If you remember, there was another thing where President Trump jokingly said, well, I'm going to fire you, right? And then we said, the same thing, he said, well, he doesn't want the job. And you should have seen Treasury Secretary Scott Bessent's face. No, I don't want it because
definitely not.
I want to be in the firing range.
Absolutely. Well, this is not all. This was a very interesting interview. So the Treasury Secretary was also quizzed on U.S.-China relations and where things stand. Listen to what he said.
President Trump initiated the call 30 days after the historic meeting in Busan, South Korea, between the two leaders. They have a great relationship. And as far as the soybeans, the Chinese are right on schedule in terms of the cadence of their purchases. Over the next 3.5 years, we're going to see the 87.5 million metric tons purchased by the Chinese, minimum, and they are right on schedule. U.S. position on Taiwan is unchanged. And on Ukraine, President and Party Chair Xi agreed that the peace in this Ukraine conflict, they must move forward, and they agreed to work together on it. President Trump showing leadership that sort of calm things down between the two countries. And look, we're always going to be rivals. We're always going to be rivals. That's natural. But are there things we can do together? Yes. We have the relationship in a good place. President Trump is going to do a state visit to Beijing. Xi is going to come to the U.S. for a state visit. He'll also be in the U.S. for the G20 at Doral. And President Trump may attend the APEC summit in Shenzhen in November. So if there are 4 meetings during the year, I think that gives the relationship great stability, and stability is good for the American people and good for the world economy.
Okay, so lots of those points that markets around the world are watching: trade with China specifically, Ukraine and Russia, and what's really happening with the war, and of course monetary policy and the Fed leadership change. Lots going on over there. Richard Harris, Executive Director at Port Shelter Investment Management, is joining in. Richard, good morning. I don't know if you could hear some of those sound bites, but I want to pick up on the last point, which is the market believing that 25 basis points is a near given in December. And the suggestion from the White House, the constant suggestion that the next man or woman coming in is going to be, a bit of a dove. If you could read between the lines there in what Scott Bessent was saying, how the next Fed chair needs to drive the American economy forward. Your thoughts on the monetary policy front, the 25 basis points expectation, and just how significant this decision of the Fed chair might be for the market?
Well, the Fed chair, of course, is very important decision. I hear Scott Bessent has got one phone call to make, so I'm hanging by the phone for a little while because I reckon I might have quite a good shot at it.
Are you sure, Richard, you want the job?
Oh, yes. Yeah, I think so. I'd take it any day. And probably for half of what Jay Powell's being paid.
Richard, I'm voting for you.
Good.
You have support.
All the help I can get. What would they do, which is probably more important? Yes, I think the bias is for rates to come down. I think it's been like that most of the year. And the reason they haven't come down is, of course, because the US economy has been pretty robust. We've said there's been confirmation, perhaps from analysts, that the US economy is declining and is dead, but it's been pretty strong. Employment's been strong, growth has been strong, corporate earnings have been strong, stronger than we expected. We're now seeing some weakness in these figures, some weakness in the labor market especially. And I think the Fed will take that on board. And yes, US rates are higher than most of their Western counterparties, so there is room to come down. So I think the Fed has probably taken the view that while the economy is strong, we'll keep rates high. When the economy starts to weaken, we'll bring them back. And I think that's quite the right way to do it.
Richard, the other piece, which is this Russia-Ukraine deal, and the thing is, we've heard the story before, but this time they seem very confident that they're very close to a final, deal to end the war. Is that going to be significant for the market? Market's dealing with a lot, including tariffs. It's very important for us here in India, because if the war ends and hopefully out of our 50%, we lose 25% of that tariff. But just from a global flows perspective, how should we read through into this agreement that perhaps finally setting in?
Well, there's a lot to unpack there. I think the Ukraine agreement really, the first one with Ukraine, the 28-point plan, was dead on arrival. Whether this plan will be much better is another question. The Russians have already pushed back. So I feel that the likelihood of some kind of truce is unlikely. So Trump's sorting out his 9th war in 9 months is also probably unlikely. A lot more has to happen. I think that the Russians are not going to give up their territorial ambitions unless they really have to. And there seems to be relatively little pressure on them to do so. Yes, they have issues selling their oil, but they'll continue to sell their oil. Economies adapt. Russia's been on a war footing now for 2 or 3 years. The economy's adapted to that. It'll continue to adapt to that. So I don't think they're really under any pressure to do anything. The West is, however. Europe is concerned, but seems to be relatively ineffectual. The US want to get it sorted out because then they know they're ultimately kind of on the hook if Ukraine starts to get run over. So certainly the Western side wants peace. I don't think Russia's in any hurry to sue for peace at the moment. So I don't think we're going to see a deal.
Okay, all right. Richard, just to get clarity, you're expecting a Fed cut, right?
Yes.
Okay, all right. 25 bips is what you're working with.
I'll go with the 80%ers.
All right. And what about the Bank of Japan? Do you expect them to move? That's another fear, right, from an equity market perspective, that they could perk up rates a little bit, and then that yen carry trade could could cause a near-term blip in the equity markets as we saw the last time around as well. Your comment on that?
Yeah, I don't think the Bank of Japan is going to move, especially this time before the end of the year. They would take rather a lot to move. I don't know whether they're under any particular pressure to do so. So I think they'll probably stay pat. Which means the carry trade will carry on as it always is. One thing I had thought was that the yen would maybe be somewhat weaker as it was previously, especially in terms of Prime Minister Takahashi's stated aims to increase spending. But so far it seems to have held up okay, and I rather suspect it'll do that for the time being.
Okay, all right, Richard, we will leave it on that note for today. A lot of global cues to go with this morning, but thank you very much for making sense of it all for us.
Please remember to vote for me for Fed Chairman.
Absolutely, Richard for Fed Chair.
Vote for Richard.
All right. You have a good day. Well, with that, let's tell you what else we have lined up for you on the show. Plenty of interactions coming up at 8:35. The management of Office Space Solutions will be with us. We'll talk about how the company fared in the second quarter and how second half is looking like. At 9 a.m., Vikash Singh of ICICI Securities joins in. Yesterday, you heard the Steel Secretary talk about what next with respect to that safeguard duty. So what's the impact on companies and stocks? We'll discuss with Vikas. At 9:20, Harish Krishnan of Aditya Birla Sun Life AMC joins in. He's our market master of the day. At 9:35, we get chatting with the management of Shriram Finance, one of the best performing NBFC stocks of the year. We talk about the outlook for the company in the second half of the year. Then the management of Brigade Enterprises will be with us. 9:45, Pavitra Shankar joins in to discuss demand trends in the real estate space and the outlook for the second half. And towards the end of the show, Lata will be in conversation with Manish Sabarwal of Team Lease, Somraj Roy of CIAT, and Amit Basole of Azim Premji University to decode the impact of the 4 labor codes on corporates, job creation, and the economy.
I just saw that flash at the bottom of the screen, and I just looked up and I said,
I'll say yes.
No. I said, I shouldn't say Kevin Hassett. I said, will say yes if asked to be Fed Chairman, and you were all asking Richard whether he wants to be. I said, will we put out Richard say to us?
Kevin Hassett doesn't really have much of a choice. When can he really, stand up and say no? But yeah, Richard is in the.
I think there's a comment from Trump himself saying that that
on Richard.
He's not.
On Kevin.
As I think we heard from Scott Besson, maybe before Christmas we'll have a decision. But it's not, as I said, it's not the Fed chair. You can have the Fed chair, but his man. But you need it's a vote. And can he force enough people to sort of take that view is the question. We take a break. We're back with lots of individual stocks that we want to put out, and our research team is going to help us with that in our special Top 10 segment. We're looking at NCC, Indian Overseas Bank, Zentech, United Breweries, Zydus Life, ASK Automotive, LG Equipment, Ashok Leyland, and HEG. This, of course, is our stocks which are on the back of positive news flow. Bharti is the only stock which is likely to open in the red, as you can see on the screen. Coming up.
Welcome back. So cues across Asia are very, very positive. All markets in green, and markets are up anywhere between 0.5% to as much as 2%. If you're looking at something like the South Korean Kospi, Taiwan, Hang Seng, all of those markets are up and about. So let's pull up the implied open. We've been kind of slipping in that last hour slip has become a bit of a problem for our market. Can the bulls overcome that today? We'll see. With a 100-point gap up, we'll again go right back in that resistance zone, 26,000 to 26,100. That's where the slip has been happening. Let's talk about individual stocks as well. Plenty of them to focus on today. And our team is standing by with the CNBC-TV18 list of top stocks to watch. Morning, guys. Let's start with Vivek. Vivek is telling us that there could be a block deal expected in Bharti Airtel, Vivek.
Well, that's right. So Bharti Airtel, earlier this month, you saw one of the promoter entities, that is Singtel, pared close to 1% stake. Today, it's the turn of the Bharti Group holding company, which is known as Indian Continent Investment. They hold a little over 1.4% stake. They're looking to pare close to 0.56% stake via a block deal today. So the floor price of this particular offer is at 2,096 rupees a share. It's at a 3% discount to yesterday's close. The offer size is at a little over 800 million, translating to over 7,000 crore worth of equity that is expected to exchange hands. Given the fact that the discount is around 3%, we are going with the red, but expect this to be lapped up quite well.
Okay, we'll keep an eye out on that one. Thanks, Vivek, for that. From Vivek, hopping across to Vinny. She's here to tell us about some stocks and news. Morning, Vinny.
Hi, good morning. So firstly, we'll start with NCC. They've received an order of over 2,000 crore rupees. This is from Assam government. Mainly, this is for expansion of Guwahati Medical College and Hospital. Large order obviously improves visibility and long-term duration as well. So positive for NCC. IOB, they've got a refund of 835 crores from the Income Tax Department. This was for something that was going on in terms of a case for assessment year 22 and 23. So positive there as well. Inflow of 835 crores. Zentech Green expected here as well. They've received an order of around 108 crores defense order from the Ministry of Defense and Government of India. Obviously, this order is mainly for tank crew gurney training simulators, which is a decent market for the company as well, and that is why positive here. United Breweries, they have launched the Heineken Silver in Delhi and expanding premium beer portfolio there as well. Product will be offered across bars and retail outlets. Premium offerings coming in Delhi from United Breweries, a positive from them. Zydus Life expecting green here as well. They've received a final approval for Pamil ER tablets, which is a BP drug tablet actually. The market size of that in the US is around $24.5 million. Obviously, this is not one of those very big drugs, but still an approval and improved pipeline in the US is positive for Zydus Life.
Okay, all right. Vinny, thanks very much for that. Well, Sud is here with more stocks in news. Sud, morning.
Good morning, Prashant. So we'll start with the Ask Automotive. Promoter yesterday has sold 79 lakh shares to meet minimum public shareholding norm. But entire those 79 lakh shares were bought by SBI Mutual Fund, and that was done at a price of ₹473 per share. Another stock that saw block deals was of LG Equipment, in which SBI Mutual Fund has bought 35 lakh shares, and that is around 2% equity, and shares changed hands at a price of ₹483 per shares. Now keeping on two stocks, Ashok Leyland and NDL Ventures. NDL Ventures earlier used to be known as Next Digital Ventures. That's the media arm of Hinduja Group. Now today, or basically yesterday in the evening, the board of NDL Ventures has approved merger of Hinduja Leyland Finance with the company, and share swap ratio is 25:10. So 25 shares of NDL Ventures will be issued for 10 shares, every 10 shares held in Hinduja Leyland Finance. And parent entities of Hinduja Leyland Finance are Ashok Leyland, which holds around 61% stake, and Hinduja Automotive, which holds around 13% stake. Last one is HEG. Yesterday also the stock was up almost 6%, and we understand in the evening that in the block deal data, there was a mention of promoter buying shares of almost 7 lakh shares, and that was done at basically it was around 0.3% equity yesterday, and that was done in the block deal.
All right, some creeping on HEG. Thanks a lot for that, Sudarshan. And we'll try to get the management and clarify with regard to their intent on HEG, as well as they have a demerger in works. So we'll try to get more clarity. Big bounce up, though, on that stock, in yesterday's trading session. Thanks a lot, gentlemen, as well as lady, for joining in and giving us all the top stocks we need to track. Let's do a quick recap then. The ones with positive news flow: NCC, Indian Overseas Bank, Zen Technologies, United Breweries, Zydus Life, and Ask Automotive. We have LG Equipment as well as LG Equipment, and Ashok Leyland as well as HEG. All reacting to positive news flow. Bharti Airtel will be reacting to negative news flow. That's about all the stocks here to track. But let's get an insight into the commodity market Manisha Gupta joins us to help us out with what's going on there. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, two things really overnight which the markets are keeping an eye on. One is the U.S. data that came in overnight, whether it was about retail sales, PPI numbers, private labor data. All of that has been slightly weaker than market expectation or just about in line. And that has led to a bit of a decline in the dollar index. And then the markets are also assigning an 80% probability of a 25 basis point rate cut for the month of December. This has been supportive for metals. So whether it is about gold and silver, which have rebounded yet again, or copper, which is trading at a 2-week highs, we also are looking at aluminum prices rebounding from a 1-month lows, iron ore prices trading at a 3-week highs as well. So while the metals are doing quite well, what is not doing well is the crude oil prices trading at a 5-week lows. This is after the U.S. president says that the negotiations are near complete for Russia-Ukraine peace agreement. And if that goes through, then you could be looking at sanctions being lifted from Russia and more oil getting into the world markets, which already are into a surplus. That is what is taking the crude oil prices weak.
Okay, we don't mind that. I mean, at an India level and at a consumer level, we don't mind that at all, Manisha. Thank you so much for joining in. Indeed, crude down about 1.5%. Let's now head back to Sudarshan, actually, because he's been going over all the interesting brokerage notes of the morning. Let's see what he's picked out for us. Which stock, Sud?
So Motilal Oswal has to return on building materials. It has initiated coverage on Century Ply with a buy call, and target here is 958 per share. Also, it has initiated coverage with neutral call on Cera Sanitary, and here target price is 5,842, and it maintains buy on Kajaria Ceramics, and target is 1,252 per share. It believes that after 2 to 3 years of slowdown, it expects building product sector to see a recovery in H2 of FY26, and that will be led by low unsold housing inventory and spillover of project launches. Also, it expects industry to benefit from expansion of real estate sector, increased government focus on infrastructure and housing, growing premiumization and urbanization, and implementation of BIS norm that promotes quality manufacturing. Nuvama has initiated coverage on premium energies with a buy call, and target is 1,270 per share. It believes that companies looking to capitalize on J-curve-like exponential growth in new energy and rising capacity, backward integration, and DCR-linked realization underpin the forecast. FY26-28 revenue CAGR is seen at 49%, and EBITDA CAGR is seen at 43%. It believes that margin might moderate in medium term, but integration that will help companies sustain robust growth.
Okay, all right. We'll keep all these stocks on the radar as well, Sudarshan. Thank you very much for that. Need to take a break right now, but up next, we'll have Deven Choksi of Riyar Choksi FinServe joining in for some fundamental stock ideas. Also, in just a bit from now, we get chatting with the management of Office Space Solutions to discuss the road ahead for the company.
Welcome back. You're tuned into Bazaar Morning Call, and hopefully you're having a pretty good morning. Well, as promised, let's get straight to Mr. Amit Ramani, the Chairman and Managing Director at Office Space Solutions, who joins us on the show. Hi, Amit. Good morning. Good to see you in as always. And hoping that, you're safe and happy and, this asset quality, the air quality issue is not hurting too much. Well,
we're all dealing with it, Nigel. Thank you for your wishes.
All right. Let's get to business then, Amit. You have guided for a 30% growth, I think so, in FY26, if I got that number correct. And you're talking about a marginal increase in margins as well. If you could tell us, quantify what is the expansion you're looking at? Will you see 100 basis points, increase in margins, more than that? And also, will it largely be driven by seat additions? If you could help us out.
So, Nigel, I think the guidance that we had given for FY26 was, you're right, 30% growth on the revenue.
Okay.
On the margin side, what we had already achieved in FY25 was somewhere on the IGAP level, approximately about 14% EBITDA at the IGAP level and about 37% at the indices level. I think they will remain flat because this was our guidance originally for FY26, which we had already achieved in FY25. In terms of the expansion of seats, we had given a guidance of about 40,000 seats, which we had added last year in FY25. That guidance remains the same for FY26 as well. In the H1, we added about 14,000 seats, and the plan is to add about 25,000 seats. If you look at the total seat, which includes basically centers live under fit out and LOI signed, that number stands at 170,000 seats and 8.4 million square feet across 247 centers. So we are well on track to achieve that in H2 and achieve our target of 175,000 seats live by March of 26.
I think now with this seat addition, you'll have to throw in the air purifier as well. Because
absolutely, that comes. Most of our centers have treated fresh air, so they're already matching the AQI of what's a habitable AQI.
Oh, interesting. All right. Good to know you're ahead on that front as well, because you can add seats, but the lungs are calling for some kind of relief. Anyway, let's talk about the other aspects of your business. What will the exit occupancies look like? On an average, I think it was around 74%. What's the target for the year?
Yeah, so for H1 average, it was 74% for the overall business. But if you look at the occupancy for 12 months or mature centers, it was at 84%. For the year, we will look at least a 1.5% improvement, so about 75 to 75.5% for the exit for the year. So clearly, I think the occupancies are improving, and the clear indicator for that is because when we added on a base of 95,000 seats, 40,000 seats, the young seats were much larger. Now, obviously, at the base of 135,000, when you add 40, the mature seats are more than the newer seats. So I think that occupancy will certainly go up.
Amit, hi. Good morning. Good to be speaking with you. So I want to discuss margin and the levers that you have as you go forward with the seat addition plan. And I believe you're also looking at other segments like hospitality, like retail. So just walk us through what the plans are on these newer segments and what happens to the margin, because you're at around 35-36% now, halfway through the year. So are these new segments margin accretive, or will, because there's build outs and the fit outs, initially will it be a little margin dilutive? So what are you thinking on these new segments?
So clearly, I think, Surbi, one of the things that always we were asked was that, what is the margin in the co-working business and what's the margin in the fit out design and build business? And so for that, what we did was we are in the process of basically subsidizing that design and build business into a separate entity. And what it does is it allows us to focus on that business independently and grow it on its own. As a result of this business transfer agreement that will happen as a part of the subsidization, the original co-working business will have a margin improvement, because obviously it will take out some of the operating expense that are kind of mixed between the two businesses into a separate entity. So I think the co-working and the managed office business will certainly see a positive improvement. If you look at the design and build business, it's a purely services-oriented business requiring very little capital other than some working capital. So clearly, it's a high ROCE business. So overall, at the company level, it will have an improvement. Also, we have introduced furniture. We have introduced today IT services. We have introduced mobility. All of these are service-oriented, requiring very little capital, and this will have certainly an improvement on the overall ROCE for the business.
So, Amit, this is really important. Can you give us some timelines? By when will the segregation, like you're saying, you want to keep the core business separate, which will be high margin. So by when will the segregation be complete? And all of these allied services, the additional services that you described, at sort of what margin will they operate? What I'm asking is basically 12 months down the line, somewhere in FY27, what will the listed entity look like in terms of the reorganization and the subsidiaries that you will create?
Yeah, so today about 75% of the business comes from the core co-working and the managed office business. In that 75%, about roughly 13% comes from allied services, right? Which includes basically IT services, mobility, and food and beverage, cafeteria management, those kinds of services. So those businesses, the allied services comes with a high margin. It's somewhere between 25 to 30%. And obviously that will have a positive impact as that continues to grow. In the co-working business, that allied services is tracking to about 18% of the overall revenue. In the managed office business, that is tracking to about 7-8%, blended at about 13%, which we plan to grow to almost 15 to 16% over the next 12 months. So they'll have a positive impact. The 25% design and build business will get shifted into this subsidiary. And that subsidiary by itself is high ROCE because there's no investment required. Currently tracks at somewhere around, I would say at the contribution margin level, somewhere around 17.5 to 18%. As we continue to go into premiumization, that will have a positive impact as well, somewhere in the 20% plus range.
Amit, there's a SBI note, which there's the new labor codes which have been announced, right? Which have gone into effect. They say that they expect a 15% increase in formalization rate about jobs post the implementation of the 4 labor codes. Have you looked at this closely, or I mean, you're also reading the same reports. Any views on this? Whether this is going to increase overall employment, etc. Yeah,
it's a bit early days. We are having our teams review it, but to be, at least with the initial review, when I looked at it, we are already in the formalization mode, right? I mean, all of our teammates that are there already have, offer letters. They're already part of the, the labor code program that the government already has instilled. So I don't think it'll have any impact. But whatever impact, we will assess it and we will obviously report it back in the quarterly results.
No, I didn't mean for your cohort of people who are already with you. I meant like, does it kind of sort of boost? It goes down to the simple fact: will it allow and enable companies to hire more and do that kind of thing? That's the thing. But I guess
I look at it from I look at it from a very, very positive lens. I think it is the right thing for the labor force in this country. I think simplifying the code from multiple codes to 4 simple codes, and that creates a great opportunity for people to get into the formal sector. So absolutely a positive move as I see it.
Okay. All right, Amit. We'll leave it there. Thanks very much for joining us. Good luck. Appreciate it. Well, David Choksi is with us with what he'd want you to do as we begin this new trading session. David, it's a bit like driving through the fog, like in Mumbai, Delhi, etc. Markets lacking conviction, really, right? What are you doing?
Hi, Prashant. Good morning. Well, to me, I think some of the large cap companies, they are appearing ready for takeoff from current levels. They have spent enough amount of time, I think, remaining on a sideways to downside, and probably, I think, showing better earnings in the second quarter ended, and also promising to show better earnings in the second half, I think, of the financial year, followed by the next year. 2 or 3 main points, I think, out there. On one side, the cost is under control, including the energy cost for the commodity companies. This is giving them a margin advantage, which up till now was lacking in the business. And on the other side, I think, though muted in the second quarter, I think some of the companies have actually shown the relative signs of strength as far as I think the growth is concerned, particularly because of the consumption rate spending that is happening in the economy. We believe that I think the higher amount of growth in the second half, followed by the improvement in the margin, which is likely to sustain. We believe that we should be seeing a better second half, and followed by, I think, next 4 quarters, that is 26-27 financial year, with higher earning growth. Given that situation, I think it makes sense possibly to buy some of the large cap companies who are showing a distinct character of, I think, showing better performance going forward. Since they have not participated enough, I think I believe that technically also it's a case for, I think, some amount of appreciation, maybe 15 to 20% kind of an upside over 12 to 15 months, distinctly possible in some of the large companies, particularly Nifty 50 stocks.
All right. Hi, Deven. Good morning. Good to see you in. Talking about the large cap, Bharti Airtel. The blocks are not stopping. Business is looking good. You have a lot of positive triggers for telecom. I recall we had a chat with Mahesh Nadulkar of Jefferies on Editors Roundtable. And he was saying that in terms of earnings, cement as well as telecom, they will deliver very good earnings growth in the next year. What's your take on Bharti Airtel? I mean, there's another block, but prospects are good. And the stock actually has been a good outperformer in the last few years.
Yes, I guess, but though most of it is in price also today at the same time, Nigel. And I believe that I think the growth is likely to continue. I think their ARPU growth in the domestic market is showing a significantly high amount of premium compared to the nearest peer, which is Jio. That is another one advantage that they're getting. African operations have started building, I think, relatively better performance over last few quarters. And that is again giving the confidence that the company is on track as far as the global operations are concerned. But as I said, I think most of the things, including the possibility of ARPU of 300 rupees, I think is already getting into the price now. So I really do not know how much further upside one could possibly ask for. Maybe I will not rule out the possibility of 15-20% kind of an upside. I think along with the other stocks in the marketplace over the next 12 to 15 months' time, even for Bharti. I think so. That should be, I think, a good call that one would like to take.
No, I think point taken there. Otherwise, I think we'll have to see where things head. Grow, Deven, any thoughts? Was one of the big volume-led gainers by the end of it. Another name, new listing, Capillary, has done pretty well since listing. I don't know if you've taken a look at it.
So Grow, Prashant, I believe that I think is again everything is in price. I think some of these consumer tech companies, be it in the space of fintechs or investech, whatever you want to call it, yes. I think they have the typical character of, showing the premium valuations in initial months, and then only after a while, I think it tapers down. Maybe it typically explains the trait of fund who wants to basically include the stock into the portfolio for the sake of balancing act, I think, in the investment portfolios. I would not like to possibly chase the expensive valuation, even though everything else looks and sounds, I think, absolutely convincing. Particularly the business environment for most of these companies, I think, which are looking ahead, they are looking very strong because I think today you have got about 1 lakh new demat accounts getting added into the system, which suggests that the distribution business as well as the direct brokerage business both are likely to show better for a company like Grow. In my viewpoint, I think that's a key advantage. However, I think everything is in price. I think today the valuation speaks everything. Maybe 27, 28 earning outlook is covered today in the valuations of the stock. So not very clear whether one should buy immediately or one should wait. I would rather like to wait.
All right. Okay. All right. Deven, I wanted to ask you about a couple of other names. There was so much of debate about Tata Capital, valuations they're coming at, big OFS. But another peer, AB Capital actually, that was trading at, similar or, similar ratios, but at a sharp discount. I think from the time Tata Capital has listed, this one has given 15% returns. And one of the few stocks, AB Capital, is at a 52-week high. Any view on this name and what do you like from this space?
So, Nigel, in general, we find that the consumer spending is increasing, and that is a good sign for most of the NBFC companies, particularly those companies which are having the fintech to their advantage. I would think that the 2 or 3 key drivers here. First driver, of course, I think, is how quickly you turn around the request for the loan, which means, I think, how quickly you disburse this loan. And that's where the fintech, I think, which is along with the AI, is basically, I think, is a thing which one could possibly ask for. And that's where champions like Bajaj Finance would remain relatively convincing as far as their ability to disburse loan is concerned at a faster pace compared to others. Second most important aspect is definitely about the cost. because I think that today the liability side is coming down, and those companies which are in a better position to raise money at a lower cost, I think they're ensuring that their margins are likely to remain intact. And the third, and not last but not the least, will be the non-performing asset ratio. I think again Bajaj Finance kind of company is leading the pack in way of disbursing loan, which is not proving expensive at the end of the day because of non-collections. So all of those issues are very positive. We remain distinctly convinced about the higher amount of spending by the consumer, and that's where some of these companies which are using fintech would be a differentiator in this space. And I think we prefer to go with those kind of companies who are basically, growing faster than the average rate of growth in the industry.
Okay, all right, Devin, we'll take a quick commercial break here. Allow us to do that. We'll come right back, get you some trading ideas from our technical analysts as well. Stay tuned. Sudarshan and Mitesh on the other side. Okay, well, we got, 6 minutes to go for the pre-open session to kick off. Hormuz is here with the big movers from yesterday, which saw, heavy volume action. Hormuz, take it away.
Good morning, Prashant. And even as the markets were choppy yesterday, the new listings continued to hog the limelight. And one such name was Capillary Technologies. It's just been 3 days since the stock listed and gained on all 3 days now. It was the best day yesterday for the stock since its listing. 16% higher on the stock. Now, yesterday, 2.5 crore shares were traded similar to its listing day. Out of those 2.5 crore shares, only 18.5 lakh shares were marked for delivery. But the striking point of that in yesterday's session was the turnover. A 1700 crore rupee turnover, which is more than double its free float market cap, which is around 820 crore rupees. And this 3-day move has taken the stock 25% above its IPO price. NTPC Green Energy, we spoke about it earlier in the day as well, the lock-in period ending, but the stock has been on a 6-day losing streak before the lock-in period ended, and there has been a substantial decline in trading volumes as well as the delivery volumes before this event. Yesterday, 37 lakh shares were traded below the 20-day average of 47 lakh, and 19.5 lakh shares marked for delivery also below the 20-day average of 28 lakh shares. In fact, the delivery percentage yesterday, which was only 51%, was the lowest in comparison to, since October 14th in comparison to the number of shares that were traded. And the stock from its post-listing high is down around 40%. Karnataka Bank is the third one on the list, and that has continued to be in the spotlight after a key investor has bought stake in the lender. The stock is up 24% in the last 3 sessions, and in this 3-day winning streak, yesterday's volumes were the highest in that 3-day period. 5 crore shares were traded yesterday on Karnataka Bank. The 20-day average is around 65 lakh. But out of those 5 crore shares, 80 lakh shares were marked for delivery. The 20-day average of around 21 lakh shares. And even here, the 3-day turnover of around 3,000 crore rupees is almost a third of its entire market cap. And Tarson's products, we spoke about it yesterday, about the stock being on a 14-day losing streak, and it rebounded from that yesterday, gained around 12 to 13%. And Tuesday's volumes were the highest on record for the company. Close to 1.5 crore shares were traded, the 20-day average of only 1.5 lakh. But out of this 1.5 crore shares, only 26 lakh shares were marked for delivery. And Tuesday's turnover of 326 crore was almost equivalent to the entire free float market cap of the stock, which is around 350 crores.
Okay, all right, Hormuz, thanks a lot for that, and we'll keep an eye out on a few of those stocks. Well, time to slip into a short break. We'll come back, we'll get you the pre-open rates. We'll also be joined by Vikas Singh of ICICI Securities to discuss the impact of a delay in the import duty for steel companies. Stay with us.
Welcome back. 9 o'clock. So we will start getting our pre-open rates any minute. Now, remember, the Qs have been actually fairly supportive. Global markets are in a fine form this morning. All of Asia is up. Now, this will settle. This is the first rate, so let's just ignore it for a bit. We have our technical experts joining in to give us some sense of how to approach trade today. So Darshan Sukhani and Mitesh Thakkar, as always. Gentlemen, good morning to both of you. Mitesh, let me open with you. The Nifty has been disappointing the bulls last 2-3 sessions, right? We're getting that last hour slide. What would you do today?
Good morning, Survi. Been maintaining that we'll possibly see some consolidation before the markets have the strength to continue this up move and get past the all-time highs. It takes some efforts over there. So I've been advocating that it could be a range of around 25,800, 850 to about 26, 150, 200 on the upside. And maybe today, if we get it close to about 25,800, you could see some signs of reversal and then take a long position. For the timing, I'm not sure whether we'll be able to clear the all-time highs immediately, but at least if we, bounce back from levels around 25,850, then a rally or an up move to about 26,200 or thereabouts could be very likely.
Okay. Sudarshan, hi, morning. What about you? Will you be a buyer of these dips?
Yeah, good morning. Well, the Nifty has been fairly choppy, and it's also shown some signs of weakness. At least you talked about that last hour weakness for the last 2-3 days. But we are now coming close to a support level of 25,800. So that's your stop loss. I would suggest if you have long positions, stay with them. I've already given you an exit number. If you don't, a small dip today above 25,800 would be a buying opportunity, because then you are buying on a very sharp dip. So yes, today, so far as these levels hold, it's a buy on dip.
Okay, got it. Buy on dips is what Sudarshan says. Sudarshan, you go first. Tell us, what's the individual stock calls you have?
Well, it's a mix. Emphasis is a buy with a stop under 27.40. Mankind Pharma, which rarely comes in my list, is a buying opportunity with a stop under 2205. IndusInd Bank is an intraday short with a stop above 860, and Angel One is an intraday short above 2750. The very fact that I have two long and short suggests that the markets are choppy.
Okay, all right, fair enough. So that's Sudarshan's stock list. Mitesh, stocks for you. What are you going with?
I have 2 buys and 2 sells as well. IDFC Bank, appears to have completed a pullback and bounced back yesterday. That's a buy with a stop below 78 for targets of 82. Also a buy on Godrej Consumer with a stop at 1128 for targets of 1180. And on the negative side, a sell on Jindal Steel with a stop at 1041 for targets of 985. And Bharat Electronics is a sell with a stop at 417 for targets of 395.
Thanks a lot, gentlemen. We'll come back to you all for your 9:10 call. For the timing, let's move on. In an exclusive conversation, Mr. Sandeep Pondrik, the Secretary, Ministry of Steel, told CNBC-TV18 that the government's decision on safeguard duty is expected soon. He also says that he expects to see a pickup in demand and pricing will gradually improve as well. Let's listen in to some bites of the conversation we had with him yesterday.
On the safeguard duty, as you know that there is a process which was conducted by DGTR, and on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6-7 November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years, which is under consideration with the government. So we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have relaxed it, suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices would stabilize.
All right, let's take that discussion forward then. We have Vikas Singh, Vice President at ICICI Securities, who joins us on the show. Hi Vikas, good morning. Good to see you in as always. What do you make of the Steel Secretary's comments? Mr. Pondrik is saying that it's expected soon. But what are you factoring in? Are you factoring in that safeguard duty ultimately does see the light of day? Currently, there's no safeguard duty, and that's not been the case actually for the last 20 days. I think effective November 6th is when that expired. So for 20 days, there's been no protection. You see this as a big risk that it's not going to get renewed?
Good morning, Nigel. Yes, we are also factoring in that the final duty would get implemented in some time, basically. Currently, if you look at the steel prices, they are already at a steep discount to Chinese as well as Korean imports. So effectively, if there is no safeguard duty, final safeguard duty comes in, we might see another 1,500 to 2,000 rupees price fall from current levels. Because for versus Chinese, we have already given away most of the safeguard benefit. So we are expecting that the safeguard duty would come, and we are still hopeful that this would help a little bit of price improvement, maybe by January in the flats, because flats are oversupplied at this point of time. And longs, we are expecting some price improvement from December onwards.
Okay, all right. And the longs, I mean, normally longs don't get imported. So that irrespective whether the duty notification comes or not, you're expecting a price improvement in longs. Could you tell us what is the quantum?
Yeah, so basically what our expectation is, usually December onwards is the peak construction quarter for India. This will last till April or May. So usually long prices have a tendency to go on an upward trajectory during this period. We're expecting marginal, not very high, 1,500 to 1,000 rupees kind of the price increase in the long segment in December.
Okay, and the price increase in flats will, will be based on whether or not the duty sees the light of day, right? Because in the near term, otherwise flats will be under pressure. We have domestic steel companies that are coming on with capacity, and now that risk of imports again opens up. Would that be a fair assessment that only if the duty comes, only then will we see a price increase?
Yes, that's correct. Yeah, that's correct.
What is the current price difference? If I look at the domestic pricing of steel and landed cost of imported steel, what is the current price difference?
So currently, if we don't count safeguard duty, then there's not much difference. But assuming if the provisional safeguard duty would have continued, then you are 12% cheaper versus Chinese and 9 to 10% cheaper versus Japanese and Korea. So that's why I said we have already given away most of the safeguard benefits over the last couple of months. And currently, if safeguard doesn't come, then the Chinese would come at par and Japanese, Korea would put further pressure of 1,500 to 2,000 rupees on the prices.
Got it. All right. Okay. So I think that duty should come about to help the profitability of, the domestic guys and also keep it very, very competitive. For the time being, you're factoring in that safeguard duty should come about. And my interactions with the industry as well suggest that they're expecting to come. They believe it's a delay and it's not a cancellation. Let's hope that happens. What's your view then on ferrous as well as on the non-ferrous pack? I recall that call on Vedanta you made a couple of years ago. It was in isolation when you were very, very positive. The stock is at 500 rupees and dividend payouts have been very, very healthy from the company itself. The demerger is in the works and hopefully that sees the light of day from a shareholder perspective. What will it add if we do see that demerger go through?
Yeah, so we are still positive on Vedanta, basically. And we are also hopeful of demerger to go through because this company seems to be serious regarding demerger process. That's why they have paid SEPCO as well. So gradually they are removing the hurdles on the demerger one by one. So if demerger happens, so our current target price is closer to 580, and we'll stick to that. Regarding dividend payments going forward, I think that the next 6 month dividend payment would be a little bit low on a lower side because the company doesn't have a very high need of paying for the VRL debt repayments for the next 5 to 6 months.
Okay, all right. And your top preference would be from both the steel as well, ferrous and non-ferrous. If you could just name the stocks. Vedanta is a stock that you like with 580 target price. From the ferrous names, what do you like?
On the ferrous name, we are still constructive on Tata Steel at this point of time.
Vikas, a pleasure speaking to you. Thanks a lot for giving us an insight with how do you see the dynamics pan out. And the industry is hoping that finally we get that notification with regard to duties. Otherwise, the domestic industry could be in for some troubled times, given the kind of capacity ramp up and lack of export opportunities as well.
Absolutely. So this is an important point to watch to see if we indeed get a change on the duty and extension or something new in terms of protective measures for domestic steel players. By the way, folks, before we go on to our 9-10 calls and get set for market opening, I just want to put this out there. Today is 26/11, a date that this city of Mumbai and the country that we are in will never ever forget. So just a thought, a prayer going out to people who saved us, the forces who continue to preserve us, men like Tukaram Omble, Vijay Salaskar, Hemant Karkare, and many, many more. I just wanted to say that the city of Mumbai, the nation, will always remember 26/11.
Absolutely, Surabhi. And I think, never ever forget, of course, some of the sacrifices, as Surabhi said, really something we should all, always be thankful for. Well, I think we are sort of running into market open now. 3 minutes to go for the market session to begin. Sudarshan is with us, so is Mitesh. Gentlemen, good to have both of you back with us. Sudarshan, what would your trades be?
It'll be Angel 1, intraday short in Angel 1 with a stop above 27.50.
Mitesh, what about you?
I'll go with a buy on Godrej Consumer.
Mitesh, any thoughts on Godrej Consumer is Mitesh's pick. Any thoughts on Reliance, which has been showing strength, and perhaps one of the reasons why the market is, keeps coming back is because Reliance has been, yesterday also intraday it perked up, market picks up. How's this one looking at about 1540 now?
So, we've been having a bullish view on Reliance, and I think earlier it was on the buy list as well. Last couple of days I haven't given a buy here, but the highest weekly closing which Reliance did was on the 12th of July 24, which is around 1585. So I think that's the near term to swing target, and I think around those levels of 1585, 1590 is where traders can look at booking profits.
Okay, all right. Thanks very much, Mitesh, for that, and we'll chat again soon. So that is a quick view on Reliance Industries. Well, let's talk about Bharti once again. Vivek is here to shine the spotlight on this once again. Vivek, tell us more.
Well, that's right. Like we just mentioned a little while ago, we are expecting a large trade to take place as far as the shares of Bharti Airtel is concerned. The seller here is Indian Continent Investment, which is an arm or an affiliate of the Bharti Group, the promoter entity. They held a little over 1.4% stake at the end of Q2, and today they are looking to pair close to 0.56% stake. This particular deal is expected to happen at a 3% discount to yesterday's close at 2,097 rupees a share, indicating that total value of the total block could be over 7,000 crore rupees. Remember, just earlier this month, you actually saw Singtel Group also go ahead and pair its stake in the company. So it'll be interesting to see when this particular transaction does happen in the session today.
Okay, all right. 2.6 lower on Bharti as we look at this one taking shape. Lots of deals. I mean, we reported, for example, during closing bell, that there's another large block which perhaps will come with regards to Vishal Megamart. Yash put that story out, but that'll take time. It'll be perhaps in the first half of December, but 13% after they still own over 50% stake, and they want to bring that stake low gradually. Okay, well, let's just quickly count down to the market open. We're about 8-9 seconds out. First rates will start to come up, and then we will look at individual stocks in terms of where they're starting. 25,840 on the Nifty. You got the Nifty Bank, which is up about 0.25%. The Nifty's ticked back into the green. The Sensex is in the green. Small cap index about 0.25% higher. The mid cap index will come up. It's kind of absolutely flat, the mid cap index, so a little bit more buoyant in the small cap space. Nifty 50 heat map gives you a quick sense of where we are starting. And then we will pick up from there and look at the broader market stocks. Tata Motors passenger vehicle, there is that Sierra launch, right, which happened yesterday. And it seems to be responding a little bit this morning. Jio Finance, Infi. On the other end, you got Bharti, as Vivek was just telling us. Nestle and Bajaj Finance are the others which are down, but more up than down, clearly. And you got about 60 odd points on the Nifty to show for it. Surbhi.
That Sierra launch was such a talking point around me, and I'm sure around the city as well. And can it really reverse the fortunes for Tata Motors passenger vehicles? It is a domestic business. It's one of the biggest underperforming stocks of the year, down 50%. But today it's up 1.5%, with some positivity definitely rubbing off. The other stocks, JSW Steel, Nigel was just discussing this with the analysts. Will there be another safeguard duty or some more protectionist measures? That seems to be the hope. 1.5% up on that stock as well. Tata Steel is also up about 1%. Coal India is up about 0.7%. Then there's IT, which is contributing nicely this morning. Names like Tech Mahindra, HCL Tech, and even Infosys, all of them putting on 0.5% to about 1%. Banks are not bad. The Bank Nifty is actually leading the Nifty. The gain is almost 0.4% on the Bank Nifty. So look at SBI, ICICI Bank. These are the early leaders at this point in time. On the flip side, not too many stocks to really worry about. Bharti Airtel with the block trades happening down to 2.5%. Tata Consumer and BEL. But otherwise, the Nifty is on a nice rebound note, 25,950.
Well, that's right, Surbhi. Good amount of, good move is what we're seeing on the Nifty. And the breadth of the market, actually, after a while, it's looking pretty okay. And hopefully, by the time we end, we'll have so many stocks that are advancing. You have 2.5 stocks that are advancing for one stock that's declined. We haven't seen that in a while. A few stocks that are catching your attention. Capillary Technologies, the newly listed company. This week, the stock is up 25%. Yes, that's correct. It's up 5% today, and that takes the gain for the week to 25%. The other big mover is Tourism Finance. A lot of talk about that investor that's gone ahead and bought a large chunk in Karnataka Bank. And in fact, he has a big chunk in, Tourism Finance as well. So for the week, the stock is up close to around 10%. Good move is what we're seeing out there. SAIL had pulled back 10% from the recent peak. Now that one's back in the green, up close to around 3% as we speak. So good move, and volume's fairly okay as well. Another stock that got crushed last week was Sammaan Capital. That one, in fact, is up close to around 2.5%. So starting off with some green. Otherwise, some of these stocks, whether you're looking at Hindustan Copper or Nalco as well, they saw a big correction when there was that, a bit of uncertainty with regard to a Fed rate cut. Last week, the probability had fallen to as low as 30%. It's back up to around 80%. So some of these metal stocks are celebrating on that front. The trade that we're waiting by for, the Bharti Airtel, that has taken place. Stock down 2.5%. Once the block gets out of the way, let's see if there's a recovery inside. And Karnataka Bank as well, cooling off. Stock is up, I think, 20% in the last 7 sessions. That one's down 1.5%. Let's see whether it stays in the red or it sees a bit of recovery.
That block has gone through, right? So 2.5% lower on Bharti, 3.5 crore shares, 0.6% equity, worth 7,400 crores. And that, of course, is the big one this morning, which Vivek, of course, has been telling us about from this morning. So there you go, that block going through. Well, I think we have Harish Krishnan now joining us to take us through what he's been doing at Birla, right? Co-CIO and head of equity at Aditya Birla Sun Life Asset Management Company. Harish, good to have you with us here. Thank you for joining us. We are perhaps going into, at least the mood seems to be a bit despondent when whoever you speak with. Not enough impulse for the market to come off in a meaningful way, and not enough to take it up in a meaningful way either, across the board. So what does one do? I mean, it seemed to be in a bit of a holding pattern environment across indices and maybe even some stocks.
Right, Prashant. So, close to almost all-time highs of the indices. I think this question pretty much sums up the mood of the street, because the median stock is smarting a very sharp drawdown and is nowhere close to the all-time highs that we're seeing of, say, the Nifty or the large cap indices. So I think it's more a function of the breadth of the market,
and the fact that over the course of the last 2-3 years, a lot of money has chased down illiquid names, be it in the micro caps, small caps, that are all smarting from drawdowns. So per se, I think we are more in the optimistic camp. We believe that earnings growth is actually starting to move up. We did have a view that come the festive season, there will be an improvement in earnings growth. The last quarter did seem to suggest an improving in the breadth of the earnings growth. And we do think that as we get into the December and the March quarter, this will further get bolstered by a percentage or two. So as far as earnings is concerned, it's quite good. I think what plagues the broader market is also a function of significant amount of supply of paper that seems to be incessantly coming, both in the form of IPOs, wherein we've seen some very large IPO transactions from September, October, but even so in the form of various stake sale, be it by promoter groups or by private equity and venture capital. So that kind of puts a lid. Just to give you a perspective in terms of numbers out there, current supply of paper is close to about 2% of market cap on an annualized basis. This amount of paper we have never seen. The last time we saw something even remotely close to this was in 2017 end. So that gives really the problem point at this point of time is not so much about the earnings growth or fundamental stacking up, of which we think there is a lot of good things in place, but more a function of the incessant supply that's around here.
Okay, Harish, hi. Great to be speaking with you this morning. Thanks for joining in. So, what's really interesting, I think, since our last conversation is that a lot of brokers have started giving buy calls on IT. I don't know whether we can call them contrarian buy calls any longer, because a couple of them are giving those buy calls now. And I think the thesis really is that at some point, we'll be past the build-out stage of AI and we'll be in the adoption stage. And that's the argument that some of the brokers are making, sell-side brokers, that Indian IT services companies have always been very good at adopting new technology, whether it was cloud or whether it was digital. So they'll do the same with AI, and therefore we're probably past the worst. Does that argument cut ice with you?
Absolutely. In fact, we've been positive on IT services for the last 3 months or so. In fact, I do remember coming on to your Diwali show, and there were a lot of raised eyebrows at that point of time as to why we're looking at IT services as a potential dark horse trade. And our point was not so much that, we ever had a doubt that Indian IT services would adapt, because we've seen them adapt through various changes over the course of the last almost 3 decades. But more importantly, the real recipe for making money in markets is to buy at low expectations. That really is the longevity of a cycle in a good business with very capable management teams. When expectations are low is when there is a greater probability and an asymmetric nature of making money comes through. So just to give you our thesis as to why we believe IT services were a buy was primarily that over the course of the last 3 decades, there have been only 3 points in time where the market cap share of Indian IT services, which is the market cap of Indian IT divided by the top 1,000 companies market cap, has been lower than the profit pool share of Indian IT services. There have been only 3 instances. The first instance was in 2008 amidst the global financial crisis, wherein the banks themselves were going belly up, and therefore, given that banks were the largest clients for Indian IT services, there was worry on Indian IT services existence. Second was in 2017, when there was a similar wave of digital ecosystem springing up, and there were worries that Indian IT will not be able to adapt. And now comes the third kind of phase. Now, just because it is lower doesn't mean that in the next 3 months, 6 months, it's going to surprise on a massive positive scale. But we do think that the risk reward is significantly in our favor when we think about from that perspective of Indian IT services. So that lies our base thesis. The second, of course, was the fact that we do think that given rupee depreciation that we've seen from 82 to 88, 89, there is some amount of margin support of Indian IT services. And lastly, like I said, the expectations are way too low, which we think over a 3-year perspective provides us reasonable room for comfort.
All right, hi Harish, good morning, good to see you in. If you're allocating money though, what would it be, because the broader markets are not feeling like anything like all-time highs, right? The kind of pressure that you're seeing, if you speak it to anyone, they'll be like, my portfolio is down, whatever. 5, 10, 15, 20% as well, depending on the quality of the stocks that they have, obviously. Well, we are talking about 1-2% away from fresh all-time highs. Do you think it's time now that if the economy is going to recover, earnings are coming about as well? And last quarter's earnings haven't been too bad, actually. It's time actually for the broader markets to participate?
So we are constructive on markets. It's just that the nature of the markets, instead of looking at it only from the dimension of going down the market cap curve, which is that small caps will give greater returns than mid caps, greater than large caps. I think what we are likely to witness is possibly a greater direction of sectors that are going to lead the next 3-5 years of the markets. By that, what I mean is that there are at least, in our opinion, 8 or 9 key sectors which account for about 50% of profit pool of India, which have underperformed in the last 3-5 years. And that to us provides us an opportunity. Just to give you some examples of certain sectors out there. So if you think of chemicals as a space, this is a space that has underperformed despite significant amount of capex. Of course, there are global headwinds in the form of destocking, etc. But this is a space where we are increasingly positive. Similarly, if you look at insurance, that's again a space which hasn't done anything over the last 3-5 years. Almost 5 years or pre-COVID, every corporate wanted to be in insurance. Today, pretty much most of them are getting out, and the big 3 or the big 5 are really consolidating away market share. It's not that the demand penetration story ever went. It's just that through a cycle when we were to look through, I think now we are getting to a phase where expectations are quite low and they are quite possibly likely to beat up. Similarly, if you look at, say, cement, if you look at, say, metals, if you look at IT services that we spoke about, or even the banking sector, especially on the private banking space, there are a lot of these pockets which to our mind provide us reasonable value and reasonable margin of safety. Of course, nothing is very, very cheap, but in the context of where, as you rightly put out, earnings is likely to start tracking upwards, and the fact that these, in aggregate, if you were to look at it, these 8 or 9 sectors account for only about 40% of the total ownership by various funds. That means that this is an under-owned space, this is underperformed, and that there are tailwinds coming through in the form of earning catalyst, which we think is a heady combination as to where money can eventually go towards, and which is where I think instead of looking only from a breadth, from a small cap, micro cap, etc., participating, I think we think that it makes sense to look at it from a slightly more vantage point of sectors, and these are the sectors that we are allocating more of capital to.
I want to ask you about platform businesses and perhaps the most profitable of them, exchange businesses. Not too many of them listed. MCX, by the way, there was a flash at the bottom of the screen that MCX has crossed 10,000 rupees price for the first time. In a rare appearance, we had the new not so new, but relatively new managing director at MCX with us. She spoke with my colleague Manisha Gupta. I want to just play out a quick soundbite. These are basically ambitions that she set for herself and the organization. So just listen in, and I'll come back to Harish with a question.
What I heard is, you have to be ready for 10x, right? And I think that was really a rallying cry.
A ringing thing, huh?
Yeah. And I said, and I think all of us agreed within MCX that I think that really is our goalpost now. So I think we are going for 10x, and we sort of ballpark numbers looking at something like maybe 10 billion orders a day. So that's what we're getting prepared for now. And when we look at timelines and we say, look, we want to target to 10x, 10x may not be like a single shot jump, right? So probably it's going to have 2 or 3 milestones. If I look at very headline numbers, and we've sort of quadrupled in the last 2 years. So if we say, hey, if I look at that as a potential run rate, and there could be best case, there can be like a better case, and so on and so forth. Looking at all of this, I would say we should look at a first benchmark in about 12 to 18 months as a milestone, and in 2 to 3 years, really be at the kind of levels we're talking about now.
Harish, we look at growth in 26, 27. Will it be 15? Will it be 20? But when you are when the management says, well, okay, 10x growth, how do you read it as a fund manager? So 50,000 crore market cap, they probably do about 1,200 crores in profits. So about 40 times, 45 times earnings this year. Your thoughts on MCX and maybe other these kind of other businesses as well?
No, so I think we are very encouraged by platform businesses and the potential for operating leverage. Now, the key is where they are in a cycle. So we've seen, for example, the stock market cycle over the course of the last 5 years where volumes have shot up through the roof, be it especially on the F&O side and a bit on the cash volumes. And can we see something similar to happen on commodities as more and more Indians discover this kind of a trade? I mean, there are a lot of new age broking platforms which have just started introducing commodities for investors to trade on. We per se are quite positive on commodities as a space. Given the fact of global geopolitics and the fact that pretty much all major economies want to have some amount of resource independence, we do think that that is going to lead to an improving commodity prices as an overall basket. So I would think that there are these platforms that are looking quite interesting. The key aspect for us, like I said, is that how do we think about how much of it is already priced in and where are we in the cycle? And from that perspective, there are a lot of platform and new age companies which are just about, as they say in their parlance, getting into day zero or maybe into day one. Those are the ones that really interest us because unit economics for many of them are actually looking extremely good. There is very little competition in many of them, and therefore we do think that they can have a tremendous runway if one is able to get a good entry price into many of these franchises.
Okay. All right, Harish, I think on that note, we'll wrap it up. Thank you so much for joining in. Great conversation as always, good perspective, and some interesting calls there coming through on IT as well. We'll keep that in mind. So, of course, Harish Krishnan there turning quite positive. I mean, that's Aditya Birla Sun Life Mutual Fund as a house turning fairly optimistic on IT services. We'll get to our next guest in just a second. Let's just quickly take stock of where we are. The market right now is cruising along quite nicely, recovering from yesterday's drubbing. 105 points higher, so it's not looking bad. Banks are actually doing very well, and so are mid-caps this morning.
Prashant, you asked a question with regard to air purifiers market, right?
We're back to the purifiers.
No. I mean, in terms of financials, the market size is 230 crores odd. That's as of 2023, and it's expected to grow at a CAGR of around 18%. By 2030, it should be at around 750 crores odd.
Annually.
Annually. In terms of a listed player, Eureka Forbes, I think, is low single digits as a percentage contribution, and the others are very, very small in revenue terms. But the market is, the penetration is less than 1% for air purifiers. So it could be a market that could actually explode.
The EMS players, as of now, the big EMS players.
Dixon has a tie-up, I think, with regard to it. It's just pulling out some technical research, and Havells.
It's just too small.
Too small.
Because, and think about it, when does demand spike? It basically spikes during crisis.
Yes.
Yeah.
When, you're hit by smog, pollution, headlines, right? I mean, I think October to December perhaps is peak, and then it kind of tapers off once again. So, very, very small right now, of course, and also aimed at basically upper middle class and, that category of consumers. It's not a mass product in that sense, so to speak. Well, just a quick couple of words, a couple of stocks basically. Capillary, right? We highlighted this in the morning with Devin, and then Hormuz had some data on this one. It's a recent listing, 4 days old in the market, 786% once again. It's the number one volume-led gainer at this point. I think came to the market at about 520 or so, I think was where it listed. I'm not sure the IPO price, but 780 now. And huge volumes. Sammaan Capital is coming up. It's the number two volume-led gainer this morning. Sammaan, of course, has had a big fall from, fell from 190 to 150 very quickly. It's back at about 160 right now. Number two volume-led gainer on the NSE. SAIL, Steel Authority of India. We were talking about steel with the steel secretary and with the analyst this morning. 4% on SAIL, 138. Big volumes. Doesn't come up at the top of the volume list, but it is this morning. They started Investment Corporation, which basically is an investment company. It had this frenetic move higher. Just one-way move. Went up to about 1,200 rupees. From 1,200, basically fell to about 700, and it's now almost 800 right now. So that is Tata Investment Corp. What else? You've got Reliance Power, which is coming up with some volumes. Bombed out name, 38, 39 rupees. Fino Payment Bank is another one. What's happening here? So closed yesterday at 266. It's up 30 rupees right now. Fino Payment. And look at the volumes, almost 2 million shares on Fino Payment Bank at this stage. I was talking about GE Vernova yesterday. Again, I mean, of course, it's done phenomenally well. Last 3 months it's kind of been flat, but 29.45 on GE Vernova. LG Equipment, we highlighted how SBI Mutual Fund has picked up a stake, 4.5% here. So it's coming up. Tarsons is another one, right? So fell for a while. And then you had a big recovery yesterday. There was a clean out trade. I think it was part of Nimesh's chatter list as well. Tarsons will come up. It's up another 5% this morning. So there is enough and more action in terms of single stocks, individual names out there. That's the one I'm talking about. Look at volumes come up as well. But I think we've got our first corporate on the show, post-market open, that is. Shriram Finance. Surabhi.
Yeah, absolutely. Plenty to talk about, as always. And we have Mr. Revankar joining in, Executive Vice Chairman of Shriram Finance. We need to, of course, discuss a lot of the points in the business in the second half. We need to understand how margins are looking, because Mr. Revankar has been telling us that maybe second half won't be as bad. I mean, margins maybe inching higher. We'll discuss the AUM growth prospects as well, and whether they're looking to increase their guidance. And, of course, whether the company is well capitalized at this point to support growth. Mr. Revankar, good morning, sir. Great to have you in. Now, I have to start with that third question. And I know we've asked you this in the past, but you please bear with me, because the market excitement and speculation refuses to die down, sir. So can you set the record straight on whether Shriram Finance right now at this point in time is in any sort of discussion for raising capital? About 3 weeks back, there was a lot of chatter around a Japanese entity that Mitsubishi UFJ will perhaps put in as much as 20%, or will buy as much as 20%. Can you just set the record straight, sir, on this?
There is no further change in the information that I can give you right now. So I don't think there is anything to talk about it now.
No, but are there any conversations ongoing, sir, with any entity with respect to any sort of an equity tie-up or any sort of an equity deal?
See, there will be many discussions going on. I cannot be talking about it. So there will be always some interested party who are, as you are rightly putting it, India is attracting a lot of capital, both for the debt and the equity. Everyone is seeing India as a large economy growing well. So that is where the interest levels are very high. And that is likely to continue.
Mr. Revankar, just a point on this. Now, what you've said is that discussions are always underway, but you're not giving us anything specific at this point in time. And obviously, foreign entities are showing a lot of interest. Middle Eastern entities, Japanese financial giants have shown already interest. But can you tell us whether Shriram Finance at this point in time wants to raise more capital? Are you looking for an equity partner?
See, we are at 20% plus on CRAR, so we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital. So I can't disclose beyond that.
All right, Mr. Revankar, good morning. Good to see you in. Everyone's talking about, this deal. But just to get some clarity, the last time you said there could be multiple discussions that are taking place, but not a concrete plan. So there are still multiple discussions taking place?
See, as a NBFC or a bank, you always need to look for raising capital, both equity and the debt. So that will continue to be there. So it is not one-off event for the NBFC or bank. So this is raw material for us, so that will continue to be there.
You know, the analyst community believes that Shriram Finance trades at around ballpark 2.1, 2.2 times or thereabouts on the forward basis. One of your competitors, Chola, for example, trades at 4.5 times. Don't you think it'll be a perfect blend? You know, you get a good foreign investor coming in there, and there could be a re-rating of sorts. Has the thought come to your mind, sir?
I think you're acting as an investment banker. So there are a sufficient number of investment bankers who are coming with various ideas.
Okay, all right.
But you're talking. So we go back to where we were 2-3 weeks back when we spoke to you. Shriram Finance is in discussions for potential equity fundraise, but nothing concrete as of now.
So as I was telling you, we have been talking for a long time, not now.
Okay.
Okay.
And do you think a deal you're reaching, I mean, there's progress with regard to these conversations?
Nothing to comment right now.
Okay, all right. Let's leave it at that then. But the street believes, if you go to most of the conferences, the buzz is very, very high with regard to Shriram Finance and a possible deal that's going to be in the works. Let's track business then. How has growth been? If you could help us out, with regard to the CV space. What's the outlook out here for the year? Just revise the growth target. And I think you were talking about NIMs improving as well for the latter part of the year. So let's revise both those two numbers first.
Yeah, definitely, yes. The October was a big month and there was a lot of activity. The most pleasant part of it was the demand coming from the rural market. So the rural market is actually, the demand is much faster than the urban right now. And I believe with the government now have cleared some of the infrastructure project in the last cabinet meeting, there will be a much bigger thrust on the infrastructure part of it. And that will help the growth coming back in the urban area also. So both an urban and rural put together, the demand should be much higher. So we believe the growth can be much higher than the guidance given. We gave the guidance of 15%. We should be growing at around 17-18% if everything falls in line.
Gautam, Mr. Javankar, good morning, sir. Thanks very much. I mean, I think a masterclass in answering, not answering questions, but I think it's also fair, right? You're always talking, NBFC always needs capital, so that is there. We'll wait for the deal when it finally happens. I just want to ask you, what is the liquidity situation, if you will? There is some buzz that the RBI would perhaps. It's a strange kind of situation. The RBI and one thought that there's ample liquidity, but then there is talk that maybe RBI may come back with OMOs, may need to do OMOs, etc. Just your thoughts, sir.
The liquidity is quite comfortable right now, but yes, the NBFC industry do feel that there is a challenge on liquidity to them. So, because especially smaller NBFCs in our meetings, association meetings, they keep raising the issue and they want to have some kind of a refinancing arrangement for them so that the business can be smooth. Because everyone wants to have a growth at a particular rate. So, the continuous supply of the credit is important for the NBFCs to continue to grow their business. So in that way, yes, they need to look at a different liquidity or different way of borrowing other than the bank. That is something which we have been debating. Otherwise, I feel the liquidity is comfortable. We are able to raise resources and the interest rates also are improving in the sense we are able to raise at maybe around 20 basis points lower than the previous quarter. So that is a positive step.
Incremental cost of borrowing is 8.3%, sir?
Yeah, now it's around 8.15. It has come down.
Okay, and you're on record, I think you told us this earlier as well, that you aim to bring this lower through a couple of initiatives. Yeah, and that this may go back to the first question about deal, etc. as well. Who knows? It could be all be tied as well. Now two specific areas. CV loan growth, you were expecting it to be a little ranged, and on MSME, you seem to be indicating that you're going slow on growth there, at least for the next few quarters. Could you talk to us about both?
Yeah, MSME, yes. I have been talking to few of the industry association and also to some of the customers to understand what is the actual impact, because some of the industries which have direct exposure to US, they have slowed down, but some are also looking at new markets, and people are now looking at Asia market and Europe market to diversify their overall export market, and that's a good thing that our people are able to start looking at the newer market and keep growing. Meanwhile, domestic demand is very good. So maybe because of the festive demand, the October, most of the MSME segment, they had a full book order. And maybe the November end, we should know. But November looks like the numbers as of now, that year on year it is flat. And of course, October to November, we can't compare. The year on year is flat, it's not really grown much. So we need to really wait till the quarter end to see the full results.
So MSME growth, November to last November is flat, you're saying, so far?
Yes, overall, their sales and their turnover.
Okay. All right. Just a quick word on MSME, sir. As a percentage of your book, I think it's around 15%. Could you give us some more clarity? How much of the MSME book is exposed to the export sector? And how is the asset quality faring?
It is hardly anything, very small, because we have been focusing on small ticket.
Okay.
We have never been lending to the mid corporate, like 100 crore plus. We have never done any such lending. So our exposure is small, very small. Out of 15%, maybe 10% of 15%, there's 1.5% of my book should be with the export linked the MSME. That's all.
All right. And ROA exit rate for the year should be approximately 3%?
Yes, we always aim at 3%. We are at around 2.8 now. We should be inching towards 3% by the year end.
Okay. All right. So we'll leave it on that note. Thank you very much for joining in. Always a pleasure speaking with you. And thank you very much for giving us more clarity on how business is shaping up and how the second half is, which perhaps is going to be even better than the first one. We'll take a break on that note, come back on the other side, and we'll have the management of Brigade Enterprises joining in. We'll look at the demand trends in the real estate sector.
Welcome back. This is Corporate Radar. Quick check on the markets. Well, we are at the high point of the day. December has started off on a good note. We're up 180 points or thereabouts. The bulls will want to end 2025 with a flourish, and the start of the December series has been quite good. That said, let's turn our attention to the real estate space. We have Pavitra Shankar, the MD at Brigade Group, who joins us. Hi, Pavitra. Good morning. Always a pleasure having you on the show. Thanks a lot for joining in. Well, let's focus on a couple of numbers then. I think for the year, in terms of pre-sales growth, you're targeting around 15 to 20% for FY26. What makes you so confident? Because the first half of the year, I think it's low single digits, 3% or thereabouts. So are you confident you get to that mark of 15, 20%? And also give us a sense about what is the contribution coming in from, of sales coming in from new launches?
Hi. Yeah, so what is happening this year is, I would say, fairly similar to the last few years, where our contribution from new launches is quite heavy in terms of the overall target and therefore achievement as well. This year, in the first half of the year, we have done about maybe 40% of what we would like to do for the annual target. And I would say that's in line with what has happened over the last couple of years. So typically the approvals, launches tend to get pushed a bit, and we tend to see a lot of large launches coming in the second half of the year, not just with us, but with some of the other listed players as well. So we're making sure that all of our approvals are, being tightly monitored, and whether it is in Bangalore or Chennai or Hyderabad, which are all our markets of focus, our teams are geared up to do that. In terms of demand on ground, it is still very good. Our portfolio is skewing more in terms of premium inventory, which is where the market has been showing a lot of demand of late. And our new launches are reflecting that, as well as some contribution from mid-segment as well. So I think overall the launch outlook is good. It's a matter of getting the approvals in time. And once the launches happen, they are generally seeing pretty good response on ground.
So you're sticking to the 15-20% growth, right? Pre-sales growth.
We would like to do that. As I said, again, it's dependent on the launches happening in time and getting RERA in time so that we can actually take the bookings into this financial year, since we are looking at it on an annual fiscal year basis. But on ground per se, if it slips into this quarter or that, nothing is impacting the demand situation. But naturally, on the numbers basis, we need to make sure that it enters into this financial year.
And out of the sales that you've done, how much is coming from new launches as a percentage?
Around 40% has come from new launches based on the launches that we've had in the first half of the year. Some of it was also very high-end inventory. So based on that, we've had about 40% of our numbers come from new launches.
All right. Pavitra, the other point, we get back to your financials and the way you see your business shape up. But what came over the weekend was the new labor law codes, right? And that could have some impact in terms of cost. For you as a company, how do you see it impacted, in terms of employee cost? How much does it go up by? Point number one. And as a percentage of the total development cost, what would it be? I think most industry experts were suggesting low single digits increase. Your take?
So we're yet to go through in full detail in terms of what actually comes through and study that. For us, the labor cost or the labor code changes impact not just on the corporate side, but also on construction labor. So we're still going through that and understanding what the full implication would be. But overall, I think the reaction so far has been a positive one in terms of how things will get simplified as well. So we're looking forward to it.
Pavitra, hi. Good morning. A slightly broader question, and it's great that we have you today, because in the morning I was going through a note that one of the brokers wrote, Nuvama. We're talking about over pan-India position. I think this is a question that's being increasingly asked. Whether the real estate boom cycle is entering a midlife consolidation phase. And the numbers that Nuvama put out, year-to-date CY25, sales value is up 6%. This is pan-India numbers. Launches are down 6%. And again, CY25 sales overall are down 13%. Launch volumes are down 10%. And therefore the question, I'm just placing the numbers for context. In your core market, in Karnataka, in Bengaluru, are you seeing any signs of this mid-cycle slowdown?
First of all, I think I prefer the word consolidation as opposed to slowdown. We've seen a fantastic ramp up, I think more than anyone could have even dreamed or imagined, supported by the best of conditions, including interest rate, demand from customers, all of that, and structural growth in the sector and overall economy. We have seen a huge ramp up also in terms of prices. Again, specifically in Bangalore, since you've asked me, prices in our own portfolio has more than doubled. It's a mix of like to like as well as product shift as well. So I think overall the premium and high-end segment have seen a lot of demand already, and that is where we see things stabilizing. Naturally, once ticket sizes go from 1.5 to 3 crores plus, you do see that demand consolidating. It is still there. But in terms of expecting a premium project where all the ticket size is 3 crore plus to sell out within the first month, those I would say are irrational expectations, and also that's not happening on ground today. So we are seeing that kind of stabilization happen in the premium segment, but mid segment is still extremely healthy. Those launches are doing really well. So I think overall it is a matter of developers also readjusting what the product portfolio is going out today in terms of the design brief and so on to our teams, and understanding the kind of demand on ground. So it's still very good. Pricing has doubled. I mean, we hear that every day. So that is a challenge for us to expect the same kind of absorption with those pricing levels. But overall, I'd say the market is still doing very well. We're very confident of launches, especially in the mid segment and the slightly, mid, what I would call the premium sector. But expecting things to sell out in the first month is difficult to continue.
Maybe we're past that, that stage of the cycle. So what you're saying is interesting, that that maybe on the pricing front things are moving towards consolidation, especially in the super premium segment. So this outlook that you've just given us, 15 to 20% growth in pre-sales, this growth will largely be a function of higher volume. Would that be safe to assume, rather than any major pricing spurts? And if you could just break down the pricing trends between, whether there's consolidation at the premium end, whether in the mid-market segment, whether you still see scope for price increases?
See, I think overall the pricing expectation of what happens at launch through the life cycle of the project is pretty much stabilized. Whether you are looking at mid-segment or premium, it's not in a price discovery phase for a developer, which is what it was in the last couple of years. More so like 2 years ago, when we would launch a project and then not realize that the demand was there and people were willing to pay that much more. So overall, I would say regardless of what product is being launched, everyone has a good understanding, that is to say the customer and the developer, in terms of what pricing one should expect. So I don't see a double-digit kind of increase going forward in terms of pricing. Therefore, for all of us, I would say the numbers would come from overall volume of launches and total inventory that we're able to launch and sell, rather than huge price jumps.
Okay. Quick final question, Pavitra, in terms of just the kind of money that you'll put to work into the second half of this year and going into next year, because you have a lot of launches on the office side planned as well. So just leave us with some ballpark numbers in terms of, the investments, whether it is land acquisition or some of the office side build-outs that you'll be undertaking.
Yeah, so, on an annual basis, we've been spending upwards of 1,500 crores on land acquisition. It's a combination of across all our sectors, so residential, office, hotel as well, but predominantly residential and office. And it's a mix of joint development as well as outright purchases. We expect to see that number continue to increase, because despite the consolidation, we are still very bullish on the market and still intend to be aggressive in terms of acquiring land in our markets of focus. In terms of the office and in terms of our office capex, we have about 1,700 crores of capex overall in terms of what is under construction, in which we have already spent about 700 crores or so, so another 1,200 crores to go in terms of our office portfolio where we are under construction. Some of that will be for sale, but a lot of it will be for leasing.
Pavitra, so good to speak with you. Thank you very much for joining us and running us through the latest as far as Brigade and the environment you're operating in. Thank you. Well, I think the markets moved up, and how, right? 200 points on the Nifty. And that is the story, actually. It's a vertical 90-degree kind of sort of takeoff which has happened. And what's the time now? I think it's 10, right? Past 10, little past 10. 9:40, 9:42 is when the pickup started. We were at about 26,000. Basically, we were at 26,000. And in the last 15 minutes, another 80 points on top of what the market opened up with. So this is a very, very good looking screen. And it also means that we basically bounced exactly from the 20-day moving average. Yesterday, there was a touch of the 20-day moving average. And then the market closed just 15 points off it, above the 20-day. So you've hit that short-term important kind of moving average. And then you've bounced very, very sharply. The new listing at the bottom of the screen also is something I'd like to address. Excel Soft Technologies is listed. And it's listed at 135 rupees. They sold stock in the IPO at 120 rupees per share. And I'm sure we'll have the management come up a little later to talk to us about where they're seeing the outlook going forward. Steel is the story. If you look at the Nifty stocks, JSW Steel, and I highlighted SAIL in the broader space earlier with large volume-led gains. JSW Steel is up 3%. So 1,147 on JSW Steel is what you have. Number two is, I'm just looking at the Nifty stocks. Adani Ports is the number 2 position. You got Trent, which is up about 2.25%, and HDFC Life and Tata Motors Passenger Vehicles is up 2% each. So it's a pretty good-looking screen. Except, actually, on the Nifty, there is just one name, which is at the bottom of the screen, which is Bharti, which is down. Otherwise, it's a all-up kind of a day, at least as far as Nifty stocks go. Even in the broader markets, it's 4:1 advances to declines. So that is also picked up substantially. 2,000 up and about 550 stocks which are lower.
I think the market is undoing all the pain that we saw in the last 3 sessions, to be precise, because getting into an expiry day, sometimes you see some kind of adjustment. So all that is getting unbound, so we're back at around 26,100, and the breadth of the market, that is encouraging. As Prashant as well was talking about, towards the end of the year, there is some P&L protection that you're looking at. So there appears that a churn has taken place, and now hopefully, in fact, the broader markets as well want to participate, which will help portfolios feel good. And a word on the steel stocks, there is hope that safeguard duty will finally be imposed. And the second factor is now the street is a little bit more bullish with regard to getting a rate cut coming in from the Fed. And then hopefully the RBI as well has some headroom. When you see, the dollar index that was at 105 has come down to around 99.5. Softening of the dollar index is good for metal stocks. And that's why I've seen the metal index
Nigel,
as well. That's up.
My indicator for India-US deal,
Gokul Das exports.
So it is not the India-US optimism because Gokul Das is flat. I mean, it's got nothing on it. It's up 0.15, so 925, while the markets sort of picked up quite a bit. So it looks like technical factors bounce off important level. There's a 20-day, etc., which is at play. Vinay Rajani is with us of HDFC Securities. Vinay, good to have you with us here. Good morning. What would you do, and how would you read? Would you trust this price action? And on the back of it, what we're seeing, where would you find trades?
Yeah, good morning and thanks for having me on the show. So definitely there has been a good development, and since morning we have seen a nice recovery. If we go by the couple of observation technically, as you said, rightly said, the 20 days exponential moving average has been a strong support. And the another observation is that today's low is exactly open is equal to today's low. That means the sentiment since morning is positive, and this we usually consider as a very positive sign and bullish development. So today's low is equal to today's open. That is another positive sign. And today's movement is almost engulfing the 2 days entire bearish movement. So that is also a positive sign. Global market is supporting very well, and the setup is quite good. Large caps are definitely performing well. The another development is that in the starting of the December derivative series, we have seen a FI's long to short ratio at 0.18. That means as of yesterday close, the FI is holding more than 85% short positions. That means in that case, we can expect a limited downside, and there is a good chances of short covering in the coming session. So that is also a supporting one. So overall, we feel that the Nifty is about to cross its all-time high, which was placed at 26,277, and go beyond that. We see positional resistance at 26,500, and very strong support is placed around 25,800, 700 zone. So even if we see an intraday correction during the day, that should be utilized to go long. And overall, we feel that Nifty is headed for the new all-time high, and 26,500 should be the target for the Nifty.
Okay, all right. Vinay, that's as far as the Nifty goes. What about individual stocks? What are your trades now?
So we have been bullish on PSU banks, and Bank Nifty as a whole has outperformed in the entire November series, and for last 3 consecutive series, Bank Nifty has been doing quite well, and there has been long build-up also at short. So SBI is one of the stock which is the largest PSU bank and looking quite strong and continuously into momentum. So around 990, 994 one can go long. 980 should be the trading stop loss on the upside. I'm expecting a target of 1020. The second stock I would pick from the two-wheeler space in the auto segment, Hero MotoCorp, which has also broken out on the long-term charts and looks like that after long underperformance in the two-wheeler space, now this stock has started outperformance with a higher momentum. So Hero MotoCorp can be bought around 6080, 5960 should be the trading stop loss on the upside. I'm expecting a target of 6265.
Okay, all right. We'll leave it there, Vinay. Thank you very much for all the trades. We have to take a quick break. On the other side, we'll have the commodity cues with Manisha Gupta. Welcome back. As promised, let's straight away head across to Manisha for the commodity cues of the morning. Manisha, what's the headline you're tracking?
Well, I'm looking at the agriculture commodities. You know, this has been a year when we haven't really bothered about agriculture as an inflation. That is because not just in India, but globally as well, we are looking at higher agriculture produce coming in. So a couple of commodities which actually have seen higher prices, but apart of that, everything else that comes under agriculture has seen a decline in sense of prices. I'll start with soybeans because you've seen prices gain up here, trading at near 16-month highs. And that is because the US weekly sales to China are at the highest since November 2023 there. But what the market markets are looking at right now is that one, China already has high inventories. The crushing margins have been on the lower side, and the US soybean is not competitive when compared to Brazil soybean. So how much will China buy from US is a bit of a question mark, and that is where the rally is getting stalled right now. The other one is cotton. Hasn't had a great year, this one, but at this point in time is trading at a one-week highs, and that also because the US weekly export sales have doubled on a week-on-week basis, and markets now seem to be believing and giving an 80% probability of a US December rate cut by 25 basis points, and that clearly has been supportive for various asset classes, including agriculture, industrial commodities as well. What is not doing well into the markets is rubber, trading at a two-week low. The Chinese demand has been on the weaker side, and the European Union is right now delaying the deforestation regulations and perhaps revising it as well, and that is what has led to decline in prices. Palm is another one, trading at a 6-month lows right now. It's to do with the ringgit as a currency as well. But apart from that, the major producer of palm, which is Malaysia, is looking at the October output at the highest in last 10 years. And when you look at their inventories, they are the highest in 6.5 years as well. So there is no dearth of palm when it comes to Malaysia. Wheat is another one. India is looking at a very good crop, and so is everybody else in the global markets. So that is the reason you have wheat trading at a one-month lows, and the global inventories and global production are at a record highs. The other one is coffee, trading at a one-month lows yet again. US has removed 40% of tariffs from Brazil, but this has been done for green coffee and not for instant coffee, and that is what is bothering Brazil there. Also, if you look at the overall markets then in this year, you will see that barring a couple of agriculture commodities, everything else seems to be heading for the negative 2025. So as I said, soybean has done quite well, 13% of gains onto that one. Sunflower is up by 10% as well, and that is exactly where the gains stop. It's a 5% decline for rapeseed and 10% down for palm oil as well. That is what edible oil sector looks like. Now, this is what we're looking at in sense of grains and cereals. It's a decline across wheat, corn, and a 27% of decline for rice as well. Take a look at the industrial agriculture commodities, which comprises of rubber and cotton, and you're looking at a 12 to 10% of a decline here as well. And then comes coffee and sugar. So while coffee seems to have done quite well, up 29%, sugar in the international markets is down by 23% in this year.
All right, Manisha, thanks very much for that. So that's commodities in focus. We'll take a quick commercial break here. On the other side, it's our special segment is the economy. Lata in conversation with Manish Sabharwal of Team Lease, Somraj Roy of CEAT, Atul Gupta of Trilegal, and Amir Basole of Azim Premji University on the impact of the 4 labour codes on corporates, job creation and the economy. Coming up.
Welcome to a very special Indianomics. The 4 new labour codes notified by the government last week are a huge exercise in simplification. They reduce 1,228 sections to just 480, 1436 rules to just 351, 31 returns, and that's very important, 31 returns that companies have to file to just 1, and 4 licenses to just 1. It has, of course, other employer-friendly rules. For instance, it decriminalizes 65 sections, and it has employee-friendly rules like the eligibility of gratuity after just 1 year of service. There's much more, which is probably well known. But to discuss the implications, I have with me an elite panel, but we're going to discuss 2 very different and specific issues. One, can it help more job creation, which is an economy question, and 2, a very legal question, how does it impact listed companies because of the new gratuity rules, which has to be calculated on 50% of the C2C and not just basic? Joining me are Manish Sabarwal, the founder of TeamLease, Amit Basole, professor at Azim Premji Institute, Somraj Roy, the CHRO, Chief Human Relations Officer at CIAT, and Atul Gupta, partner, Labour and Employment Practice at Trilegal. Gentlemen, good morning, and thank you very much indeed for your time. Deeply grateful to Manish, who has had to, who's just landed from a flight, and to Atul Gupta, who has put off a flight. Thank you, gentlemen. Manish, first to you. Give us the macro implications. Do you think small-scale enterprises are the ones that are benefited most?
I mean, the 5 victims of India's labor laws have been MSMEs, they have been backward states, they have been women or labor market outsiders, and they've been farmers, right? The most embarrassing number about India 35 years after reforms began in 1991 is that 45% of our labor force is still on farms. The only way to help farmers is to have less farmers. You can't make farming viable with almost half your labor force. But the high-wage non-farm job creation in India has been limited, muted, and disappointing. And I think infrastructure, skills, and finance have shifted from being a dagger in the heart to a thorn in the flesh, right? They need to get better, but they have improved substantially in the last 35 years. But I think regulatory cholesterol, and a big emblem of that was labor laws, there's a lot other things, is possibly the only explanation why 35 years after reform, in the same period, China has moved 300 million people from farm to non-farm employment. I know I don't want to live in China, but I do admire them moving, 400 million people from farm to non-farm employment. So I think labor laws have held back India in various ways, but they have held back employers. There is no other explanation for 63 million enterprises translating only to 30,000 companies with a paid-up capital of more than 10 crores.
Oh, yes, that's extremely well put in terms of numbers. Coming back to you, Manish, we'll handle the macro question and do the micro question as well of gratuity. Amit, first thoughts from you. Are you convinced, as an economist who concentrates on employment a great deal, that this is clearly liberalizing or liberating India's MSMEs?
So thanks, Lata. It's definitely a very big step, right? It's one of the biggest things we've seen in a while, especially in this field. Now, when we talk about labor laws, you're always balancing 2 things: the rights or protections for workers and making employers competitive. And economics, going back to Adam Smith, we know that employers are in a more dominant position. That's the way the economy works. So the state has to step in to protect worker rights. I think everybody agrees on that. The question for a country like India always is, when you have so much surplus labor and so many workers competing for the same few jobs, how do you enable more job creation? And that job creation will then make the laws more easy to implement. I think this is the really key point here, and the vision behind the laws is that implementing labor laws when there's a lot of surplus labor in the economy is very difficult. It's very easy for employers to work around those laws because there are workers willing to take up jobs. So tightening the labor market is really critical. Job creation is really critical to enable laws to function. And this, I think, is a vision here. So when we talk about things like fixed term employment, the new things they've introduced, hopefully we can talk more about that a little bit later, or allowing women to work in night shifts, or raising the ceiling from 100 to 300. nationally for the industrial disputes and so on. These are all ways to hopefully enable employers to become more competitive, expand, and create jobs. I say hopefully because many other factors matter. Okay? This is a supply side reform.
Yeah.
Demand matters. Whether the investments will come or not, that depends on many other factors, infrastructure, logistics.
Absolutely.
Labor is not the only issue.
Yeah, no, I take your point. Technology, staring us in the face could be a, job destroyer. In fact, Amit, Manish, I spoke to, it is easy to get big corporates to speak. I had to, struggle hard to get a lot of SMEs, and their single point was life is much easier. ये जो number 2 का काम करता है cash का, वो लोग तो करते ही रहेंगे, लेकिन हमारे लिए the ability to compete with these informal guys is much better because, as Manish says, the regulatory cholesterol is much less. We have to spend much less time. The small industries are genuinely happy. I can tell you that. Will you create more jobs? I asked them. They said, "Arey, that will depend on our orders." No. All we are saying is life is easier. But they did not commit that they will be able to create jobs immediately. Now, with that, let me come to the formal sector big question, and then I come back to both of you for the economy questions. Somraj Roy, the big question that almost all the big corporates threw at me was, our gratuity bill will go up. Is that your worry as well?
Thanks, Lata, to have me on board. Look, we are still awaiting certain clarifications on various inclusions and exclusions of the wages. Whatever it seems from whatever I have read, the base for calculation of gratuity is to be upwardly revised. And that would mean there would be certain employee costs going up when gratuity base increases.
Okay. Now, let me put that to Atul Gupta as well. Atul, what is the legal position? There are many companies which say that 20 lakh is the maximum gratuity. I'm not going to pay more than that, and I'm not affected by the new law, which says that 15 days of last pay, basic pay, but not now going to be calculated as 50% of C2C, not just basic. So they are saying it doesn't bother us because our cap of 20 lakh helps. But there are yet other companies, and one of them has written in detail to me, saying that it is important to note that the new labor codes include a specific non-reduction clause. Any existing benefit cannot be reduced. And they also go on to say that companies like ours operate through an approved gratuity fund whose trust deed and rules clearly specify how gratuity is to be calculated and disbursed. Once established, these rules cannot be changed. So they are very clear that gratuity bill goes up as they understand the law now. Your point. You're on mute. Yeah, Atul, go ahead. No, we can't hear you, Atul. Okay, we'll come back to you, Atul, as and when we can get your audio, because this can increase costs and therefore lower earnings in at least the first year. Now, Manish, since you also run a company, what's your fear? Is this fear of corporate India legitimate?
I mean, in a cost to company world, all benefits come out of salary. They're not over and above salary, right? Okay. This is a myth which, Haath wali salary versus chitti wali salary is a myth perpetuated by people in government where benefits are not counted as part of employee cost. So I think that, yes, there may be some transition cost, but over time, we will just include the higher gratuity or whatever benefits the government may prescribe as deductions. I think, we are already the world's highest gap between Haath wali and chitti wali salary. It can go up to 42% for low-wage employees. I don't think people can live on 68% of their salary. So I think that this notion that the government can sort of treat obesity by mandating small sizes. We need higher wages through higher productivity employers. Issuing regulatory creating regulatory cholesterol that somehow people believe raises wages. It doesn't. We raise wages by raising the productivity of our firms, our sectors, our cities, and our individuals.
No, your point is absolutely correct for the bottom of the pyramid, where, it becomes formal. The problem that big companies have, especially old companies which are in existence for 40, 50 years, they have quite a few employees whose gratuity goes well above 20 lakh. And now it will be double almost because the basic pay becomes 50% of C2C. So Atul, can you rewrite the policy midway?
Yeah, thanks firstly, Lata, for having me over. I hope you can hear me now.
Yes.
Yeah, so there's a lot to unpack here, right? Organizations have to contend with not just the new codes, but also a new definition of wages. Now, there is a common misconception in the market that basic pay has to be at least 50% of the gross. That's actually not an accurate reading. What has happened is that the definition of wages has changed. And under the old law, gratuity was paid only on two components, which is the basic pay and dearness allowance. Under the new law, the definition has expanded, and other guaranteed allowances could also be counted towards the calculation of gratuity. It could be even more than 50%, number one, right? Now, to your question of whether or not I have the ability to limit gratuity, yes, the old provision from the law, which has been repealed, has found its way into the new codes as well. There is an ability to now cap gratuity payments as before. The current limit of 20 lakhs still continue to apply, subject to any future notifications from the government.
Okay.
Right? The other issue that you raised
the point is even if that 20 lakh cap is there, many companies are not respecting that cap. They are paying ex gratia, which is taxed. Now, that ex gratia is suddenly doubled for a section of employees. So can they change?
Yes. So I don't think there is anything in the law which expects organization to continue to pay uncapped gratuity infinitely. Organizations will have to do an impact assessment to see how much their gratuity bill is increasing by and whether or not that's something that they can continue to budget for. If not, I do anticipate and I don't see a legal bar in organizations capping their gratuity payments and grandfathering the accrued benefits for people who've already accrued a larger sum, but going forward limiting gratuity amounts to the legal limit.
Okay.
Right, which is currently 20.
Got it. Which means a one-time hit as and when the rules are notified is possible. I want to check that with Somraj. Have to take a break. Back in a minute with more questions.
Bullish cues result in a strong start for the Indian markets. The Nifty trades around the 26,100 mark. The banking index hitting fresh all-time highs. PSU banks and metals, they're leading the way.
A big block deal in Bharti Airtel sees 0.6% equity change worth 7,400 crore rupees. Change of hands at 2,108 rupees per share. Bharti Group is the likely seller of the stake.
Zen Technologies wins close to around 108 crore rupee order for gun simulation systems. The stock surges about 2%, but has come off the highs.
And Ask Automotives as well trades higher as promoter sells stakes to SBI Mutual Fund to meet the minimum public shareholding. SBI Mutual Fund also picks up stake in LG Equipments in a block deal. The stock is trading higher by 4%.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me today, surprise package. We have Vinny who's joining in on the show. Hey Vinny, good to see you, Vin. And it's been that sort of luck, right? Every time Vinny joins on Chartbusters, the markets do well.
I'm glad. I'm glad. I'm glad it's doing well. 26,000 again, because last few days were not that great, right? 3-4 trading sessions where we ended in the red. So today, at least, we're seeing that green and a strong shade of green coming.
Right.
0.8% of gain. So no complaining on that front. Bank Nifty doing well. IT doing well. So that support is also coming in there, Nigel.
All right. And, we have a couple of managements, Vinny. So let's get straight to the action.
Absolutely. Let's get straight to the action then and bring on the first management for today. We have Amritanshu Khaitan, who's a director of Kilburn Engineering, joining us to discuss three important points that we want to talk about. One, they managed to see very good growth in the first half of the year. Will it continue, this 50% growth, continue for the whole year for FY26? Will they maintain their guidance? What is the revenue contribution that comes in from the acquisitions that they made in the last couple of years? And in terms of the capex as well as the export growth story. This is all that we want to understand, and we have Mr. Khaitan joining in with us this morning. Good morning, Mr. Khaitan. Thank you so much for joining us on the show. And, I want to start by talking about this growth. 50% growth first half of the year. No one's complaining on that front. But second half of the year, will this strong growth continue? And my second part of the question is that even if this growth continues, or even if a bit of a lower growth, by FY28, would it be a fair estimate that you would reach 1,000 crores and above in terms of revenue?
Good morning. So actually, the guidance which we have already given is that this full year we will grow by 50%. That is backed by a strong opening order book of close to 450 crores. And currently, half year ended, we have a order book of 600 crores which needs to be executed. So with this kind of order book visibility available, plus a 4,000 crore order pipeline, inquiry pipeline, we believe a 50% growth for the current year is comfortably achievable. This also takes into account our recent acquisition of Monga Strayfield, a Pune-based drying company, which will add close to 90 to 100 crores top line, which was not there in the year before.
Okay.
So then does that mean that in FY27 and FY28, the newer, obviously, Monga acquisition as well as the ME Energy acquisition that were made last year, given these acquisitions, seems like they're doing much better. Does that mean FY28, we would see 1,000 crores? Even if I'm counting a 30% growth, you should be able to reach there.
So we believe this year we will grow by 50%. That should get us to a revenue of between 650 to 700 crores. In the coming 2 years, post that, we have guided for a 25% growth. Again, the confidence is there due to the order pipeline, the inquiry pipeline, which is there in the company. ME Energy is a company which we acquired a year back. It has already been successfully integrated. We have bagged 2 very large orders in the ferrous alloy segment, close to 100 crores, for a company whose revenue is 100 crores. And that has opened up a large opportunity. So we believe the growth in the coming 2 years will be strongly aided by the subsidiaries as well.
Hi, Amritanshu. A while since we spoke, and your company, in fact, seems to be on a decent footing because we talk about mid-cap pain, and your stock is at a 52-week high. So you seem to be, have guided the street, and the street seems to be optimistic on the prospects. So, going mathematically, 650 crores this year, 25% in the next 2 years. FY28 is that 1,000 crores that Vinny is asking you about, right? So revenue should be 1,000 crores by FY28 mathematically.
So we are aiming to reach 1,000 crores. Whether we reach it in FY27 or 28 will depend if there's any further inorganic opportunities which we are able to cater to.
Okay, all right. So inorganic growth. So you're on the prowl yet again. If you could help us out with, there are some warrants that you issued a few years ago, and that conversion is due. Balance sheet is in fairly okay shape as well. So given that you'll be flush with cash, how will you use this, towards inorganic growth and towards capex?
So we are looking at capex of between 25 to 35 crores, which is not very large. That will basically happen through internal accruals, or we use part of the warrant conversion. This will actually give an asset turn of close to 4 to 5 times, as it's a brownfield capex, where we are actually expanding our current facility both at Kilburn Engineering and at ME Energy. So this capex should generate 150 to 200 crore capacity for the company. Regarding inorganic opportunities, as we have done the fundraise last year, and we have inflow of about 150 crores, which will come in by May actually, our balance sheet will be fairly strong to look at further opportunities. At the moment, we have not got anything on our table, but we will keep exploring to see if we can continue our roll-up strategy, which we've done over the last 2 acquisitions.
Tanshu, you seem to be having a vision for the company, but normally the promoter entity will like to have the largest chunk, right, in the company. Now, because of this warrant conversion, there has been some dilution at the promoter end. If we look at it, March 2023, promoter held close to 57% in the company. Now, that's diluted to around 46%, and that could get diluted further. At what level are you satisfied with regard to promoter holding in the company? In September, I see you have done a couple of lack of creeping, but yet at 46%, is there more downside? Where does it stabilize at, promoter holding in the company?
So promoter holding is something which we would be comfortable at current levels. As and when we are able to do any creeping acquisition, we would look at doing that. But we have our own warrants which will also get converted in this current dilution which is happening. So we are fairly comfortable at current levels. And then depending on the growth the company has and how we progress over the next 2 years, we will definitely take a call. Regarding the 55% or 45%, we look at the total pie, and I think Kilburn has done well for us from that point of view, if you see the way the earnings of the company have gone up.
Okay, just a quick one. In terms of trade receivables, they have seen a very sharp increase versus FY24 and FY25, and operating cash flow, that is negative when I'm looking at it first half of the year FY26 and first half of the year FY25. What is a normal receivable cycle, if you could help us with that? And how do you plan to improve your cash flow conversion? Also, your export opportunities. You've spoken about, contribution of exports coming in at 30 to 40%. By when would we see that also?
So if you see our style of business, the business we operate in, it's a little bit of a long lead cycle. Typically, the orders get executed over 12 months, between 9 months to 15 months. So it is not correct to actually look at 30th September or 31st March as the date to look at the cash flow cycle. We are very comfortable at a 100-day kind of a working capital cycle. If you look at this current quarter, when you saw negative cash flow, it is purely because we had a very large order from Morocco, which got dispatched, but we have not received the money against the dispatch. So that money will come in the third quarter and in the fourth quarter. So from a cash flow angle, the way I personally look at it is I look at my borrowing. If you see, our interest cost has remained flat while our turnover has gone up 3x. So that tells you that there's enough internal accruals happening. It's a question of, on which date the money comes in. So we are fairly comfortable at the current levels. Around 100 days is the working capital cycle. which is very normal to the industry we operate in.
Any big order you're, like how the Moroccan order, which got the street excited, are you bidding for any big international order?
So out of a 4,000 crore order pipeline, I would assume about 10 to 12 inquiries are of similar or larger size.
Okay, Mr. Khaitan, thank you so much for joining us this morning on the show and speaking with us about the company's outlook and waiting to see when the 1,000 crore actually comes in for the revenue, FY27, FY28. We'll speak more with you more often as well. As of now, stock holding on to gain of 1.2%. On that note, we're going to slip into a very short break. Don't go anywhere. After the break, we have the management of HEG joining us to discuss their business outlook. Stay tuned in.
Welcome back. As promised, we have Mr. Riju Jhunjhunwala, who's the Vice Chairman at HEG, who joins us on the show. Hi, Riju. Good to see you. And just to tell our viewers, three big talking points. The promoter bought some stake. Will they buy more? The outlook on the core business, which is the graphite electrode business. And the outlook on the demerger and what kind of value unlocking can take place at 10,000 crore market capitalization. Riju, let's get to the first couple of points then. Promoter, you have gone ahead and bought close to 0.3% from the open market. What is the intention? Do you all want to buy more stake? Do you all believe the company is undervalued? Point number one. And tie it in with the core business. You've been doing an EBITDA of roughly around 150 crores on a quarterly run rate. For this year, what will the graphite electrode business EBITDA look like, 26 and 27?
So thanks, Nigel. I think on your first question, of course, the promoters have bought the stake from the market because we see a very good long-term and a short-term value in the company, both from the HEG graphite point of view and the demerger that you spoke about. On the graphite electrode space, I think we've spoken before also that markets today look a bit weakish, but this is at the lowest ebb, and with the EAF furnaces, etc., coming up, this is only a matter of time before the electrode market also becomes much better. And even in the worst of the times, because of us being the lowest cost manufacturer and the single largest one location facility, we've been managed to clock healthy EBITDAs. And this year also our operating EBITDA should be in the tune of between 450 and 500 crores. And then on top of that, you'll have the, whatever other income, etc. And going forward next year, definitely this will be maintained. And it's only a question of time before, we see kind of a demand supply mismatch coming up, of which the company will stand to gain.
So 450, 500 crores, and next year it should be around 600, 650 crores?
It should be. It's in all probabilities because we've expanded to now 100,000 tons. And last year we've operated at around 80% capacity utilization. Okay. So as capacity utilization and prices both go up in the short run, I think this on a steady state, the EBITDA can be much larger than the number we spoke about.
All right, let's focus on the other part of the business, the green tech business. You have been talking about anodes, there's a power business in there, there's an EPC business in there as well. So I want two numbers from you. What is the peak net debt level number in this particular asset? Because as of now, there's no much revenues out there. So help us understand peak debt number and what will the EBITDA number look like? Say once all this capex that you're doing comes on board.
So just to give you one flavor, this demerger is now in this process of getting approval from SEBI, which is due in another 15-20 days, after which it will go to the NCLT for the official demerger process. After that, the demerger, the HEG Graphite will be one separate listed company, and HEG Greentech, as we propose the name, will be the second company. In HEG Greentech, we already have investors who have come in at a value of around 4,000 crores today. And this was before we had a total control on our existing this hydro business. So you'll be pleased to know that we've completed our acquisition of 49% buyback from the Norwegian company. So the 300 megawatt of hydro that the company runs, we bought it at less than 4 times EV to EBITDA, which is much less than the going market rate. And you can see very healthy returns coming out of that. The EBITDA from that project itself will be in the tune of between 350 to 400 crores, depending on the average selling price of electricity. The second bigger project that we are going in for that, which will be the first of its kind in India, is the anode project, which is a 20,000 ton anode manufacturing plant in Madhya Pradesh. The overall capex over there is to the tune of 2,200 crores, and sampling, etc., is already on with all the major cell players in India and abroad, including bigger cell companies and the cell companies that are coming up in India.
Okay.
So that project will be operational by March of 2027. Then you have this the existing cash flow of the hydro business.
Right.
And our battery company, RE Plus, which is now seeing a lot of traction.
Right. So, Riju, just a little short on time. So I think we have got 350 crores from the power business, 350, 400 crores. The anode business will give how much once it's operational, EBITDA?
At a full-scale EBITDA, at 20,000 tons, it will be more than around 450 to 500.
450 to 500. So this entire piece, the green tech piece, say by FY28, what kind of EBITDA number can it do? And the net debt is important.
I mean, it could be a 4-digit number, definitely.
1,000 crores of EBITDA from the green tech business. Okay.
But more than that, because we're also looking at a very steady IPP business that we are building within the green tech platform. So a lot of things happening because of which, the promoters took this call of actually increasing the stake. But I think a lot of value unlocking should happen once this thing
Mr. Jhunjhunwala, what would be the net debt level for HEG Greentech then? If you could give
the overall equity in HEG Greentech would be around 2,200 crores. And at peak debt levels, which includes the IPP business, etc., where the leverage is slightly higher, the absolute debt would be around 4,000 to 4,500 crores.
Okay. And just a word, obviously you said approvals are coming in for the demerger and all. Previously your guideline to complete that was calendar year 2025. Would that be by December or should we expect March 2026?
So we are expecting by around middle of December the SEBI approval to come, after which we will file with the NCLT, and that should take a process of around 3 to 4 months.
Okay.
So we are looking at between middle and less of middle of next calendar year for this company to be listed, and with a very healthy, we are actually looking at both these companies in a different way of adding value to each other, which is not the case today, we see reflected in the value of the company.
So Riju, by mid 2026, we'll have two listed entities. One will be HEG, which is the core business, which will have ballpark 600 crores of EBITDA. And in the next 2 years, the green tech business, you're talking about more than 1,000 crores of EBITDA potential.
400 of which is already operational, 400 which will already be there on year 1. And in year 2, we'll start scaling up and we'll achieve these numbers in year 2 or 3.
So combined entity, roughly around 1,700 crores of EBITDA, 1,800 crores of EBITDA, with an EV value of close to around 14,000 to 14,500 crores. Fair numbers?
Correct. Where HEG Graphite will be a debt-free company.
Yeah.
And Green Tech will have the loans for the new IPP business and the new projects that we are putting up.
Okay, all right. Thanks a lot, Riju, for joining in. It seems the street likes what you had to say. The stock, I think, has perked up a little bit. We'll track you to all these numbers. That 1,000 crores of EBITDA is, quite interesting because that will be bigger than what the current core business is doing. So we'll track you on that particular number. Thanks a lot for joining in. Well, time to slip into a short break. As we do that, a quick programming note. If you're looking for big bets and market themes for 2026, CNBC-TV18 Access gives you direct access to White Oak Capital's AMC, Ashish Somaya and Prashant Khemka, as they share their winning market themes and actionable investment strategies. Ask your questions on the 28th of November at 1:30 p.m. Become a member today on CNBC-TV18 app or log on to cnbctv18.com. Access/plans.
Welcome back to Chartbusters on CNBC TV18. As of now, when we started the show, the Nifty was below 26,100 and now it's about 26,100. Day's highest point, 0.9% of gain, 200 points uptick for the Nifty. Broader end of the market is doing much better as well, holding on to gains of more than 1%. And Nifty Bank too supporting those gains. But with that, we're absolutely out of time on this edition of Chartbusters. Thank you so much for tuning in. Up next, Trading Hour.
Hello and welcome to Trading Hour. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Patakia. Hey guys, good morning. Well, a fresh new series. December already. We are talking about December already, guys. But it's a good start, right? We've seen Nifty staying on those levels at which it started. 231 points higher on the Nifty as we speak. Mid-caps are outperforming 1% higher on that one. The advanced decline ratio comfortably in the favor of advances. 4:1, that's the ratio that we are looking at on the NSE right now. Bank Nifty is meaningfully contributing. The story today has to be the gains that we are seeing in the metal space. We'll discuss that in greater detail. PSU banking index continues to do really well, and we have all the sectoral indices in the green. So that's a great start to a new series.
And the support is coming in from the global markets. Pull up Asia this morning. Nikkei, that's the Japanese market, is up 1.8%. The Taiwanese market has surged 1.5%. Korean markets are boasting of a gain of close to about 2%. So there is very strong green across the Asian market, and that's being rubbed off in the Indian market. You know, you spoke about some of the PSU banks. Look at UCO Bank, IOB, Bank of India, Union Bank, South Indian Bank. Very, very big gains coming through in many of these individual stocks. But in fact, Hormus has now moved over to the big wall, put the spotlight on individual movers and shakers.
It's been a while since we said that the screen is looking like a wow right now, and that's what we are starting off the series with. We'll start off with double-digit gainers in today's show. Best Agro Life, the top gainer on the small cap index today, up 12.5%. At one point was up around 17-18%, so it's cooled off slightly from the highs. The second day of gains, the biggest single-day gain since April of last year. The volumes are also the highest since February of this year, but we've had close to 5 lakh shares that have already been traded. The 20-day average is just 10,000 shares. For Best Agro Life, currently the stock has moved above its 50 DMA of 337. The next level on the upside is the 200-day moving average, which comes up to around 352. Now, the stock has been an underperformer this year, is down 44% so far, was down 25% last year as well. Igarashi Motors has made its way up into the list of gainers. It's 17% higher now on the stock. Best Agro Life cooled off. This one has moved to the highest point of the day, the biggest single-day gain since September of 23. It snapped a 6-day losing streak today. It's almost 3 lakh shares that have been traded. The 20-day average is only 8,500 shares. And despite this move, the stock remains below key moving averages. Actually, now with this move, the stock has moved above its 50-day moving average, which is at 499. Now, the stock has been an underperformer so far in 2025. It's down 32%. It had gained around 40% last year. And last one on the list today is Fino Payments Bank. This one has also snapped a 6-day losing streak today, with the biggest single-day gain since April of this year. The volumes are the highest in 6 months as well. We had 40 lakh shares that have been traded on Fino Payments Bank already, and the 20-day average is only 60,000 shares. And the 200 DMA support has held out, and it has rebounded from those levels. Now, the stock is recovering some of its losses of this year, still down 7% on a year-to-date basis, was up around about 20% in the year gone by.
Okay, all right. Take that point. Some interesting names there. Thank you so much for joining us with those details, Hormus. The other stock on our radar is Keynes Tech. It is buzzing in trade after brokerages have come out with a positive note. Sudarshan is here with more details on this one. Sudarshan, what are the brokerages making of the stock?
So brokerages have returned on Keynes Technologies after company had held analyst meet, and most of the brokerages remained positive on the stock. And the reason, if you remember, after Q2 earnings were largely in line, and the guidance for FY26 was kept almost unchanged. Now, today JP Morgan has written on that, maintains overweight call, target is 7,550 per share. It says FY26 guidance remains largely unchanged. Revenue guidance is in the range of 4,400 to 4,500 crore. Core EMS revenue guidance is in the range of 4,100 to 4,200 crore, and company is saying that it can achieve $1 billion revenue target much earlier than the earlier guidance that company had given is of FY28. And it also said that fundraise is not required, and OSAT and PCB, these are two main or important main segments, and that will become self-sufficient after first year of the operations. Nomura 2 believes that Nomura 2 maintains the positive stance on the stock and has a buy call with a target of 8,478 per share. It says company has a focus on broad-based growth, and that will aid diversification. OSAT and PSCB remains on track, and receivables are expected to normalize by FY26, and company is targeting positive operating cash flow in FY26. And in H1, it has executed smart meter orders of more than rupees 450 crore, and it's targeting smart meter order inflows or execution in the range of 800 to 900 crore in FY26. So overall, it's looking positive for Keynes Technology, and you can see the stock is up more than 1%.
Indeed, and Nomura also says the stock is trading at 38 times FY28 PE, so 2 year forward. 38 times. But Sudarshan, Tata Motors passenger vehicles has relaunched Tata Sierra at an introductory price of about 11.5 lakh. I mean, what's been the feedback? What are brokerages saying?
It's a relaunch, or say it's a reborn for Tata Motors passenger vehicles. And after several days of down move that stock has been seeing, today it's up around 2%. If you take a look at the stock returns in 2025, it's been down 51%, biggest underperformer amongst all the auto names. Now, yesterday, company has launched Sierra. So basically, Nomura believes that it has the most features that Tata Motors has provided in all the SUVs. So this has the most features, and the introductory price is rupees 11.49 lakhs, and bookings for the same will start on December 16, and deliveries are expected from January of 2026. It will come in 3 powertrain options. Nomura maintains neutral call on the stock though, and target is 395 per share. It says Sierra car carries forward the Sierra design into a modern avatar. Pricing too is very aggressive given the base variants are feature loaded as well, and it has potential for the sales that it can increase the sales of total SUVs for Tata Motors passenger vehicles. And for this only, it has the potential of sales of 10,000 units per month. And it seems well positioned to benefit from consumer shift that over the last few years, you have been seeing that consumer has been shifting to the premium segment. And it could create a meaningful upside to PV growth expectation that Nomura has over FY26 to 28. Even some of the other brokerages too have written on this, and they are largely positive, especially on the base of this launch.
You know, I asked Sudarshan after the launch when he said, "Kaisa lag raha hai?" and he said, "Acha lag raha hai, yaar." And so maybe one more addition to his fleet. But Sudarshan, thank you for the Tata Motors passenger vehicles, almost 1.75% higher today. Now, speaking to CNBC TV18, Shailesh Chandra, the CEO and managing director of the company, says that they are eyeing a double-digit growth this fiscal and are expecting SUV market share to touch between 22 to 25%. Listen in.
It has been not just another launch of a car. It's an emotional moment for us because, as you know, that Sierra was the original Sierra was launched in sometime around 1991, 35 years back, and had got discontinued somewhere around 2001, 2002. So it's after literally 25 years that we were reviving this. You know, you name the cars and you will see that there was a missing piece in the portfolio, because the way we have designed our portfolio, that say once a customer buys the car for the first time, maybe a Tiago, for the whole life cycle, you know, whole life, the customer has an option of upgrading in the same showroom, which is the Tata showroom. So you have a full continuity that we have tried to give right from Tiago to Harrier Safari. But this was the missing link, which was the mid-size SUV, which Sierra very well fits in and gives the portfolio continuity that we wanted. Today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that. November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. FY26, you know, I can only say that we are definitely eyeing a double-digit growth. But in the first half, our growth rates were not that great. But in Q2, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth.
We take a short break here on Trading Hour. Put the spotlight on the crypto markets on the other side with Manisha Gupta. Welcome back. Shifting focus to the crypto space now. Manisha is here with more on this. Manisha.
Well, thank you for that, Hormuz. And do you know how many cryptocurrencies are there in the global markets? Well, it's not a small number. It's a big one, actually. It's 37 million cryptocurrencies, unique ones at that too, in the global markets there. And that number clearly has been increasing over the years. In 2017, that number stood at 3,000, and we saw a jump up to by September 2025 at 37 million. And come back to 2014, it was just 500 cryptocurrencies that you've had. So over the years, we've seen these cryptocurrency numbers continue to increase and increase quite strongly there. When you look at the overall numbers that are actually watched for or traded on, well, that number is quite strong. CoinGecko is the one which puts out the overall market cap for all cryptos, and they basically take in account 19,385 cryptocurrencies. CoinMarketCap takes a look at around just about 9,537 cryptocurrencies. So from all of those millions of cryptocurrencies, these are the few that actually matter, have been around, have strong utility cases, and is the reason they are always on radar there. How many of these cryptocurrencies actually are offered for trade? Well, if you look at the data that has been thrown out by Binance and Coinbase, Binance has listed just about 415 cryptocurrencies, and Coinbase lets you trade in 315 of them. Various types of cryptocurrencies on your screens right now. We have Bitcoin, altcoins, stable coins clearly has been quite a success story in this year. And then you also have meme coins, utility coins, and governance coins as well. You would ask on why do we need so many cryptocurrencies? Well, a few reasons there. One is they have diverse uses. It can be just about a digital currency. And then the cryptocurrencies also are different platforms, different projects. And some of them are used as a currency for decentralized finance, as an NFT as well. Different cryptos for gaming, supply chain management, etc. It also is about investors seeking high returns by the creation of these projects. And every new blockchain project is going to have its native token, which is the cryptocurrency therein. Also, it's easier to just create a new smart contract instead of taking anybody else's tokens, is the reason you see every project have its own native token there. Now, not all of them stay on as well, because many of these cryptocurrencies continue to get out of the system as well. One, they could be inactive. The project may not have worked. No meaningful impact from that smart contract to the project. And then poor execution sometimes also leads to closure of this. And some of them are just about scams. Some of these are unsuccessful initial coin offerings as well. Interestingly, between 2013 and 2025, an expected 12,300 cryptocurrencies actually became defunct. Markets do believe that it only is around between 10,000 to 15,000 cryptocurrencies that actually work and add to utility cases. The rest clearly are more about just speculation.
Okay, all right. Interesting update there. Thank you so much, Manisha, for joining us as always with all the update from the crypto space. With that, we'll slip into a break. When we return, we'll discuss market technicals with Chandan Tapadia of Motilal Oswal. Welcome back. You're still tuned into Trading Hour. Well, it's a new day of December series. So first day, that is. Let's get in Sudarshan with the latest trends from the F&O space this morning. Hey, Sudarshan.
So market is higher. Nifty has reclaimed 26,100, but the major move is being seen in the broader markets. Midcap index is sharply up. Nifty Bank has hit record high. So you have to focus on three things. Look at the PCA, put call ratio. It's at 1.29 versus previous day's level of 0.96. Advanced decline ratio 4:1. Volatility index is down almost 5%. So all these metrics are indicating you the positive move that we are seeing. And that is the reason we are seeing a huge put writing on majority of the options. 26,000, 26,100, 25,900. All these three put options have seen a sharp drop in the premium, and the drop is in the range of almost 60 to 70%. But in the contrary, on the call side, two options that are very healthy, 26,200 and 26,500. So it tells you that immediate resistance for Nifty is around 26,250. But if it crosses that, next resistance comes around 26,500. So support for Nifty, immediate support will be around 26,000. If we fail to hold that, next support comes around 25,850. That is also 20-day moving average. And resistance, as I told you, 26,250 and 26,500. For Nifty Bank, it has hit record high. So just I have taken the support that is around now. Immediate support would be around 59,000. Some of the stocks that are seeing fresh longs. Reliance Industries, it's at 52-week high and just are approaching the level of 1,600. And MCX, it has crossed 10,000 rupees per share for the first time, and this also has been seeing fresh longs. Saman Capital has come out of the F&O ban and is seeing fresh longs today as well. And apart from the NCC, after big order win from Assam government, is also seeing fresh long. One stock that is seeing fresh short is Bharti Airtel after a block deal of almost 0.6% equity.
Thank you very much for that. And as we speak, IT is also pulling its weight up. Infosys, TCS, Wipro, HCL Tech, all up between 1 to 2% and spiking up in the last couple of minutes. But let's get to Chandan Taparia, Motilal Oswal Financial Services now for a quick technical check on the markets, how he's reading it, and what are the trades he would recommend. Chandan, hi.
Hi, Dima. Thanks for having me. So talking about market, after the consolidation of last couple of days, index is all set to head towards its new lifetime high. The good part is that it could absorb the supply pressure near 26,000 and the base of the market is shifting higher. And now I believe that till it holds about 26,000 with the major support of 25,850 index can head towards 26,277 to 26,500 level. When we talk about the sector, I believe selective financials, metals, banking, and capital market theme could do well, while we are also expecting some short covering trigger in IT as well. So if you look at the rollover data, rollovers were slightly lower, but there is chances for the short covering trigger because FI's long short ratio is also 15%. So with all these logic, we are expecting index to head towards 26,277 or even a new lifetime high towards 26,500. When we talk about Bank Nifty index, that has been continuously outperforming the broader market, supports are holding well, and it is heading towards its new lifetime high territory. So till it holds above 59,000, Bank Nifty has potential to rally towards 60,000 to 60,500 marks.
Okay, all right. Chandan, that is about individual indices. What about stocks? Any individual stocks that you have on your radar?
Yeah, so as mentioned, we have positive stance on capital market theme, and MCX is one of the strongest counter. We have seen build-up of long position, and it has been making higher top, higher bottom formation. In fact, data setup are quite positive, and it has conquered its 5-digit mark of 10,000. So we are expecting further rally in the counter. One can buy with support of 99.50, and this counter can head towards 10,700 marks. Second trading idea, that is buy on GMR Airport. Major trend of the counter is positive. We have seen build up of long position. In fact, the put call ratio is rising apart from rising delivery volume. So one can buy GMR Infra with support of 103, and this time it can rally towards 111. Last trading idea, that is from Capital Goods, buy on Cummins. We are witnessing a consolidation breakout of last 15-20 days. In fact, it is supporting well above its rising trend line. Even the moving average crossover with long built apart, indicating the bullish system. So one can buy Cummins with support of 4,300, and it can head towards 4,600 marks.
Boy, 10,700 on MCX. Chandan, thank you for sparing time and joining us today with your views on the index and on specific stocks as well. At the highest point of the day now is MCX, 3.5% higher on the stock. Time for the big story of the day. The metals are up and about, and it's a shining bright day for the metal names, and this is led predominantly by the commentary from the steel secretary in an exclusive interview with CNBC-TV18. Now, the secretary told us that a decision on the safeguard duty on steel is expected soon. This even as he sees supply expanding ahead of demand in the next 3 to 4 years. Listening to what he said first before we go across to Nigel.
On the safeguard duty, as you know that there is a process which was conducted by DGTR, and on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6-7 November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years. Which is under consideration with the government, so we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have relaxed it, suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices would stabilize.
All right, that's the word coming in from the steel secretary. But Nigel is joining us too. Nigel, what are the other triggers for the industry, and also what did you make of the steel secchi comments?
Well, the big question is why are metal stocks up? There are two big factors, right, at play today. Expectations of Fed rate cuts, well, they have moved up in comparison to the past week. And fresh commentary that came in from the steel secretary who spoke to us here at CNBC-TV18 exclusively yesterday. First, let's address what the steel secretary said, right, with regard to the protection measures. Remember, this provisional safeguard duty expired on November 6th, which means, as of now, there's no safeguard duty in place. But the secretary assured everyone that the government decision on reinstating the safeguard duty is expected rather soon. So it's giving hope out there. That's actually a bit of a delay, but it's likely to come about. That's the hope that the street is clinging on to. He added that adjustments in the BIS norms as well as the quality controls, well, they are aimed at balancing the interest of both the steel producers as well as consumers as well. So he clarified on that protectionist stand that the government has. But you'll be asking me, why is the safeguard duty important right now? Few factors. Point number one, China's output is down. We all know that. Year to date, it's down. But exports still remain high, and Chinese exports are continuing at around 10 million tons on a monthly basis. That's a worry, because elevated exports means more Chinese steel in the global markets. That's what will put pressure on prices. Second point is domestic prices, well, they are now at par with imported steel. But if you get that safeguard duty at around 12%, then it makes domestic steel far more competitive, as it makes the domestic steel price 12% cheaper than that imports that will come in from China, and 8 to 9% cheaper on those imports that are coming in from Japan as well as from Korea. A safeguard duty would protect margins, support domestic pricing at a time when the global steel pricing on the whole is rather cheap. And point number three is large new steel capacities, they are coming online in India, which could create higher supply in the near term, and export opportunities, well, they have been narrowing. And with EU's carbon border adjustment mechanism, which is known as CBAM, that is likely to increase the compliance cost as well as reduce competitiveness in Europe. This in turn will add pressure on the industry to ensure that domestic market remains viable, strengthening the case actually for a safeguard duty to come in place. And finally, the steel secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward. And steel pricing, which is suppressed right now, he's expecting it to stabilize in 2026. So put everything together, the Fed likely to cut rates, steel secretary giving hope that there are duties that could possibly come about rather soon. So on the back of that hope, we have the metal index that's flying away.
Thank you very much for that. Earlier today, we also chatted with Vikash Singh, Vice President at ICICI Securities, and all these points that Nigel was talking about. Listen into what he had to say.
If we don't count safeguard duty, then there's not much difference. But assuming if the provisional safeguard duty would have continued, then you are 12% cheaper versus Chinese and 9 to 10% cheaper versus Japanese and Korea. So that's why I said we have already given away most of the safeguard benefits over the last couple of months. And currently, if safeguard doesn't come, then the Chinese would come at par and Japanese, Korea would put further pressure of 1,500 to 2,000 rupees on the prices.
Get into a break. On the other side, we'll discuss market fundamentals. Rakesh Vyas from Quest Investment Advisors joins in on the other side.
Welcome back. Continuing our conversation on the markets, we are being joined by Rakesh Vyas from Quest Investment Advisors. Rakesh, good morning. Thank you for joining in. After this brief lull that we saw in the markets over the last couple of days, they're back towards making that dash towards the record high. Do you believe that there are triggers in place to take the markets higher from here, or there are some underlying concerns as well?
Yeah, hi, good morning, and thanks for having me here. No, I think if you look at it, the large part of this rally, which we expect to continue going forward, will probably be led by rebound in the earning growth trajectory that as we see. And I think a lot of the impetus action that's been taken by both the central government as well as the RBI is expected to drive a lot of growth in terms of consumption thereof. And also in terms of lending and credit growth, all of that would probably translate into much better earning growth as we move into calendar year 26. And I think as markets are forward looking, the confidence that market gets around normalization of this strong earning growth over next 4 to 6 quarters is what will continue to drive the market higher. And also, given that markets today are in fair range in terms of their average multiples, we can actually expect market returns in line with the earning growth as we see forward. So I'm pretty hopeful that market will probably start to see much more upside from here on.
Rakesh, wanted to talk about one of your top holdings, that's Vishal Mega Mart. Now, just yesterday, a colleague was saying that how Vishal Mega Mart is promoted by, the private equity firm Kedara Capital, and they've been, through the IPO, why the offer for sale, and then later, they've been bringing down their holding, and now it looks like Kedara, which is a 54% holding in Vishal Mega Mart, may look to do another block deal and sell an additional, I think, 13-15%. So now their holding would go sub 50%. I mean, how does that change the dynamics, the fundamentals, the lack of control that the PE will have? I mean, would that worry you, this additional supply, and the fact that management control is now below 50% holding?
Great question, Rima. And I think as a market, we need to become slightly more mature in terms of these private equity divestment that will continue to come through. So if you look at most of the new age companies that have got listed, many of them are private equity owned or backed. But over time, one also have to realize that these funds actually have a limited life, and therefore we will continue to see exits thereof. You still have a lot of platform players which are non-promoter backed, but still doing well. For example, we have our largest holding in Eternal for almost 2 years now, where there is actually in terms of stake, there is no large promoter left, right? But that business is still doing very well. It's very well professionally managed. So I think we'll have to come to a point where you have to recognize that some of these large companies that have got listed in the equity markets now will be mostly non-promoter led, professionally run. And I think in that context, the management of Vishal has done exceptionally good job since they have acquired this business. They continue to expand rapidly, even in a tough environment when SSSG growth was difficult to come by over last 4 to 6 quarters. They have been able to do a very good job of delivering double-digit SSSG. So, of course, supply pressure will remain in many of these companies, but one has to look beyond that and look at the fundamentals of business. And I think we still remain very, very constructive on some of those names. Even when, as you highlighted, we could continue to see intermittent supplies coming from private equity or promoters in general.
Okay, so that's about Vishal Mega Mart. You also have holding in Trent Limited, Rakesh. We've seen a big fall in that particular name. There were valuation concerns as well. Growth was slowing down. What makes you positive on this? Do you think that interest that we saw from shareholders in that massive rally could come back?
So I think you're right. The growth slowdown has been for real. And that's been the challenge in the urban consumption space to a large extent. Also, what has accentuated two things, which is much higher store expansion that Trent has done towards the end of last fiscal, and they still needs to become profitable at store level because it takes some time, and therefore it is reflecting in some sort of lower earning growth as well. But post that large expansion, they have actually moderated their growth plans already. So I think margins will probably to improve better from here on. And also, as I was highlighting, we remain fairly bullish on consumer discretionary as a space. And given that a lot of this tax incentives that have come into the hands of consumer will start to reflect into better consumption growth, and Trent probably is the market leader in terms of value fashion, and they should be a reasonably good beneficiary out there, given that they have very strong network of stores and will continue to see growth thereof. I think as the growth rate comes back, the re-rating will follow. So we remain fairly constructive on this name so far. If we see a material slowdown in growth sustainably going forward, I think that's when we'll probably take a measured call. But we are fairly convinced that over the next 4 quarters, we'll see strong rebounding growth.
Indeed, the street gets used to 35-40% growth and then starts to panic when the growth goes down to 15 to 18%. But Rakesh, very interesting holding in your portfolio is the PSU Bank Bs. You're having PSU Bank ETFs here, so you're betting on the entire space. Now, the stocks have run up considerably, but there is a chatter of the smaller banks being merged into larger ones, the exercise being underway. Do you still believe that even after the run-up, these PSU banks have value in them, considering that they have been beaten down for far too long?
So you are right, Armaz. I think stocks have done very well, but you also have to take into account that PSU banks have been able to withhold their market share to a large extent over last 4 to 5 years. They actually lost a lot of market share on the asset side pre-COVID. But given very strong liquidity that they have and the branch network, they have been able to bounce back very strongly and therefore able to manage market share. And if you look at the valuation metrics that exist today between private and PSU, there is no major difference between the growth rates or the asset quality per se. And therefore, there is always a rationale for some of this valuation gap to narrow unless we see any of the challenges either in terms of asset quality coming in or they lagging in terms of growth. But I don't see that being on horizon for next 4 to 6 quarters. So I think they still remain a reasonable bet. There are specific companies within the space where with the change of management, there could be increased focus on higher growth rates, etc. But I think overall as a space, we remain positive. But you are right. We'll again have to be very cognizant of the fact that there could be a consolidation in the space. And what is the contours of that consolidation will determine our next course of action. But till that point of time, we remain very, very positive.
All right. Thank you so much for joining in and taking us through your holdings and the analysis on markets as well. Time for a short break. We'll get you more on the markets on the other side.
Welcome back. Shriram Finance has been in focus. Earlier today, we had a chat with the management and we quizzed them because there have been a lot of news reports, buzz, that perhaps some investment is coming into the company. So we asked them about it. Listen in to what they had to say.
There will be many discussions going on. I cannot be talking about it. So there will be always some interested party who are, as you are rightly putting it, India is attracting a lot of capital, both for the debt and the equity. Everyone is seeing India as a large economy growing well. So that is where the interest levels are very high. And that is likely to continue. We are at 20% plus on CRAR. So we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital. So I can't disclose beyond that. The rural market is actually, the demand is much faster than the urban right now. And I believe with the government now have cleared some of the infrastructure project in the last cabinet meeting, there will be a much bigger thrust on the infrastructure part of it. And that will help the growth coming back in the urban area also. So both an urban and rural put together, the demand should be much higher. So we believe the growth can be much higher than the guidance given. We gave the guidance of 15%. We should be growing at around 17-18% if everything falls in line.
That was the management of Shriram Finance. We spoke about MCX earlier in the day, or earlier in the show actually. This is now above 10,000 rupees. And a day earlier, in an exclusive conversation with CNBC-TV18, MCX CEO Praveena Rai said that she expects to build MCX's capacity to process 10 billion orders in a day. Listen into what she had to say.
What I heard is, you have to be ready for 10x, right? And I think that was really a rallying cry.
A ringing thing, huh?
Yeah, and I said, and I think all of us agreed within MCX that I think that really is our goalpost now. So I think we are going for 10x, and we sort of ballpark numbers looking at something like maybe 10 billion orders a day. So that's what we're getting prepared for now. And when we look at timelines and we say, look, we want to target to 10x, 10x may not be like a single short jump, right? So probably it's going to have 2 or 3 milestones. If I look at very headline numbers, and we've sort of quadrupled in the last 2 years. So if we say, hey, if I look at that as a potential run rate, and there could be best case, there can be like a better case, and so on and so forth. Looking at all of this, I would say we should look at a first benchmark in about 12 to 18 months. As a milestone, and in 2 to 3 years, really be at the kind of levels we're talking about now.
All right, that's the word coming in from MCX. We'll take a short break now. When we come back, we'll get you more on the market moves on the other side.
Welcome back. It's time to call curtains on this edition of Trading Hour, but not before showing you that the markets are at the highest point of the day. The Nifty now at 250 points higher, the Midcap index to 650 points higher, as is the Nifty Bank. Sonal, Rima and I take your leave on this note. Halftime report on the other side. Thank you so much for watching.
Stocks make a big push higher with advances outpacing declines by a wide margin. Metals and energy lead the charge, while FMCG and healthcare lag.
Bharti Group sells a 0.57% stake via block deals in telecom arm Bharti Airtel at nearly 2,100 rupees per share to rake in over 7,000 crores. The sale leads to the promoter holding slipping below 50% in Bharti Airtel.
Tata Motors passenger vehicle CEO Shailesh Chandra expects the new Sierra to plug the gap in its SUV portfolio and drive up its SUV market share to the 22 to 25% range. He also hopes to clock double-digit growth in FY26. The stock gains.
Steel stocks gain on expectations of an early decision on the safeguard duty as domestic prices trade in line with Chinese and Korean steel. A possible peace deal between Ukraine and Russia could also be positive for global demand.
Hello, good afternoon. You're tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Ekta Batra as well. Ekta, surely turning out to be a good day and a good afternoon as well. We're managing to trade near the day's highest point, especially after the last few days of a bit of a consolidation that we saw. Today, 1% gain, 250 points uptick for the Nifty. Support coming in from the Nifty Bank as well, right? Managing to hold on to gains of almost 1%. Broader end of the market doing well. IT managing to support it. So we have most of the support coming in there. Good gains in the market as well. No complaining there, Ekta. Good afternoon.
Hi, Vinny. Yes, absolutely. Good afternoon. It's turning out to be a great day because after 3 days of losses, we are seeing some amount of gains which are coming through for the Nifty. In fact, recovering back to those levels of above 26,100 as we speak. So 26,146 is currently where the Nifty is at. Just want to point out that we have the Nifty Bank, which is at a record high in today's trading session. We also have stocks such as Reliance Industries, which is at a fresh 52-week high. So that gives the amount of weight that we need for today's trading session. So good going. Let's see what the FII, DII figures are as well post-closing and, whether or not the FII sell figure reduces further as it did yesterday. But let's go across to Vivek now. He's going to take us through all the stocks that are moving around in trade today. Vivek, well, it's definitely an active, live market, mostly in the green.
Absolutely right, and we are seeing such a market after quite a bit, 3-4 days. You actually saw the market sell advance decline ratio was quite muted, but we started off the December FNO series on a very, very strong note. Advance decline ratio across most of the sectors is extremely positive. What's doing quite well? Well, you mentioned IT. The other pack that's doing quite well is actually the pharma pack. So most of the names, in fact, the NSE Pharma Index, most of the names there, Pyramid, Mankind, Zydus, Divi's, all of them, even in Aurobindo, doing quite well in the session. The other stock on the radar is Sriram Fin, one of the top gainers on the Nifty as well. The management joined us earlier today and they mentioned number one, growth is very strong, and number two, they said that discussions always ongoing for a fundraise. So at this point of time, they haven't quelled any speculation regarding the fundraise. The other set of stocks doing quite well is actually MCX as well as BSE, both of the exchange stocks doing quite well. MCX today for the first time has surpassed the 10,000 rupees per share mark. The entire metal pack, you alluded to it earlier, but most of the names doing very well. Hopes of an import duty is something that's keeping all of these stocks perked up. JSW Sale, Jindal, Hindustan Copper, all of these stocks higher in the session. And another name, Carbon Universal. This particular stock, top NSE gainer, NSE 500 gainer, very good volumes. Generally doesn't seem so much volume as it has seen today. And another name, SMS Pharma, news flow coming in. This particular stock higher by almost 16%. The company's arm has got the US FDA note for reformulated ranitidine, and that stock on very good volumes today, almost 16% higher. Very few laggards. Chennai Petro, MRPL seeing a bit of profit booking after the sharp run-up that both of these names have seen post Q2. Nuvoco, Vista, select cement companies, under a bit of pressure today. Prices set to be subdued even in the month of November, and going into December, outlook not so strong. And Sapphire, higher volumes today, but that particular stock in the broad end of the market seeing some amount of pressure as well.
Okay, Vivek, thank you so much for that. We're surely keeping an eye out on all those stocks, but let's get started with our first management for the day. We have Satyen Mamtora, who's the Managing Director at Transformers and Rectifiers India, joining us today. And we will be discussing 3 important points. One, the main point is going to be the recent order wins as well as the order book outlook going forward from here on. Q2 inflows were not that exciting, so how will that shape up is important. Then, are they going to be maintaining their revenue guidance of 2,600 crores? And the third point, will the margins improve from here on? What is the outlook there? Good afternoon, sir. Thank you so much for joining us on the show today. And, let's just get started with overall in terms of the order that you have received. This is a 390 crore approximately order from Gujarat Energy Transition Corporation. Now, Could you provide more color in terms of the types of transformers that will be there? And how does the margin profile for this order actually shape up versus what the company is at?
So good afternoon, Vinny and Ekta. So these transformers are mostly EHV transformers, extra high voltage transformers. This will be mainly produced in our Moraiya plant. And the order outlook for the remaining of the year is we will be closing at around 8,000 crores of unexecuted orders book this year.
Okay, 8,000 crores is your unexecuted order book that you'll say by the end of the year is what we're expecting.
By the end of the year.
Yes, by FY26 end is 8,000 crores. You've spoken about it, so you're maintaining that as well. I want to understand, your margin profile for this order. Is it high margin side of an order that's come in?
No, it is approximately the same margin, around 15 to 16%. So there is no change in the margins.
Okay, 15 to 16%. And order inflow, sir, when I just look at it on a year-on-year basis, in Q2, we've seen obviously that reduction coming in. You've maintained your guidance. So then, what is the reason for the decline in order inflow in Q2? And you expect a sharp pickup then in Q3 and Q4, right?
Yes, that is correct. We will expect a sharp pickup in Q3 and Q4. The order inflow basically is one of our decisions, management decisions that we have taken, that we should not be taking orders beyond 18 to 24 months. And whatever orders that we are going to get now is 18 months from first quarter of 27.
Okay, got it. So, Mr. Mamtora, you're expecting how much are you expecting in the second half when it comes to order inflows?
Close to around 4,000 crores, ma'am.
Okay, incrementally you're expecting around 4,000 crores, and it would be in this timeline of completion that you just spoke about. Yeah. You're sticking to your guidance for the entire year, which is around 3,500 odd crores in terms of total revenue, margins of around 17 to 18%. What would it be predicated on? Can you tell us what the second half is looking like?
We have corrected our margins in the last meeting. Our margins are now between 2,500 to 2,600 crores. And that is revenue between 2,500 and 2,600 crores, and margins will be around 15 to 16%.
This is for the full year FY26, right?
This is for the full year to FY26.
Okay, so you're expecting a lower, why are you expecting your margins to probably dip by around 100 to 200 basis points?
Not dip. It should maintain around Q1 levels.
Okay, retain around Q1 levels. Sir, since we have you with us, we would like to just get an update with regards to the World Bank issue. If you could just apprise us of the latest.
So we have until January to give a reply to World Bank, and we are in the process of providing an appropriate reply to the World Bank, and the matter should be resolved in a very short time.
In a very short time means, can you give us a timeline, maybe by the end of this quarter?
Once we reply to the World Bank, they will again come back to us, and it is a to and fro process of what is going to happen. So it will take, I think by end quarter one FY27, we should be clear about what is happening.
Clear about the expectation is that you will not be debarred anymore.
No, we won't be debarred anymore.
Okay.
That's what our expectation is, but let's see how the replies and what is the response from the replies to this.
Okay. So you're already in talks over there and you've sent your explanation as well. Just circling back on that 2,600 crore revenue guidance here, was there any challenge in terms of execution that are still there, or that is now all on track?
So there is a little shortfall in terms of availability of raw material like CTC and bushings, because of which we could not, in Q2 also we could not maintain the pace that we wanted to maintain.
Sure.
And as you are aware that our backward integration plants are also coming in to play 12 to 15 months. Once those come into play, things will be much easier for us in terms of realization and also in terms of revenue. for the organization.
Okay. And so currently, what is the capacity utilization that is the company is working at? Also, like you mentioned, right, new facilities are being commissioned. The Moraya is also a facility that you all are looking at in terms of expansion. So give us an update on that as well, no?
So Moraya is will take around 6 months to complete the expansion there. There we are expanding the test facilities and some of the movement areas for storage of transformers. That is one, and the plant utilization should be around 65 to 68%, ma'am.
Okay, 65 to 68% is the plant utilization. And all these capacities which you all are adding will come in by FY27 or anything coming in FY26 as well?
Changodar plant should be available to us in the last month of FY26.
Okay. All right. Mr. Mamtora, don't mean to probe too much, but just wanted to circle back on the World Bank issue. If you could just explain to us why there was this debarment which took place?
There were certain issues that had come up, and we did not get the documents in time, for which they wanted us to reply. And once we found those documents, we are now giving them an appropriate reply on this issue.
So it's more of a procedural issue,
Yes, it is more.
linked to documents.
Yes, ma'am.
So it would probably be easily resolvable if the documents are correctly provided.
That's what we were working on, ma'am.
Okay. All right, Mr. Mamtora, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of transformers and rectifiers talking to CNBC-TV18. As you can see, the stock is just about lower by around 1.6%. It has been in focus on account of order wins. It secured an order worth around 390 odd crores just recently. So that's why it was in focus. We'll take a break, but up next we'll get going on our movers and shakers segment where all the key stocks in focus will be discussed. Stay tuned. Welcome back. Well, for the markets, it's holding up steadily. So we have the Nifty, which is up around 273 odd points, and the Midcap Index, which is up around 1 odd %. And look at the advanced decline ratio. It looks spectacular at this point in time. Around 2,800 stocks advancing to around 1,266 stocks declining. So the huge gap is being maintained from the start or the get-go of the trading session. So that's definitely a positive indicator. But let's get to all of our stocks in focus in our movers and shakers segment. Let's kick it off with Bharti Airtel, which is in focus. It's a Nifty stock. Let's go across to Sud or rather to Vivek on Bharti Airtel.
Well, that's right. Amongst the few stocks that are trading in the red today, and that is Bharti Airtel. So, just post-market open, we saw a large trade take place, almost 0.6% of the total equity change hands, a little over 7,200 crore worth of equity actually changed hands. And as per the term sheet that we managed to access last evening, we understand that the seller in today's block was actually a Bharti affiliate, the promoter group affiliate, which is known as Indian Continent Investor. They held a little over 1.4% stake. So now they've paid close to 0.6% stake. Now, this is a little interesting given the fact that at the start of the month, you actually saw the other promoter entity, which is Singtel, pair a significant stake as well. And remember, both Singtel as well as the Bharti Group have said that eventually both of them will consolidate their stakes in a manner that they will reach parity. So it'll be interesting to see what is the total amount of further quantum of stake sale that Bharti Airtel will see before it comes to an end.
Okay, Vivek, thanks so much for that. But we have Keynes Tech that's buzzing in trade today as well. And this is after brokerages gave a positive note. There was an analyst meet that was held as well. So we have updates on that. Sudarshan is here for that. Sudarshan, over to you.
So brokerages have returned on Keynes Technologies after company held analyst meet yesterday, and the commentary was looking largely positive, in which company has managed to keep the guidance for FY26 largely unchanged. Revenue guidance is in the range of 4,400 to 4,500 crore. Core EMS revenue guidance is in the range of 4,100 to 4,200 crore, and it believes that it can achieve $1 billion revenue target earlier than the target that it had given of FY28, and further fundraise that company believes that it's not required. And OSAT and PCB, these are two main segments, and that can become self-sufficient after the first year operation. That was by JP Morgan, which maintains overweight call and target is 7,550. Even Nomura has written on that. It maintains buy call and target is 8,478. It says that company has a focus on broad-based growth to aid the diversification, and OSAT and PCB is on track and receivables to normalize, and that is expected by the end of FY26. And company targets positive operating cash flow by FY26 as well, and it has executed 450 crore smart meter orders in H1 of FY26, and overall in FY26 it's expecting to execute smart meter order in the range of 800 to 900 crore. So overall, it's looking largely positive for Keynes Technology. At one point, the stock was up 2%, but still, it's in the green, up around 1%.
Okay, well, Sudarshan, stay with us. Tata Motors PV has relaunched Tata Sierra. It's at an introductory price of around 11.5 lakh. The brokerages are maintaining a neutral call with a target of around 395. Tell us more about this launch. What's the response like?
So it's a good-looking car that Tata Motors PV has launched. It's Sierra. It's a reborn. It's basically the new version of Tata Sierra, and the introductory price that company has kept it is of rupees 11.49 lakh. And if you take a look at the Tata stock today, it's up around 1.3% at this point. But this year in 2025, it's been one of the top, biggest underperformers in the auto pack. But as far as the Sierra is gone, now Nomura or most of the brokerages believe that it has the most features amongst all the Tata Motors passenger vehicle SUV, and bookings for this model are expected to start in December, and that is on December 16, and deliveries are expected to start by January of 16, and it's coming in 3 powertrain options. Now Nomura maintains neutral call, target is 395. It believes that this car carries forward the Sierra design into a modern avatar, and pricing is aggressive, and given the base variants, that also is feature loaded, and it expects potential sales of this Sierra of 10,000 units per month, and it could create a meaningful upside to PV growth expectations over FY26-28. So overall, it's looking largely positive as far as the launch of Sierra is gone by Tata Motors.
Okay, so thank you so much for that. But, speaking to CNBC TV18, Sailesh Chandra, CEO and Managing Director of the company, says that they are eyeing double-digit growth this fiscal year and expect SUV market to reach that market share of 22 to 25%. Listen in.
It has been another launch of a car. It's an emotional moment for us because, as you know, that Sierra was the original Sierra was launched in sometime around 1991, 35 years back, and had got discontinued somewhere around 2001, 2002. So it's after literally 25 years that we were reviving this. You named the cars and you will see that there was a missing piece in the portfolio, because the way we have designed our portfolio, that say once a customer buys the car for the first time, maybe a Tiago, for the whole life cycle, whole life, the customer has an option of upgrading in the same showroom, which is the Tata showroom. So you have a full continuity that we have tried to give right from Tiago to Harrier Safari. But this was the missing link, which was the mid-size SUV, which Sierra very well fits in and gives the portfolio continuity that we wanted. Today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that. November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. FY26, I can only say that we are definitely eyeing a double-digit growth. But in the first half, our growth rates were not that great. But in Q2, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth.
Okay, well, as we slip into a break, a quick programming note. If you are looking for the big bets and market themes for 2026, CNBC TV18 Access gives you a direct access to White Oak Capital's AMC's Ashish Sumaya and Prashant Khemka as they share their winning market themes and actionable investment strategies. Ask your questions live on 28th of November at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to CNBC-TV18.com.
Welcome back to Halftime Report on CNBC-TV18. Nifty still managing to hold on to 26,150 levels, almost near the day's highest point as well. So we'll be keeping an eye out on the Nifty. But what's happening in the world of F&O? Today we have Nigel joining us from the F&O desk to give us the update this afternoon. Nigel, good afternoon.
Well, good afternoon, Vinny. I've been making this point, right, that the bulls will want to end December with a bit of a flourish. And it appears the series has started on the front foot. And also, if you look at in November, I've been maintaining this, that we're likely to hit a fresh all-time high in November itself. We've gone very, very close. I still think that we're going to do that. Now, in today's trading session, we went close to around the 20 DMA. And from there, we have seen a bit of a bounce. And if you just look at it in the last few trading sessions, what's been happening is we were looking to play out the expiry. And that's where there were some jitters. Now, the screen is looking much better. The PCR, though, which was at around 0.9, that's moved to around 1.4 because the put writers, they started this morning at 25,900. Then we saw the 26,000 put see a good amount of open interest. Just look at the kind of open interest build-up you're seeing on those strikes. And the 26,100 put as well has become fairly active. And the premium on all these three have actually crashed, which has caused the PCR to move to around 1.4 or thereabouts. So the markets are looking good. The fresh all-time highs come in at around the 26,277 odd. Until the 20 DMA holds out, you'll be looking to a good December. So hopefully a good close to the year. Individual stocks that are catching your attention, Saman Capital, stock that's seen a good amount of correction. The open interest build up, if you look at it in percentage terms, it's nearly around 15% on the kind of base that we have seen. So there are some fresh longs that are being added out there. I'll be interested to see whether or not that one stays in the F&O band. So we'll keep an eye out on Saman Capital. Sale as well as seeing a good amount of addition. Remember, that as well did see a bit of a correction. Now we are seeing good amount of buying out them. And two stocks that are coming for a bit of a short covering bounce. REC, it's corrected a goodish deal from the recent peak, but that's coming for a bit of a bounce. And KEI as well is seeing some signs of shorts that are getting covered. I guess we got a couple of sessions before we hit those fresh all-time highs yet again. Screen looking good.
Okay, all right, Nigel. Thanks very much for that. Pritesh Mehta joins in to discuss the technicals of the market. He joins in from Yes Securities. Pritesh, hi, welcome to the show. 26,100 plus is where the Nifty is at. What's your strategy today?
Yeah, thanks for having me. See, it's good to see market back in green. We have been witnessing pullbacks, throwback from 20,200 levels in last couple of days. One trouble space for me is still the small cap index, the broader markets. Yes, we have seen pullback today's trade and recovery today's trade. But when you look at the overall ratio, the structure of small cap versus Nifty, I think is going down. So rather than getting me excited by recovery in the small cap or broader markets, I think one space which is holding out is the, we have created customers indices. So top 20 Nifty index, that is the one which is leading from front. For last 1 month, last 1.5 months, it has been moving higher. So I think we tend to look at the top 10 index of the top 10 stocks of the index, Nifty index. And we feel that when market has to move higher, surpass the previous peak, these stocks will lead from front. But I think it's time to look beyond these stocks. We need to look the basket of 11, 20 stocks from the Nifty index, and they are the ones doing better. So when we look something like SBI, Sun Pharma, they are the ones moving the needle. So I think this outperformance from this basket is going to continue. But rather than focusing on the top 10 stocks, opportunity lies beyond these top 10 stocks.
Mm-hmm. And any other names that you're looking out for in the broader end of the market as well?
So within the broader markets, yes, PSU Bank stands out to me. Yes, they have been leading from front from last 2 months or so, and still I feel there is more on the upside. When we look something like Can Bank, Boy, these are the stocks which have surpassed previous peaks very easily and sustaining about same. And when you look at the ratio of these stocks versus the PSU Bank Index versus the Bank Nifty Index, we are talking about big base breakout. So that is going to continuation in this space.
Okay, all right. And any, broader market strategies in terms of specific stocks, Pritesh?
So if we move away from the broader markets, Nifty, small cap, mid cap indices, one particular stock that we like is Titan. So when we look at something like discretionary index versus the FMCG index, it has given a breakout after 3 years of consolidation. So if we go through the discretionary basket, Titan is the one which stands out for me. We already seen a move from 3500 levels, 3900 levels. And if I go through the overall chart pattern, I can see bullish turtle breakout taking place, ankle follow through coming to play. So a move towards 4300 is possible in this stock, and the stock would be around 3750.
Okay. Pritesh, thank you so much for joining us today, talking about a lot of individual names as well as the market. Thanks always for joining in. But on that note, we're going to slip into a very short break. On the other side, we'll have Manisha Gupta, who will be in conversation with Deepak Balani, who is the DG ISMA. And stay tuned for that conversation.
Welcome back. Joining us on the show now is Deepak Balani. He's DG at ISMA. Mr. Balani, thank you so much for joining in. I remember our last conversation and you said that the tie-up, the MOU that you have done with the Global Carbon Council is one to, of course, strengthen the sugar and bioenergy sector in India, and second is to make that additional revenue stream as well coming in for the sugar mills there. Do tell us about what this partnership is all about and how soon do you see it executing, frameworks being set, etc.
Thank you, Manisha ji, for having me in your show. At COP32 in Brazil, in Belém, ISMA has recently signed an MOU with the Global Carbon Council. This is the first internationally recognized carbon market program, and this is a very important step for the India's sugar sector, as we will enter the global carbon markets and also strengthen our role in the climate action. And as you know, the sugar industry is a very clean energy producer, from ethanol to CBG to the cogeneration, SAF, and even now green hydrogen. So we believe that through this partnership, ISMA will help the mills to measure, verify, and earn value from these emission reduction activities. And as I had mentioned before, this MOU is going to support our mills in designing and registering high quality carbon projects. This will also align with India's CCTS and also the Article 6.2 rules. And it will give a clear access to our mills to the global voluntary and bilateral carbon market. So perhaps this will open, as I very rightly said by you, this will open new revenue opportunities for the mills, enhance their sustainability credentials, and also at the same time strengthen the India's clean energy leadership. And our goal is very simple: to make the sugar industry, the entire value chain, more efficient, more climate efficient, future ready, and also tap into the additional revenue realization and more viability for the sugar mills. So this is a very good step towards entering the global carbon markets for the sugar mills.
Mr. Balani, that is a big positive. The other big positive, of course, comes in sense of the sugar production this time around. The third big positive, of course, is the allowed export for sugar for the season that already has come in from the government. But that's exactly where the positives actually stop. I was doing a SWOT analysis on the sugar industry, and there's just way too many negatives. And how are you looking to really tend to that? Because the sugar MSP has not been hiked since 2019. Ethanol price is yet to be revised. Production costs, I was looking in last many years, have only gone up with the FRP prices just being one of the part there. It is volatile production trends. There's competition also from the unorganized gur and khansari sectors. I could go on really. But what would you say are the major challenges right now and that are being worked upon as well?
Absolutely. See, as you very rightly said, I would perhaps define this as challenges and not really negative for the industry. I would say all these decisions are necessary, but I would also say that these are in process and pending the approval of the government. Government is completely aware of the issues, specifically on MSP, which you very rightly mentioned, has not been revised for last 5 to 6 years. High time that the MSP revised. MSP, because we know that FRP has gone up to 355, SAP in UP has gone up, even the cane prices in Karnataka has gone up. So considering that, we are hoping that the government is completely aware, and we are hoping that they will announce the revised FRP to the tune of around 41 rupees very soon, because that is the only way where the industry, the sugar industry, will be viable and will be able to pay to the farmers on time. So to avoid any further cane arrears during the end of the season, I think MSP revision is utmost important. As you very rightly said, we have thanked the government. I think very proactive step of allowing export of 1.5 million tons. I believe the market is also inching up and sending a signal that in times to come, maybe 15, 20 days from now, the global market will start accepting Indian sugar.
Mr. Balani, the international cues are quite on the bearish side, but I get your point. As Brazil sugar is done with, Indian sugar perhaps will find a market there. But what is it that ISMA is working with in sense of global surplus estimates this time around for the season?
See, we have a production estimate of around 343 lakh tons and with around a consumption of around 285 lakh tons and an export of 15 lakh tons. We already have the diversion of around 34 lakh tons, which is in the cycle 1. We are also hoping that there would be slightly more diversion towards ethanol in the cycle 2. So we are still looking at a closing stock of around 60-65 lakh tons, which perhaps is a very good closing stock. However, the right balance is very important. And we hope that we will be able to export 15 lakh tons and we will have only balanced sugar in the country, so that the prices are maintained at a stable level and the industry gets viable prices for their sugar, so that the revenue realization and the revenue of the sugar mills are viable, so that we can pay to the farmers on time. So we are hoping for a good season, a balanced season. We're only hoping that the government will now announce the revised MSP, and also I believe on the ethanol pricing, something will come up very shortly.
One more thing, Mr. Balani, and what is your sense on the global market surplus, and how are you looking at the global prices going forward from here? Because this year as well, the raws have seen a decline by nearly 22% from where we stand.
See, as far as the global stock is concerned, we are looking for a surplus overall. We'll be looking at an overall surplus around 4 million tons globally. Having said that, there would be a window of low quality whites starting December 15 until March end, before the Brazilian sugar hits the global market. So there is a window for Indian LQWs and also some raws. I believe the international market for whites will inch up and will be viable for the mills to export. So we are hoping that we will have a conducive scenario somewhere in December to March, so that we can export maximum from India. We already have inquiries from countries like Afghanistan, Kazakhstan, and also some African countries.
All right, Mr. Balani, thank you so much for joining in. So mixed cues really coming in from sugar, but as Mr. Balani chooses to say, it's not negative, just some challenges where the government is aware of and perhaps would be worked on as we go ahead from there. Well, with that, it's time for a short break. When we come back, we'll put more focus towards markets and stock specifics.
Welcome back to Halftime Report on CNBC-TV18. Markets holding steady with gains of 1%. But MCX shares, they've crossed the 10,000 crore mark for the first time. A day earlier in a CNBC-TV18 exclusive, we had seen CEO Praveena Rai, who says that she expects to build MCX's capacity to process $10 billion a day. Listen in.
What I heard is, you have to be ready for 10x, right? And I think that was really a rallying cry.
A ringing thing, huh?
Yeah, and I said, and I think all of us agreed within MCX that I think that really is our goalpost now. So I think we are going for 10x, and we sort of ballpark numbers looking at something like maybe 10 billion orders a day. So that's what we're getting prepared for now. And when we look at timelines and we say, look, we want to target to 10x, 10x may not be like a single shot jump, right? So probably it's going to have 2 or 3 milestones. If I look at very headline numbers, and we've sort of quadrupled in the last 2 years. So if we say, hey, if I look at that as a potential run rate, and there could be best case, there can be like a better case, and so on and so forth. Looking at all of this, I would say we should look at a first benchmark in about 12 to 18 months as a milestone, and in 2 to 3 years, really be at the kind of levels we're talking about now.
Okay, well, we need to take a short break on that note, but we'll get you more stocks in focus on the other side, some buzzing stocks from the broader market. Stay tuned. Welcome back. Well, just look at a couple of stocks. SMS Pharma stands out in today's trading session. That stock is up around 14 to 15%. That is because their associate company has received approval for ranitidine, which is basically the acid reflux drug, which was withdrawn from the US markets around 5 years ago. So their associate company has received approval for the reformulated ranitidine, and that's the reason why you're seeing the stock higher by around 15%. Let's see, because there are many other drugs which, people started using because there were fears of, NDMA or cancer or the drug actually becoming a carcinogenic or containing carcinogenics at the end of it. So that many people shifted to alternate drugs. So whether or not the same market share comes back will be interesting to see. But that's the reason why you're seeing the stock up around 15.5%. But remember, that's for the US market. In many other geographies, such as India, ranitidine is still sold. But nonetheless, that's on SMS Pharma. That's all the time that we have on the show as well. The Nifty is up around 1%, and we have an advanced decline ratio, which is maintaining on the advancing side. Business Lunch up next.
Stocks make a big push higher with advances outpacing declines by a wide margin. Metals and energy stocks lead the charge while FMCG and healthcare lag. The Bharti Group sells a 0.6% stake via block deals in telecom arm Bharti Airtel at near 2100 rupees a share to rake in over 7,000 crore. The sale leads to the promoter holding slipping below 50% in Bharti Airtel. Tata Motors Passenger Vehicles CEO Shailesh Chandra expects the new Sierra to plug the gap in its SUV portfolio and drive up its SUV market share to the 22 to 25% range. He also hopes to clock double-digit growth in FY26. The stock moves higher. Steel stocks gain on expectations of an early decision on the safeguard duty as domestic prices are in line with Chinese and Korean steel. A possible peace deal between Ukraine and Russia could also be positive for global demand. It is a screen that the bulls would be very, very happy to see at the start of the December series. Good afternoon. You are with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia, and it's an almost 100 now on the Nifty. The index is now just around about 100 points away from those record high levels of 26,277. 26,170 is where the index currently stands at, 285 points higher, 1% on the Nifty. And leading the gains are the banking stocks, of course, but the metal names are the ones that are shining bright in today's session. The Nifty Bank up 650 points as well. The metal names are at the highest point of the day. So it's gains across the board if you see for the markets today. And of course, the broader markets, the market breadth was a bit of a pain point over the last few trading sessions, but that too has been taken care of by a significant margin in today's session. The mid-cap index up over 600 points as well. The advanced decline comfortably. The gap continues to remain like a parallel railway line as of now. 2,200 stocks on the NSE advancing compared to 660 stocks that are in the red. We spoke about metal names, and they are up and about, fueled by commentary by the Steel Secretary. In an exclusive conversation with CNBC TV18, the Secretary told us that the decision on the safeguard duty on steel is expected soon. Nigel is here with more on this.
Well, the big question is, why are metal stocks up? There are two big factors, right, at play today. Expectations of Fed rate cuts, well, they have moved up in comparison to the past week. And fresh commentary that came in from the Steel Secretary who spoke to us here at CNBC TV18 exclusively yesterday. First, let's address what the Steel Secretary said, right, with regard to the protection measures. Remember, this provisional safeguard duty expired on November 6th, which means, as of now, there's no safeguard duty in place. But the Secretary assured everyone that the government decision on reinstating the safeguard duty is expected rather soon. So it's giving hope out there. That's actually a bit of a delay, but it's likely to come about. That's the hope that the street is clinging on to. He added that adjustments in the BIS norms as well as the quality controls, well, they are aimed at balancing the interest of both the steel producers as well as consumers as well. So he clarified on that protectionist stand that the government has. But you'll be asking me, why is the safeguard duty important right now? Few factors. Point number one, China's output is down. We all know that. Year to date, it's down. But exports still remain high, and Chinese exports are continuing at around 10 million tons on a monthly basis. That's a worry, because elevated exports means more Chinese steel in the global markets. That's what will put pressure on prices. Second point is domestic prices, well, they are now at par with imported steel. But if you get that safeguard duty at around 12%, then it makes domestic steel far more competitive, as it makes the domestic steel price 12% cheaper than that imports that will come in from China, and 8 to 9% cheaper on those imports that are coming in from Japan as well as from Korea. A safeguard duty would protect margins, support domestic pricing at a time when the global steel pricing on the whole is rather cheap. And point number three is large new steel capacities, they are coming online in India, which could create higher supply in the near term, and export opportunities, well, they have been narrowing. And with EU's carbon border adjustment mechanism, which is known as CBAM, that is likely to increase the compliance cost as well as reduce competitiveness in Europe. This in turn will add pressure on the industry to ensure that domestic market remains viable, strengthening the case actually for a safeguard duty to come in place. And finally, the Steel Secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward, and steel pricing, which is suppressed right now, he's expecting it to stabilize in 2026. So put everything together, the Fed likely to cut rates, Steel Secretary giving hope that there are duties that could possibly come about rather soon. So on the back of that hope, we have the metal index that's flying away.
Oh, flying away indeed. 2% higher on the Nifty Metals Index. All of the stocks on the index trading with gains in today's session. From metals to autos and Tata Motors passenger vehicles, the underperformer of the year if it comes to the Nifty 50 names, that has relaunched the Tata Sierra at an introductory price of 11.5 lakh rupees. The street has given it a thumbs up. The stock, although off the highs of the day, still holding on to gains of around 1.33%. Sudarshan is here with more on this. Sudarshan.
So Sierra is reborn. It's the most feature-rich SUV from Tata House, and it's launched at an introductory price of rupees 11.49 lakh. And bookings for the same are expected to start from December of 16 and deliveries from January of 15. So some of the brokerages have written on Tata Motors special vehicle. Most of them are positive, mainly on the basis of this launch. Largely, as far as Tata Motors special vehicle stock is concerned, most of the brokerages have either sell call or neutral call. So Nomura maintains neutral rating. Target is 395. It says this car carries forward the Sierra design into a modern avatar, and pricing too is very aggressive given the base variants are also feature loaded, and it expects potential sales of 10,000 units per month just for this Sierra, and it seems well positioned to benefit even from consumer shift that you have been seeing over the last few years, that consumers are shifting to the premium segment, and it could create a meaningful upside to PV growth expectations over FY 26-28. And after several days of downtake, even in 2025, stock has been one of the biggest underperformers, down more than 51%. Today, it's seeing a minor uptick, currently up more than 1%.
Sudarshan, thank you for that update. Now speaking to CNBC-TV18, Shailesh Chandra, the CEO and Managing Director of the company, said that they are eyeing double-digit growth this fiscal and they are expecting the SUV market share to test levels of 22 to 25%.
Today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that. November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. FY26, I can only say that we are definitely eyeing a double-digit growth, but in the first half, our growth rates were not that great, but in quarter 2, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth.
It's officially a 100 now on the Nifty. The market continues to move higher. We started the show at 26,170, and within 10 minutes, the index has added another 15 points to its tally. 301 points higher now on the index. 26,190 is where the index currently stands. So around about 85 to 90 points away now from 26,277 is where the Nifty lies. Take a short break, but before we do that, here's a quick programming note. If you are looking for the big bets and market themes for 2026, CNBC-TV18 Access gives you direct access to White Oak Capital AMC's Ashish Somaya and Prashant Khemka as they share their winning market themes and actionable investment strategies. You can ask your questions live on the 28th of November at 1:30 p.m. You can become a member today on the CNBC-TV18 app or log on to cnbctv18.com/access/plans. Welcome back. Now, U.S. Treasury Secretary Scott Bessent expects President Donald Trump to make a decision on the new Fed chair before Christmas holidays. In a CNBC exclusive, he said that there is one more interview to go and he was not ready to speculate who might get the job.
Talking to these candidates, I realized the Fed has become this very complicated operation. It's no longer just a price setting of money. There's this very complicated calculus between the monetary policy, the balance sheet, and regulatory policy. And we've really emphasized in the interviews, what's the interplay for that calculus in terms of the best way forward for the American economy, and what is each person's point of view in terms of protecting the American people, protecting the economy, and moving forward with the dual mandate.
Can you give us a hint? We often talk about the two Kevins, Kevin Warsh and Kevin Hassett, being the front runners. Is that still the case?
Andrew, I'm still got one interview left, so I don't think it would be prudent to give any hints. And I think that there's very, very good chance that the president will make an announcement before Christmas. But it's his prerogative whether it's before the Christmas holidays in the New Year's. But things are moving along very well.
Now, the Treasury Secretary also spoke about the 30-minute phone call between Donald Trump and Xi Jinping and said that the US and China will always be natural rivals, but the two countries' relationship is currently in a good place.
President Trump initiated the call 30 days after the historic meeting in Busan, South Korea, between the two leaders. They have a great relationship. And as far as the soybeans, the Chinese are right on schedule in terms of the cadence of their purchases. Over the next 3.5 years, we're going to see the 87.5 million metric tons purchased by the Chinese, minimum, and they are right on schedule. U.S. position on Taiwan is unchanged. And on Ukraine, President and Party Chair Xi agreed that the peace in this Ukraine conflict, they must move forward, and they agreed to work together on it.
Now, the U.S. brokered peace deal to end the war in Ukraine is gaining momentum. Take a look at all the key developments so far.
Ukrainian President Volodymyr Zelensky said on Tuesday that Ukraine was ready to advance a U.S.-backed framework for ending the war with Russia, and discussed disputed points with U.S. President Donald Trump in talks he said should include European allies. Underlining the high stakes for Ukraine, its capital Kyiv was hit by a barrage of missiles and hundreds of drones overnight in a Russian strike that killed several people and again disrupted power and heating systems. Residents were seen sheltering underground wearing winter jackets, some in tents. U.S. and Ukrainian officials have been trying to narrow the gaps between them over the plan to end the conflict, with Ukraine wary of being strong-armed into accepting a deal largely on Russia's terms, including territorial concessions. Kyiv's message hinted that an intense diplomatic push by the Trump administration could be making progress.
They're going to keep talking. They're talking to Russia now. Steve Witkoff is going over, maybe with Jared. I'm not sure about Jared going, but he's involved in the process, smart guy, and they're going to be meeting with President Putin, I believe, next week in Moscow.
But any optimism could be short-lived, especially as Russia stressed it would not let any deal stray too far from its own objectives. Russian Foreign Minister Sergei Lavrov said an amended peace plan must reflect the, quote, spirit and letter of an understanding reached between Putin and Trump at their Alaska summit in August. White House Press Secretary Caroline Leavitt said on X that the U.S. had made tremendous progress towards a deal over the past week, adding that there are, quote, a few delicate but not insurmountable details that remain. French President Emmanuel Macron, in a call with a group of countries supporting Ukraine, known as the Coalition of the Willing, said talks were at a critical juncture.
The absolute condition for a good peace is a set of very robust security guarantees.
and not paper guarantees.
The 28-point peace plan that emerged last week caught many in the U.S. government, Kyiv, and Europe alike off guard. The plan would require Ukraine to cede territory beyond the almost 20% of the country that Russia has captured since its February 2022 full-scale invasion, as well as accept curbs on its military and bar it from ever joining NATO. Conditions Kyiv has long rejected as tantamount to surrender.
Time for a short break here on Business Lunch, but just as we do that, some good news for our viewers. India's business news leader is now just a click away, and that is the all-new CNBC TV18 app, which gets you breaking news, in-depth articles and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that's up on your screen. Let's take a short break, back with more on the other side. Welcome back. Prime Minister Narendra Modi virtually inaugurated the Safran Aircraft Engine Services India facility in Hyderabad. Now, this facility is Safran is dedicated to maintenance, repair and overhaul center for aviation propulsion engines, the ones used in the Airbus A320neo and Boeing 737 MAX fleets. The center is one of the largest aircraft engine MRO facilities globally and marks the first time for a global engine OEM that has set up such an operation in India. At the inaugural ceremony, Prime Minister Modi said that Safran's new facility will help establish India as a global MRO hub, and the new facility will create new opportunities for the tech youth in the high-tech agri-space sector. Our colleague Madhiya also spoke to the CEO of Safran and began by asking why they chose India when thinking about their biggest maintenance facility.
India is an obvious country for us because we've been here for more than 70 years, accompanying India in their journey for more sovereignty, and also because India is the fastest growing market in civil aviation. More than 10% of growth each and every year. And so there's a big growth from the Indian airlines, and most of them have ordered hundreds of aircraft from Airbus and Boeing. But the fact is, be it Airbus or be it Boeing, we are powering 80% of the aircraft, narrow-body aircraft that are flown by the Indian airlines. And there's a very significant number of engines on order. 500 aircraft are today flying with our engines, and much more to come. We have 2,000 engines on order, and this is just the beginning. And so, because India is so fastest growing country, so important, it was making sense, a lot of sense for us to accompany our Indian airline customer by setting up a maintenance, repair and overhaul center here in India. And this is the first MRO, engine MRO center in India. There was none before.
Yes, yes.
So they had to ship their engine outside of the country, in Far East Asia or in Europe, for the maintenance. So for them, they are welcoming this strategic move from us because we are going to be close to them and we are going to reduce the cycle.
India is aiming to become the global MRO hub.
Yes.
What do you feel about that target and how soon can India achieve that?
We strongly believe this ambition is totally legitimate, considering not only the growth of the civil aviation, but also the big needs of the Indian Air Force as well. So for us, it's an obvious vision for India to build up this network. And we want to be a strong contributor to that. And this is why also we have decided through our civilian leg and our military leg to contribute to the build-up of a complete aerospace engine aerosystem in India.
Now, India is marking its 76th Constitution Day. On this day in 1949, the Constituent Assembly adopted the Constitution of India. President Draupadi Murmu, Vice President C.P. Radhakrishnan, Lok Sabha Speaker Om Birla and Prime Minister Narendra Modi presided over the celebrations in the Central Hall of the Old Parliament. Still at 100 points away on the index, we take your leave on this edition of Business Lunch. From me and the team that put this show together, thank you so much for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. What a day, what a start to the December series. It's almost a 300-point uptick on the Nifty as we speak. We are above that 26,150 mark comfortably. Midcaps, they've slightly come off from the highs of the day, no two ways about it, but the advance decline ratio in favor of the advances. But you know, at a point in time, the ratio was much higher in favor of the advances. So watch out for that because market breadth has been an issue for the markets for a week now.
That's right. Good afternoon, Sonal. But we've started off, like you mentioned, the December series on a very strong note. A bit of a moderation from the day's high, but it's important to see, especially in the last couple of hours, as we've seen in the last few days, the advance decline ratio, or the breadth, has declined significantly or deteriorated significantly in the second half. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Stocks make a big push higher with advances outpacing declines by a wide margin. Metals, PSU banks and consumer durables lead the charge. Midcaps gain in line.
HEG gains after its promoter buys 0.35% stake in the company. Management tells CNBC-TV18 that the demerger is in the process of getting SEBI approval. Stock is up nearly 3% in trade.
MCX is among the top F&O gainers today and has crossed the 10,000 rupees per share mark for the first time. In a CNBC-TV18 exclusive, CEO Praveena Rai says she expects to build MCX capacity to process 10 billion orders a day.
SMS Pharma up over 15% in trade today after the FDA approves reformulated ranitidine tablets from its associate company VKT Pharma in 150 and 300 mg strengths. The approval marks re-entry of the acid reflux drug into the US market. Okay, all right, those are the top headlines. The market has actually taken another leap, so it's almost up 300 points as we speak. The Nifty is up 1.13%. You know, the mid-caps, they are also largely in line with the benchmarks. The Bank Nifty also contributing fair bit to the markets as well. Other than that, all the sectoral indices, they are in the green as we speak, and mid-caps, they continue to be on our radar. A lot of up move across major sectors.
That's right. And Sonal, you know, just a while ago, you know, our sister channel, CNBC Awaaz, had put out an exclusive saying that there could be a development coming in as far as the rare earth magnet issue is concerned. And post that, you know, quite a few of those stocks are in focus and have seen a bit of an up move. Have a look at a name like GMDC. You know, you always associate that name with the rare earth developments. Also, some of the auto stocks, look at names like Sona BLW, Bharat Forge, even a Bajaj Auto, you know, who has consistently mentioned that being a significant issue. All of these stocks have moved higher in the session today. But moving on, it's a good time for a quick technical check on the market. Jay Thakkar from ICICI Securities joins us. Jay, good afternoon. You know, it's been a strong start to the December series. Do you feel, you know, from the current levels, we can move higher?
Hi to you, Vivek, and very good afternoon to you, Sonal. Yeah, of course, a very good day to start, and you know, the December series has a very good start. And the first reason I'll tell you, Vivek, is that coming into the December series, what rollover has clearly indicated is that the FIs have significantly reduced their index long short positions, so which stood at around 1.7 lakh crore. You know, Vivek, and directly on the day of expiry, when you see the rollover data, you come to know that the index shorts has been reduced to 95,000 contracts. So there was almost 75,000 contracts that didn't get rolled, and I mean, those were covered. And the rollover actually had fallen to 68%, which generally you find at 75 to 82% kind of rollover happening in Nifty, which actually saw this time around at 68%. That was point one. And point two is that Bank Nifty also did see, you know, the similar kind of short covering. So both of these indices have seen the short covering happening on the last day of the expiry. 70% is where the rollover of the Bank Nifty had happened. And interestingly, what was, you know, quite noteworthy on the options front was that Bank Nifty 58,500 to 58,000 always acted as a very crucial support for the November series and for the start of the December series as well. 58,500, I mean, acted as a very crucial support wherein you had the highest put base, and on the upside there was almost no call base until 60,000, you know, so you still have room for almost 500 points from here on as well. So Bank Nifty still don't have much of, you know, resistance, at least until 60,000 levels. And I think that the kind of breakout which we have seen coming in Nifty as well today, I think is heading towards 26,500 on an immediate basis. So our view in the short term continue to remain positive, and with this kind of a breakout and with this kind of rollover data, as well as the FI decreasing their short position on the index, as well as India VIX slipping sharply in past 2 days, clearly signals a short term uptrend in the markets. Hence, I have two buy recommendations. As a disclaimer, I would say that those can be recommended to clients as well. The first buy recommendation is on Tata LXI from the IT front. I think post the MSCI reject, the selling pressure here would be reduced. So Tata LXI trading around the levels of 50 to 30. I think this can be bought for a target of 5,500, and with a stop loss of 5,100. And second buy recommendation of mine would be on the Bajaj Auto. Bajaj Auto from the auto pack seems to be looking bullish. It has provided a breakout, and we can see a short covering rally happening here. The stock can reach towards the levels of 9,500 until 9,000 levels ahead. So one from the auto pack and one from the IT pack.
All right, take that point. Thank you so much, Jeff, for joining in as always. So those are some technical bets. The market at the day's high, and so with that, we'll slip into a short break. When we come back, we'll get chatting with the management of MapMy India or CE Infosystems on the other side to discuss their partnership with Zoho and the outlook from here on.
Invest.
Welcome back. MapMy India has announced partnership with Zoho CRM for location intelligence. What this means for the company and what is the outlook going forward? Let's get in Rakesh Verma, who is the CMD and co-founder of the company, to discuss more. Mr. Verma, good afternoon. Thank you so much for joining in. Can you give us a sense and quantify the opportunity? How many Zoho CRM customers are addressable because of this? What kind of conversion rates are you targeting because of this partnership that you have entered into?
Thank you for calling me on your show. Well, Zoho's CRM, as far as India is concerned, that's what we are working with them closely through the agreement that we have. What is a typical CRM from anyone or from Zoho's perspective? Their customers are all spread across the country, or they keep getting new customers. So our address system, which is part of our platform, gets integrated with Zoho CRM. And what that leads to is Zoho's customers or Zoho as a company, both can take advantage of it. Zoho's customers can see, okay, somebody has gone to McDonald's or some customer MapMy India, and then they can see who are the other customers close by. So it's a series of things that this location intelligence that provides to Zoho. Your question is related to how many customers. The Zoho's customers, they will it is their part to see that they are using the addressing system from MapMy India.
Right. So, Mr. Verma, as a follow-up to that, so does this now make you the default maps partner? So if a Zoho customer is using that particular app, are you the default map partner? Is Mappls the default map partner, or is this a non-exclusive agreement and they can continue to use other rivals, maybe like a Google Maps?
No, hopefully we are the default partners.
So there's no clarity on that?
Well, there's a business understanding always. I mean, Google may play a role with Zoho worldwide. I'm talking about India.
Okay, so in India, you're exclusive partners. Is it fair to say that and correct to say that?
Well, that's my understanding.
Okay.
Okay, Mr. Verma, I also want to understand. So this is Mappls platform location intelligence adoption, that has been onboarded by one particular partner, which is Zoho. So I want to understand, especially given the fact that you have a target of reaching close to 1,000 crore revenues by FY28. Are you in talks with other players, especially when you're looking at players from the BFSI space, the logistics space, and from this particular vertical, what is the kind of revenue contribution you're expecting going forward as well?
Well, you use the right name, BFSI. We are already doing a lot of work with BFSI. Now, bringing this partnership with Zoho, Zoho also has its own financial systems. And it will be a natural flow where we will be able to move through, or Zoho can take advantage of our location intelligence related to address. And I see a very good opportunity for our business to grow in the financial sector in the near future also.
So, Mr. Verma, then can you put a number to that in that 1,000 crore target that you have from FY28? If there is an indication of how much Zoho will be contributing, will you look at more partnership with Zoho? And, I wanted to understand, when do you see the synergies coming in from this partnership? Will it be as soon as FY26, or will you wait till FY27 to see the numbers trickling in?
I think we should start seeing very soon, but FY26 is almost going to be over in 3-4 months. So by the time the revenue starts kicking in, it will happen in FY27, 28. And let me also say, Zoho is not the only partnership we have. I think we have so many partners across every vertical. But this CRM entry for MapMy India is also very good. And I would say it will help our business grow. I think you're showing about this 1,000 crore and how much we will have business with Zoho. That individual customer-wise, we never talk about, because if we have reached almost like a 500 crores last year, that's built up over multiple customers. So Zoho will also become an important player in our achieving that 1,000 crore target.
Just then give us a sense of, then let me put it this way. Of course, it's not client-wise. Trying to understand the CRM opportunity overall for you from different clients. How big could that be?
I will not say just CRM. I will say location intelligence.
Yeah, location
That's
intelligence.
a better word. Okay, location intelligence can go into non-CRM also. So what we are expecting is from location intelligence business, it's very widespread. And that's the core of our business. See, if 30 years back or 25 years back, we thought that location will be the key driver for any businesses or for government or for consumer, which led to our making the digital maps, which led to bringing the addresses. So this is the sequence in which things are going. And I'm happy that we are participating with Zoho. Coming to a number, I'm sure this number will be in 3 digits as far as the pure location intelligence is concerned. I'm not talking just about Zoho.
Right. Mr. Verma, the other question is we've spoken in depth about the B2B part of the business. Let's discuss a little bit about the B2C adoption. We understand Mapple's app now has close to 40 million downloads. So Map My India, at Map My India, how are you looking, number one, to monetize this either via revenue model or an ad revenue model, or do you also plan to have some sort of subscription fees that can help monetize that aspect?
I think you asked a good question. Mapple's app is our flagship product, which what it does to our B2B business or B2B customers, they get more strength and they get more convinced that the app is driven based on the platform which is running it. So while the 40 million may go up to 50 million, 60 million, 100 million, we are hoping and we are planning direct revenue from that app itself. And you said both the things. One, the subscription, the other is the ad. Nothing stops us from going into that. But if you ask me today, I'll not be able to talk about it. Maybe if you ask me 3-4 months later, I'll be able to share some more information.
Okay, Mr. Verma, lastly, what is the kind of visibility you have, especially from government projects? There has been a keen interest shown by the government in terms of actually having a lot of these apps, especially which carry sensitive data. Are you in talks with government? Any kind of projects that you've received from them?
Well, one we already announced it, the Survey of India.
Right.
That's the pure government.
Right.
And we are setting up the platform for them, which will go, which they will be able to provide the entire data of India coming from different sources, hundreds of government agencies through that platform. So that's the kind of a work which we are doing, which is unique. Just like think of Aadhaar, the way it was set up, UPI and others. This is the geospatial part of the government's initiative, which we are doing for which we are doing for Survey of India. So this is how, as far as the government business is concerned, in general, let me say it very clearly, we are a platform product player. We are not a typical services player in the government business.
We take that point, Mr. Verma. Thank you so much for joining us and patiently explaining this new opportunity for the company and a lot more aspects about the business as well. That's the word coming in from Map My India. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned.
Welcome back to Midcap Radar. Well, this is our special segment, Midcap Spotlight. Winnie will focus on SMS Pharma. Winnie, over to you.
Hi, so SMS Pharma today is buzzing away in trade. Why? Because the US FDA has approved ranitidine tablets in 2 strengths for its associate company. Now, this drug has re-entered the market after 5 years, reapproval after the safety testing that has come in and manufacturing changes that were there. Previously, the concern was on NDMA impurities. What are NDMA impurities? These are some of these factors or some of these content that come into these tablets which probably could cause cancer in humans, and that is why there was a concern in terms of these impurities. Now, obviously, that means they've managed to actually control these impurities. While 2 reasons why the stock is buzzing. Not many players are being able to control these NDMA impurities that are there. And the other reason is when you look at the market size of this in the US, this is in the US, right? So $400 million is approximately the market size. Yes, there are a lot of players who are there here, 30 approximate players are there. But what analysts believe that each player will still manage to earn at least $2 to $3 million. And that is why the drug becomes important for SMS Pharma, given at a time when not everyone is able to control this NDMA impurities that are there.
Oh.
That is why stock is up.
Okay, 18% higher. It's a one-way move on SMS Pharma. Important drug relaunch in the market approved by the US FDA. Let's talk about the other stock on our radar, AGI Greenpack, looking to do a fundraise. Yash is joining in with more details. Yash?
Well, it's a large fundraise as far as AGI Greenpack is concerned. The size of the fundraise is expected to be about 800 crore for the company. As far as the breakup of this fundraise, which will happen through a QIP is concerned, the base issue is expected to be about 500 crore with an option to upsize of another 300 crore, putting together about 800 crore expected to be raised by AGI Greenpack. Now, as far as the usage of the funds, that is this 800 crore is concerned, that is expected to be used towards a new beer bottle manufacturing plant that is expected to come up in Madhya Pradesh. The investor roadshows and meetings for this particular large fundraise for AGI Greenpack are already underway, and the QIP could be launched as early as in the coming month, that is in the month of December itself. Why is this large? About 800 crore. The company's market cap is about 5,000 crore rupees, and to that the company now looks to raise about 800 crore through this QIP issue.
Well, thank you so much, Ash, for joining us and giving us all the details on this exclusive development that you're picking up from your sources. Well, with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon. Welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. And a good day turning up for the markets as well. 26,180-190 levels is where the Nifty is managing to trade at today. Right now, 1.17% of gain is what we're seeing for the Nifty. 300 points uptick. Day's highest point again. You know, you just see that minor blip that came in, and then again, there's no stopping the markets today. We'll watch out for the second half of the trading session, because where that's going to be headed, do we see a fall again like we've seen in the past few trading sessions, is something that we'll be keeping an eye out on. But support coming in from the Nifty IT, Nifty Bank, both of them as a sector wise overall are managing to hold on to very strong gains of more than 1% here. So look at Nifty IT also trading at the day's highest point. Nifty Bank also managing to hold on to strong gains. Now in terms of the Nifty Midcap, or the broader end of the market, that's doing well in tandem with the benchmark indices. Nifty Midcap up almost 1.2% as well, 1.1% as well right now. So keep an eye on that one. Small cap too is managing to hold on to gains of 1.2% in today's trading session. So good day coming in for the markets. Advance decline ratio today clearly in the favor of advances versus declines, so no complaining on that front. Good day for the markets. But this is a show where we solve all your stock related queries, and we do have our experts joining in with us today. We have Saumil Mehta, head of alternate research, capital market strategy at Mirae Asset Sharekhan, as well as Sachin Jasuja, who is the head of equities and founding partner at Centricity Wealth Tech, to answer all the stock related queries. Sachin as well as Saumil, good afternoon. Thank you so much for joining us on the show. Let's get started with those stock related queries. We have the first query. This is an investment query today, and it's from Mehul Shah, who's writing to us from Ahmedabad. Wants to know if they can look to invest and buy Tata Capital at current levels. Sachin, afternoon. What's your view on Tata Capital? Should the viewer buy them? Long-term query as well as short-term, both views.
Good afternoon, and thank you for having me. So Tata Capital is the third largest NBFC. They have very high quality NBFC in India. So recently, the IPO came, and I think it is reasonably priced. The way the company has grown, it has got the diversified, loan book across retail, SME, corporate, and they have been growing by more than 30%. If we compare the valuations with the largest of the players, like Bajaj Finance, Geofin, or even Cholamandalam Finance. So I think every company is trading, at price to book value more than 4. If you compare with the larger names like Bajaj Finance and specifically with Cholamandalam Finance for the, peer comparisons, if we can take. So that Tata Capital is trading at around 3.8. So very comfortable valuations coming from the parent group, strong parent group Tata, and a lot of headway for the growth. Even the credit uptick is already coming in India from that perspective. So from short term perspective also, we feel that the base is there. It is trading near the IPO price, and the company can continue to grow by more than 15 to 20%. So even for the long term perspective, I think one can bet on Tata Capital.
Okay, good on the long-term, short-term perspective. Valuations also fine versus peers, and a good, obviously, brand that comes in Tata Group. So that is there as well for Tata Capital. Saumil, I know it's very short in terms of charts, but any view or opinion that you have of Tata Capital?
I think big name, the peers are doing great, NBFCs are doing great, the entire pack is doing great. In the very short term, I'll be expecting a target of around 340, 350. It has just, broken out of a small inverted head and shoulder pattern on the hourly charts. I don't have much data, but I think positive on the stock, and I'll be expecting good rallies on the upside.
Okay, thanks for that view on the technical front as well. Not much in terms of charts, but yes, a good name that comes in from Tata Capital. Next query for today, we have Venkat Sai, who's writing to us from Mumbai, holding shares of IRCTC, price as 921 rupees per share. He's asking if he should average or exit and book his losses. What's your view on this one, Sachin?
So IRCT is a monopoly, right? So anything which is controlled by government, or you can say monopoly play, so there is always some risk over there that if some kind of disruption comes in or private players can come in. So that kind of risk will always be there. So, but yes, in terms of growth, if we can say, I think that has been quite muted in last 1 year. But for last 3-4 years, the growth has been good. There is some news that the payment gateway, linkage can happen through IRCTC in coming quarters. So the management has already given guidance around that. If that happens, I think it will bring the new stream, new revenue stream for the company. Considering that, one can take some allocation, but we are not very comfortable in terms of valuation at this price. Even if we have seen good correction over there, I think these kind of stocks, if we find at a reasonable valuation, then only one should enter.
But should the viewer sell this one then right now or continue to just hold it?
Because it has seen good correction from the top, feel like that, if the management already given the guidance in the first quarter of 2026 that the payment gateway should start kicking in. So accordingly, I think some uptick may come at that point of time. I think it should be like they should wait for some time and then they can exit.
Okay.
So for a long-term perspective, we are not going ahead. But yes, in a short term, he should wait for some time.
Okay, wait for some time before you look to actually get out of the stock. Saumil, your view on the charts and technicals, given that the stock has not done anything in the last 1 year, right? It's, just come down 15-20% approximately. What should the viewer do? Exit, average, what is it?
I think exit would be my strategy. The railway stocks are not doing that great. RVNL, IRCTC, not doing that great. Low top, low bottom formation. Since August, September 2024, this stock has not been able to go above 200 daily moving average, struggling to be above 20-40 daily moving average. Trend is negative. I'll be expecting a target of around 650, first target on the downside. And then if it does not sustain there, then the next level would be around 600, 580 levels. So negative on the stock, exit would be my strategy.
Exit would be your strategy here as well. Let's move on to the next query. We have Shiv, who's writing to us from New Delhi, holding Titagarh Rail Systems at a price of 887 rupees per share, asking whether he should hold or sell at the current levels. Your view on this one, Sachin? Titagarh Rail, they have had some execution issues. So what should one do?
So again, a railway stock, so see, we have seen from the government side also on the budget side. So the expenditure has been stagnant last year. So they have grown from 2.5 lakh crore to 2.60 lakh crore only. But 3-4 years back, we had seen the substantial uptick in the capex from all the companies. Even the budgeted amount was higher. We jumped from 2.10 lakh crore to 2.60, almost 2.50 lakh crore. So there we saw these companies, all the railway companies, performing very well for 2 to 3 years. From maybe FY22 to FY24. So obviously the froth was there in the valuations. Now that is almost, done with. All these stocks have corrected very well. Some companies have come at a reasonable valuation, but some are still trading at slightly expensive valuation. You rightly said that the execution, capabilities issues were there. Some external factors were there, but Titagarh Wagon and Jupiter Wagon, all these companies, I think they will continue to get orders on the new wagon manufacturing side. Again, we are not very comfortable at the valuations at this level. I think some bit of correction can again come in this stock. But if somebody is holding that stock and the stock has already corrected by 5-10%, it's not a bad stock. It's at kind of a reasonable valuations. The investor should hold for some time to see some uptick, and then they can review it again.
Okay, hold for some time, then maybe review it again. But as of now, hold. It's not a bad stock right now. Saumil, your view for Titagarh Rail. Should the viewer hold or maybe sell? They bought it at 887.
At this point of time, it has been forming a triangle pattern on the weekly charts. Great stock to be in at this point of time because this triangle is, expecting this triangle to break on the upside. Now the resistance here is 200 daily moving average, which is around 908, 910 levels. So if you want to take a new position, wait for the breakout about 910, 920, let it sustain, and then you can take a position. But if you have the position, I think you can exit and wait for the breakout. If once the breakout has happened, I think then we'll be we'll have a confirmation that a rally is started on the upside. And if it breaks out, the next level on the medium term levels would be around, target would be around 1120, and the next level would be 1370. So big levels big targets to watch out for. But at this point of time, exit, wait for the breakout.
exit, wait for the breakout, but then there is, once that breakout comes in, we can re-enter, and there are levels Saumil has mentioned as well. Thanks for that. But on that note, we're actually going to slip into a very short break, but here's a quick programming note for our viewers. If you are looking for the big bets and market themes for 2026, CNBC TV18 Access gives you a direct access to White Oak Capital AMC's Ashish Somaya as well as Prashant Khemka as they share their winning market themes and actionable investment strategies. Ask your questions live on 28th of November at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com. Access plans. Welcome back to your stocks in CNBC TV18. We still have with us Saumil Mehta as well as Sachin Jasuja, who are answering all the stock-related queries that you all have sent us. As of now, markets are managing to hold on to good gains. 26,200 is where the Nifty is at, so we'll be keeping an eye out on that one as well and where it's going. We've seen it cross the 26,200 mark right now, so that is interesting to watch out for. Keeping it going with those queries then, we have the next query that's come from Jay, who's writing to us from Gujarat. He's holding 100 shares of Vedanta, price is 300 rupees per share, and wants to know both short-term as well as a long-term view for Vedanta. Sachin, for Vedanta, obviously the demerger talks that have been around as well. So, what's the view now on Vedanta right now? Short-term, long-term, both story.
So I think because of the demerger news, the stock has done really well. Some value unlocking can happen. Even it was a upcycle for the commodities for last 1 or 2 years, and the stock has done really well. So I think if investors have made good money over there, because in commodities it is never a long term investments. You have to get into a stocks where there is a down cycle, and maybe you have to book at some kind of up cycle. You can't time it at what level it can reverse. So I think the partial profit booking is I think suggested at this point of time, and if the momentum continues for some more time, I think even the full booking can also be done. So from the short term perspective, maybe partial booking, and but I think the stock has done well. The commodity cycle is up. If the investor is okay with 60-70% kind of a return, and can can go to a pure play companies like Hindustan Copper where the industrial demand is higher, so they can shift to some other names also where the volatility is less.
Okay. And your view on this one, Vedanta, what should the viewer do? They bought it at a good price, 300, now at 500. Somil.
Metal stocks are looking good. Vedanta definitely in the upcycle, trading in a channel pattern, have taken support at 40 daily moving average, has taken support at the lower end of the Bollinger Band on the daily charts. Great setup. Hindalco would also be my preferred pick. But Vedanta, very specifically, I think the stop loss should be around, for short term, the stop loss should be around 490. That will be my stop loss. And on the upside, I think the next target would be 540, 550 levels in the very short term. But in the medium term outlook, the stop loss should be a little lower on the weekly swing low, which is 467, little deeper. But my targets on the upside would be much higher, higher than 650, 670 levels.
Okay, let's move on then. And Nifty Bank also, let's keep an eye out on that one as well. We have Nifty Bank at around 59,500 levels. Keeping it going with the queries then. Today's highest point with the Nifty Bank. But Nikhil is writing to us from Mumbai. It's an investment query. He's asking if he should buy Seagull India for the long term at current levels. Sachin?
So Seagull India, I think, came with the IPO a few months back. It's an EPC play into roads, railways. Now they have started, they have started getting orders into the renewable side also. But when you look at any EPC play, these are more of contract-based kind of things, and there is always uncertainty that, like it happened with Seagull, that due to floods, some projects got delayed. Then the results were not up to the mark. And the management has also, revised the guidance. I mean, they were saying 15-20%. Now it is 10 to 15% guidance they are giving. So what we feel like in this kind of, there is no strong mode in this kind of business, and the company is still small, and these are early days for the company. So what we feel like that, one can avoid, for a long-term investment, one can avoid, one can review it after every quarter, can see how the company is evolving. But the bigger names like, L&T, Thermax, which are largely kind of capital goods name, I think they are, because they have got some recurring incomes also. So I think the longevity of earnings is always there with the large companies in this segment. So would prefer that rather than the smaller companies into EPCs.
Rather prefer larger companies than smaller companies. Can wait and watch maybe later on in terms of the performance review, quarterly basis, how that's doing. Right now, avoid. On the technicals, Seagull, Somil, what's your view? Given that, maybe it has just seen a downward move in this last 1 year since listing. So does it become attractive maybe to enter right now on technical fronts?
No, Vinny, I won't go with this stock. It's been struggling to go above the short-term averages as well. 20-40 averages, not been able to go above that. It's been trading below, 200 daily moving average since December 2024. So which is not a very good sign. I would exit the stock. Probably go into some large cap stocks, as you mentioned. L&T would be awesome. I think on the upside, if you want to really enter the stock, the right time to enter the stock would be 280, 290 levels would be the right time, just above the 200 daily moving average, and then revisit the stock above that, and then you can re-enter. But right now, exit would be my strategy.
Exit would be the strategy there. Let's move on to the next query. We have Bhuvan Sharma, who's writing to us from Chandigarh. 300 shares of JSW Cement, 140 rupees is the price. What should he do? Continue to hold or sell? Sachin?
I think he should continue to hold. Reason being, one, the JSW is a quite aggressive company. They have shown their execution capability. Now, this particular industry is, there are dominant players: Ultratech Cements, Adani, Dalmia Bharat, Shri Cement. So you can say these are 3-4 largest player, and the prices are already down in cement size. I think intentionally these are down so that the smaller players, can't sustain well. But JSW comes from a strong parentage. they have the plans from going from 20 million tons to 60 million tons in next 5 years. They can become a dominant player of the industry. I'm 100% sure that they will also go for inorganic growth. They will be acquiring some companies like Ultratech and Adani has been doing, and the stock has done. I think it didn't do anything in last 6 months after the listing, but they raised money. They will reduce the debt. They will also go for pan-India expansion. So because the capability is there with the management, we feel like that the company should do well. Optically, it looks slightly expensive in terms of valuations, but yes, I think some leap of faith we have to give it to the management, and that is the reason they haven't done their business.
Okay, so continue to hold here. And Saumil, your view on this one? Should they continue to hold this or sell now?
I think I will switch to some larger names like Shree Cement or Ambuja Cement. Those are my preferred pick. For JSW Cement, I don't have much chart, but it's on the downtrend on the weekly, monthly chart. So absolutely exit on the stock.
Okay, and let's move on to the next query. We have Arpit Garg, who is writing to us from Noida. 150 shares of TCS, price is 3,500 rupees per share. Wants to know whether should continue to hold or exit at current levels. Saumil, on the charts, should they look to exit right now?
TCS is one of my favorite picks in the IT at this point of time. Has just come off 20 and 40 daily moving average. It is inching towards 200 daily moving average. It has completed a corrective cycle on the monthly charts, which is a very good sign. Monthly positive close. I'll be expecting a short-term target of around 3,300, and then the next target would be 3,500. So if you have this stock on your portfolio, keep holding it. Even in the short term, I think the stop loss should be around 3,100, and the targets in the short term would be 3,300, 3,050. So keep holding the stock.
Okay, keep holding the stock. That's the word on TCS right now. Let's move on then to the next query. Sachin, we have Vansh who's writing to us from New Delhi, holding 50 shares of HBL Engineering. Price is 650 rupees per share. Continue to hold or look to sell this one?
So there is a disclaimer: our investors may hold this, stock. So we are quite positive. We have a positive coverage on the company. And see, HBL Engineering is into industrial batteries. Almost 70% of the revenue comes from industrial batteries, where lithium ion is also a growing, and from the railway defense also they have started getting orders. So what we feel that segment is very sweet. There are strong tailwinds in that particular industry. The valuations are reasonable. The company has been growing. It has become a multi-bagger in the last few years, and I think it will continue to grow. So I think one should hold it. If somebody is invested, even if they are making good money over there, I think there is long runway for growth for this company.
Okay, long runway of growth. Continue to hold the stock. That's the view coming in there. But Sachin as well as Saumil, thank you so much for joining us and helping our viewers solve all the stock-related queries. Viewers, thank you so much for sending us your queries as well. Keep sending us the queries on the email address that is at the top of the screens for you all. But with that, we are absolutely out of time. Thanks so much for tuning in. Up next, we have Closing Bell to take you through the last hour of trade.
lines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A green looking screen across the Asia Pacific, every single benchmark index trading with gains.
Still got one interview left, so I don't think it would be prudent to give any hint.
The 20-day moving average, which is 25,847, 25,840 on the Nifty. You got the Nifty Bank, which is up about 0.25%.
Been positive on IT services for the last 3 months or so.
Gave the guidance of 15%. We should be growing at around 17-18%.
We've seen Nifty staying on those levels at which it started, 231 points higher on the Nifty as we speak.
Steel Secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward.
Few stocks that are trading in the red today, and that is Bharti Airtel.
It's almost a 300-point uptick on the Nifty as we speak. We are above that 26,150 mark comfortably.
Okay, well, it takes one day, right? And you're almost counting down to the number of points you're away from all-time high levels for the Nifty. And that is basically the dichotomy in the market. It's basically been prefaced with every question we've asked over the last 2-3 days. Markets near all-time highs, but the broader market does not feeling, or rather giving you that same kind of positive sentiment out there. I'm not sure if today is either. With the kind of stocks which are going up, which I'll get to in just a bit. This is Closing Bell coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surabhi and Reema here in the studios. Nigel is joining us from the newsroom floor, guys. Afternoon.
Hi, good afternoon, guys. I really don't know if anyone has any complaints because what Prashant was saying that yes, broader markets underperforming. One day was the Bank Nifty underperforming. But none of that. It's very well rounded, lots of participation, and it's up and away for now.
We're getting quite the lift from the global markets. So Asia closed out with a gain of about 2%. Europe is up about 0.5%. Even the Dow futures, after adding about 650 points yesterday, the Dow futures is up 100 points. And plus, even the geopolitically, crude prices have come down. So you've got that macro tailwind. Let's see if there is any progress between Russia and Ukraine. So all that on the sidelines is also, adding. And Nigel, today, all your, heavy hitters, HDFC Bank, Reliance Industries, ICICI Bank, all contributing.
Yeah, that's right. The boys are looking good, actually. The big hitters coming in there. I wish in the test matches, well, all our boys did well. Unfortunately, we go down 2-0. But let's ignore that. Let's focus on the markets. No cricket today. But it appears, I think, one thing that I've been saying both on Bazaar and Closing Bell, that November is when we hit all-time highs, even when we were at 25,500. We're there, this week itself. So, pretty okay. But the breadth of the market, that's the point. Even on days when we were ending in the green, the breadth of the market was negative. Today, that's good. So it's a good start to the December series. And hopefully, Santa comes to town for the Bulls.
Santa comes to town. And will not very far away, right? So we'll see and track that one. All the sectors are up on your screen. And there's a nice rounded 1%, 1.25% kind of gain across the board. Let me just quickly run you through what's coming up here in terms of the show. So, of course, bullish global cues and some peace talk, some chatter at least around Russia, Ukraine. Near the Nifty, of course, near all-time highs. It's been around all-time highs for a while. All sectors in green. Tata Motors passenger vehicle, new launch there, Sierra. We'll tell you how that fills a critical gap in the company's portfolio. And, of course, some management commentary there as well. Steel is looking up. We had the Steel Secretary yesterday. We've, of course, been telling you key takeaways from that. Market expectations perhaps now rising after that interview that there perhaps will be the protection which will be which will come back again shortly. Now, a rare earth magnet manufacturing scheme could be in the works. So apparently it's going to come up before the cabinet, and our colleague from CNBC Awaz will join us in just a bit. And the other one, of course, is what happens to oil companies and refiners. Chennai Petro is down 12%. MRPL is taking a bit of a knock. It's a big what if the Russia-Ukraine situation cools down, ceasefire, temporary, whatever, we'll see. But, that's another one which Sonal will address in a bit. How should you position yourself in the last hour? Mitesh is with us with that. Mitesh, take it away. What would you do?
All right, Prashant. So I think, very clearly the market remains extremely positive, and we are close to the earlier highs. So, today I was saying that in case you get a dip to about 25,800, 850, that's the buying opportunity. We got this 25,842, but I never expected the market to rebound so strongly and nearly 300 points up. So that's a positive sign. So trade with long buys. Only on the index, because you're close to the earlier highs, you may not want to take a fresh position right now. If you have not taken in the morning, which a lot of us also missed, I think then you have missed this index trade. But on the stock side, I have a buy on Bajaj Auto with a stop at 91.34 for targets of 92.50, and Manappuram is a buy with a stop at 282.5 and a target of 290.
We'll come back to you, Mitesh. For now, let's get to a big story that we've picked up from CNBC Awaaz. Lakshman, in fact, has source-based information about how the government is working towards rare earth magnet manufacturing scheme. Lakshman, what are the details?
जी दरअसल आज कैबिनेट की बैठक हो रही है। जो मुझे सोर्सेज से जानकारी मिली है उसके मुताबिक गवर्नमेंट रेयर अर्थ परमानेंट मैग्नेट के लिए एक खास स्कीम को मंजूरी दे सकती है। ये स्कीम दरअसल ये प्रोडक्शन लिंक्ड इंसेंटिव के लाइन पे होगा, जैसे अलग अलग सेक्टर के लिए सरकार ने इंट्रोड्यूस किया है। तो रेयर अर्थ परमानेंट मैग्नेट के डोमेस्टिक प्रोडक्शन को बढ़ाने के लिए प्रोडक्शन लिंक्ड इंसेंटिव स्कीम के प्रपोजल को कैबिनेट आज मंजूरी देगी, इसकी संभावना है। ये स्कीम 7 ईयर्स के लिए होगी और इसमें 7,300 करोड़ रुपए का आउटले किया गया है। और इस स्कीम के तहत रेयर अर्थ मैग्नेट की माइनिंग से लेकर के उसकी रिफाइनिंग तक, उसके प्रोसेसिंग तक और इसको मेटल ऑयल में एलॉय में चेंज करने तक की पूरी प्रक्रिया इसमें शामिल होगी। जो कंपनी इस प्रोसेस में शामिल होगी, अपना प्रोडक्शन बढ़ाएंगी, वैल्यू एडिशन करेंगी, उनको इंसेंटिव स्कीम का फायदा दिया जाएगा। और ये बता दूं, गवर्नमेंट का टारगेट ये है कि इस रेयर अर्थ मैग्नेट के डोमेस्टिक प्रोडक्शन को सालाना ईयरली 6,000 टन पर ईयर तक पहुंचाना है, उस कैपेसिटी को जनरेट करना है। तो उसके हिसाब से गवर्नमेंट ने इस स्कीम को तैयार किया है और पूरी कोशिश ये है कि चाइना से इंपोर्ट पर डिपेंडेंसी कम किया जाए। बता दूं कि 60% रेयर अर्थ का पूरे ग्लोबल में माइनिंग चाइना अकेले करता है और 90% रिफाइनिंग चाइना अकेले करता है। और जब अप्रैल में चाइना ने इस पर कुछ रिस्ट्रिक्शंस लगाए थे तो डोमेस्टिक इंडस्ट्री को काफी ज्यादा परेशानी हुई थी। उसके बाद सरकार ने इस स्कीम को तैयार किया और आज कैबिनेट से मंजूरी मिलने की संभावना है।
Thank you, Lakshman ji. So big manufacturing push likely to come from the cabinet as it meets later today to turn India from a rare earth magnet importer to become a fully self-reliant producer. Sudeep Bandyopadhyay is now joining in. Sudeep, you can see some of these stocks like a GMTC. That's the one where you can see the biggest impact. That's up close to about 7%. But any play on EVs, electronic manufacturers, or a GMTC, renewables, defense, all those which depend on rare earth, because now this, we are going to strategically own this, important resource eventually.
Well, GMTC definitely, has got, to benefit if once the scheme which government is expected to announce is introduced. Apart from GMTC, there may be some other beneficiaries, smaller beneficiaries, and somebody new also may come in. But as things stand today, from the mining perspective, GMTC should benefit. You talked about the EVs, EV players, and other users of rare earth. Of course, if they are not dependent on China or any external sources for rare earth, and they can source it locally, definitely that brings certain amount of certainty to their business. Why go very far? All the biggies in the automobile industry, two-wheelers, whether it's a Bajaj or a TVS, all of them, Ather, all of them does benefit in a big way, because without rare earths, their production of EVs will stop, and we definitely don't want that scenario. So this is a very timely intervention. Only we can wish that it had happened earlier, but nonetheless, it's a good development.
It's actually a good day for metals overall. I mean, now these stocks are quite excited because of the news that Lakshman just shared with us, that perhaps more incentives for those who are going to be looking at mining rare earths. But even otherwise, good afternoon, Sudeep. Great to have you. And even otherwise, I mean, look at metal stocks overall. They were doing very well. Steel has been a big story, and I'm sure you followed that. We've been tracking it since yesterday. And, Nigel's been telling us that it's confirmed now. The secretary himself is saying that there could be some sort of an additional, protectionist measure, maybe, safeguard duty in another form that could be coming soon. And plus, global markets are feeling good. So, in metals, apart from rare earth and maybe GMDC being a play, anything else you're buying afresh in metals, Sudeep?
Well, I think the entire steel sector is definitely excited. There was a confusion when the earlier policy expired on 6th November, and today we are operating in a vacuum kind of a scenario. Hope this clarification by the steel secretary was very timely and useful, and I think the steel industry is breathing a sigh of relief. So yeah, I think one can definitely look at JSW Steel. We do like it. We also like Tata Steel. From a long-term perspective, both of them look good. And I think if the duty gets in place for a slightly longer period of time instead of just a 1 year kind of, if it's a 3 year kind of a term, I think it will be much more reassuring. That's what I would say. Overall, in the metal space, we do like the Vedanta for quite some time for multiple reasons, and we continue to maintain our view on that.
All right, just one point, guys, since we're tracking GMDC, just requesting our director to pull up a 3-month chart of GMDC. The stock in early October, if I remember correctly, it was at around 650 rupees. That stock corrected in a matter of 45 days to around 480 rupees just yesterday. And now, in fact, it's bouncing back. So yes, the rare earth opportunity will be there. It will not be seen in 26, 27, and possibly even 28. It's a story 3 years down the line, and the core lignite business has been struggling. So just keep that in mind. There's a tailwind out there with regard to rare earth, but keep in mind that, in fact, it will not come in the next 2 to around 3 years as well. And the core lignite business is struggling a little bit. Just want to make that limited point, guys, with regard to GMDC. It's not a stock for the faint-hearted. It's a stock that moves around very, very violently, and it had corrected a smooth 20% very, very quietly in, I think, 25, 30 sessions on. So just thought I'll put that on board.
A point we cannot forget, Nigel, yes. Glad you brought that on the table, because when the rare earth crisis started and then there were some news reports indicating that maybe GMDC is going to be, coming out with a bigger plan on this front, the stock did rally. That's 3 months. Let's pull up the 1 year chart once again on GMDC. It'll illustrate the point that Nigel is making. Extremely volatile stock and very sensitive to all kinds of news flow. And from the peak, it's down about 20-25%. So that is GMDC, the rare earth story, and metals in general, which have been doing very well today. Let's move on to something else. Tata Motors, passenger vehicles. Now, the stock last time I checked was up 1%. It opened the morning substantially firm, almost 2.5% higher. And there is a great anticipation around Tata Motors now. Let's pull up a longer term chart. One of the worst performers of the year. Stock's been down almost 50%. And now comes the launch of Tata Sierra. Auto enthusiasts would know this is no strange name. I mean, an epic SUV is making a comeback, which is making the market sit up and take note. Yeah, those are the visuals from the launch that took place yesterday in a market that is absolutely tilted towards SUVs. Will this mid-segment SUV really turn around the fortunes of Tata Motors' domestic business? Let's put that question to Sudarshan. I'm sure he's been thinking only this over the last 48 hours. So I'm sure you've done the analysis, spoken to people, spoken to analysts. What's the verdict?
It's a big launch for Tata Motors passenger vehicle, and that to Sierra, it's a known name. Even in the older version, we had Sierra. Now it's reborn. And if you talk about all the SUVs that Tata Motors passenger vehicles PV has, it's the one which has the maximum number of features. Now introductory price is 11.49. That is looking aggressive, and even like it's attractive as well. What about the bookings? It will start from December of 16, and deliveries are expected to start from January mid, that is January 15. While most of the brokerages remain cautious on the stock, but they have a very positive views as far as Sierra goes. So Nomura has written a note on the stock. It maintains neutral rating. Target price is 395 per share. But it says this car carries forward the Sierra design into a modern avatar. Even pricing is aggressive, and even given the base variants are too feature loaded, and now they are expecting this Sierra to have bookings of at least 10,000 units per month, and it seems well positioned to benefit from the consumer shift that we have been seeing over the last few years, that most of the consumers are now have a preference towards SUV. And now this could create a meaningful upside for PV growth expectations we have from Tata Motors Passenger Vehicles over FY 26-28. Overall, it's looking very good for Tata Motors Passenger Vehicle. For a standalone business, it can be a big booster, but everyone knows that JLR is still struggling. That's the reason. That's one of the main reasons why all the brokerages remain cautious on the stock. If you take a look in 2025, it's the biggest underperformer, down more than 51%. But today, on the back of this launch, it's trading higher, up around 2%.
So tomorrow we'll talk to you about another SUV. I'm telling you from now itself. And you know which one I'm coming to, right? It's the battle of the SUVs because the M&M flagship XUV 700, the EV version launches tomorrow. Is hotter than ever. So you be ready. SUV conversation is not over. But for the timing, let's hear out Mr. Shailesh Chandra, CEO and Managing Director of Tata Motors, who says that the company is eyeing a double-digit growth this fiscal year and is expecting the SUV market share to touch 22 to 25%. So Tata Motors, Mahindra & Mahindra, exciting times. Hear out the Tata Motors management.
Today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that. November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. FY 26, I can only say that we are definitely eyeing a double-digit growth. But in the first half, our growth rates were not that great. But in Q2, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth.
Okay, that's Tata Motors PV. That's an ambitious-sounding management and big plans for the car ahead for the Sierra. Let's just do a contrast. Tata Motors PV in the last 1 year is down 50%. M&M in the last 1 year is up about 23-24%.
Tata Motors too, because it got demerged, right, into passenger vehicles and CV.
Yeah,
so when passenger vehicles listed, it was about, I think, 363 around that price. So I'm not sure if it's down.
Yeah, it's not. Yeah,
it's not down.
It's not down 50%. Yeah. I mean, the adjusted though, but this business, I guess, is been
flat. It's not done. It's underperformed and it's not done too much because of the JLR issue.
Overall, I mean, the stock, even in its earlier combined avatar, did not really return value for shareholders this year. M&M did. Now, can that change? Because now you can do a pure play PV play with Tata Motors if that's what you choose to do. And then there's Mahindra & Mahindra, which has been the leader for many years. So Deep, that question to you, Tata Motors PV or M&M? If you want to buy something afresh, which stock will it be?
Well, it will be definitely M&M. And we have been recommending M&M for the last almost 2 years now. And we have been proven right, and we continue to maintain our view on M&M. I think there are multiple growth levers in M&M, whether it's the SUV business, the tractor business, which has started doing very well. And I think with the rural income increasing, I think the potential is significant. Their EV segment also has started really performing and outperforming. So I think absolutely no doubt. Whereas as far as Tata Motors PV is concerned, I think, of course, this launch is very interesting. We'll have to see what kind of numbers they get. And they definitely needed some of these kind of excitement and fresh launches. But the problem will be JLR, because there is too much of pressure on JLR, both in China as well as Europe. And I think, things are not looking good at this stage as far as the overall Tata Motors passenger vehicle consolidated revenue, margin, profitability. None of these parameters are looking good at this stage. So we will be definitely cautious.
Okay, all right. Sudeep, wanted your, your take on refiners. And Chennai Petro is a stock that we're looking at. A couple of refineries under considerable pressure today, likes of CPCL, MRPL. Sonal joins us to help us out, to give us a sense about this fall today. Sonal?
MRPL, these stand. They are in focus today. Both of them down considerably, anywhere between 4 to 10%. But do remember, these stocks have seen a big up move as well. In last 3 months itself, MRPL is up 51%, Chennai Petro is up 67%, and this is on the back of good Q2 performance that both these companies reported. Now, this is because of stronger refining margins that came by in the quarter gone by, and this is something which continued till last week as well. In fact, Chennai Petro did indicate in Q2 that cracks have improved from Q1 1 to quarter 2, and this is something which has continued in quarter 3 as well, and they were running at 114% capacity utilization in the quarter gone by. Do remember, Singapore GRMs, they've almost doubled in last 1 month to levels of $13 per barrel. But there were some commentaries which came by. In fact, we spoke to G Shipping yesterday, and they indicated that strong refining margins are keeping tanker demand upbeat. So right now they're seeing diesel margins or cracks anywhere between $30 to $35 per barrel, sometimes reaching levels of $40 per barrel as well. But if Russian supply re-enters Europe, if there's a ceasefire and Russia is allowed to supply to the world, and especially Europe, these margins would come down, because right now they are at unsustainably high levels and they are expected to come down substantially. So yes, there is a fear that margins would come down, and also these stocks have already run up so much, right? And if we look at the valuations, MRPL trades at 12.8 times FY27 EPS, Chennai Petro trades at 23 times FY27 EPS. So maybe they are factoring in a lot of up move from here on, but there is a fear of margins coming down.
All right, thanks a lot for that, Sonal. Sudeep, what do you make of them? As Sonal said, there's a risk now. There's been a big party. Refining margins had spiked up big time. But now there's a risk to that. What would you do?
Absolutely, Nigel. I think the party is probably going to get over. The noise we are hearing from the global media, Ukraine, Russia, there is some kind of a ceasefire, which is, I believe, likely very soon. And if that happens, and one of the main conditions of the ceasefire from Russia's side is allowing them to sell their petroleum and gas. So I think once Russian supply enters the market, margins will come down significantly. And I think we will be back to where we were 3-4 years back, pre-22 situation. So we have to be careful. And look, the valuations wise, I think they are richly valued if you consider the possibility of margin coming down. And I'll be very, very careful touching these stocks at this stage.
Sudeep, thank you very much for joining in. Market's still going strong, up 300 points in the Nifty. We'll get into a break. On the other side, Ronak Onkar of PPFAS Mutual Fund will join in. Stay tuned.
Welcome back. You're with us on Closing Bell, and as always, it's that time of the show where Hormuz joins in with some of the interesting buzzers, the movers and the shakers. And today the whole market is moving, Hormuz, so I'm sure you have plenty of exciting names on your list.
Well, in an era of WhatsApp, we start off with a stock that starts with a name called SMS. So that's the kind of stocks that are moving today, everything that's moving in the market. SMS Pharma, of course, it's a news flow related move today. It's 18% higher now on the stock. The biggest single day gain since June of 2020. The volumes are the highest in 3 months as well. We have had more than 1 crore shares that have been traded on the stock. A 20-day average of just around 5 lakh shares. It's also convincingly moved above its 50-day moving average of 281, and it's the 4th straight month of positive returns for the stock. It's had a good year so far, up around 35% on a year-to-date basis. Responsive Industries is the other one on the list today. Snapped an 8-day losing streak on this 15% up move, the biggest single-day gain since January of last year. The volumes here saw a very sharp spike after noon, and since then the volumes currently are the highest since February of this year. They had 26 lakh shares that have been traded on Responsive Industries today. The 20-day average is just close to 1.5 lakh and moved above all of its key moving averages, but has remained an underperformer this year, still down 11% on a year-to-date basis. Natco Pharma has made a very big move on the upside today. The stock is up almost 10%, has extended its gains now 11%. It snapped a 3-day losing streak, the biggest single-day gain since February of last year. Volumes are the highest since April of this year. They had close to 1.5 crore shares that have been traded on Natco Pharma today. The 20-day average is just over 8 lakh shares. So gains on very strong volumes on Natco Pharma. The stock has moved above its 100 and its 200-day moving average as well, but it's been a big underperformer this year, still down by 1/3 in 2025 despite this 10% up move. And lastly, Sonal just spoke about Chennai Petro on the downside. The biggest single day fall since July of last year. Has declined in 3 out of the last 4 sessions, but as the way the stocks have moved on the upside on very strong volumes, Chennai Petro's fall is not on very strong volumes. 60 lakh shares have been traded. The 20-day average is also 60 lakh shares. So it's not something that the fall has been on very strong volumes. The 50 DMA on the downside is now at 860, still a while away from there, but it's had a pretty good year so far. Despite this fall, still up 44% on a year-to-date basis is Chennai Petro.
Okay, all right, Hormuz, thanks very much for that. Actually, many of these names, right, especially in the upside, I'm just looking at, it's a 300-point up kind of a market. But first of all, on the Nifty, if you look at it, it's kind of very dispersed. You've got lots of, very few things are down. Maybe that is something you can say clearly for the market. But in terms of what is up, it's 1.25, 2. JSW Steel is the biggest gainer with about 3.5% gains. Now you look at the broader market, right, and just the kind of names, and it's not a very long list of big volume-led gainers, but it's an unusual list. Names like Optimus, you got Sandhar, Goldium, Jamna Auto, Black Box is up 5%, JTL Industries, Responsive Industries, Best Agro, Ganesh Ecosphere, which is completely bombed out from the highs, Tourism Finance Corporation, PG Electroplast, Reliance Power, SMS Pharma, Hormuz mentioned. So it's not the usual, more well-known part of the market. I thought I'd just quickly mention that. So yeah, I mean, but if you look at if you track the index and where it is, of course, we are tracking the number of points it is away on that live tracker from all-time high levels. Ronak Onkar is with us, Head of Research and Fund Manager at PPFA's Mutual Fund. PPFA's, of course, had their Unit Holders Day on the 22nd. Ronak, good afternoon. Good to have you with us here. I want to start with, of course, the big one, which is you're launching a new fund, large cap fund, right?
Yes.
So talk to us a little bit about the reasoning behind it, because you're sitting on a lot of cash and you already have a fund which you can sort of, you can deploy in that fund. So what's the need for a new one?
Prashant, thank you for inviting me. So definitely, if you have seen the video on Saturday of our AGM, we described that this fund is actually completely unlike our FlexiCap fund. The FlexiCap fund is a very dynamically managed active fund, which has a global exposure, and we will take a lot of active share in stocks that we care about. and we want to invest in. Whereas the large cap fund's purpose and the end investor who it's targeting is very, very different. It is somebody who needs to have a broader exposure to at least the top 100 companies that we have in the market. And what the passive funds cannot do is basically maintain a little bit of an active share or tactically execute based on merger arbitrages or even cash to future calls that we can take, then that active fund can do. So it will be very close to the Nifty 100 index that we are choosing, and it gives you the market return with a little bit of execution benefit that we can provide to the investor.
Got that. You know, in the Flexi fund as well, you will have. So that is purely Nifty 100 focus, basically. That's the primary difference.
The large cap 100 is benchmarked to Nifty 100, whereas the Flexi cap has a very wide mandate. It can basically become a large cap, slightly large cap heavy fund, can also have more mid cap, small cap if the valuations change. And of course, it has a little bit of the international flavor as well.
I read that one other headline, which is PPFA's IPO, but a few years down the line, right? Was there a question, or was there an answer to the question, or was that a statement yourself? You guys made yourself?
So we get asked this question every year, and Mr. Neil Parekh, who is from the promoter family, has the same answer that every few years we might reconsider having an IPO. So he just gave a statement that maybe in the next 5 years we might consider, but it's maybe, we don't know.
You all also announced, I think, some global funds, 2 new passive outbound funds where you can track NASDAQ 100 and the S&P 500. Now, what's the view that you're taking on global equities, US markets in particular, after the kind of run-up that we've seen? So if someone invests whenever you launch in this, what is the kind of return they should expect?
So in fact, those funds which you mentioned are part of our Gift City operation, which is handled by a separate team. So I'll just be brief. We have one active PMS over there, and these are new funds we are launching, which will track the broader indices of S&P 500 and NASDAQ 100. I don't have too much more detail to reveal, but they are basically index tracking funds for people who want to invest globally and into an index fund.
Got that. Okay, so in your FlexiCap fund, we always talk to you about your tech holding. You've got an Alphabet and some others. Now, up until now, NVIDIA, OpenAI, these were seen as the undisputed AI winners. And then came Google, Gemini 3, and that seems to be flipping the narrative or the leaderboard. Now, you all own Alphabet. How do you see the AI battle brewing?
It's very hard to predict because things are changing quite dramatically. If you see every 6 months, you have somebody new on the leaderboard at the top. So I would rather look at it from a point of view of cash flows. So if you look at the companies we own, we have Alphabet, we have Amazon, we have Meta Platforms, and we have Microsoft. All 4 of these companies are exposed to various segments of the tech industry, which is one is digital advertising, some is software, some is cloud computing. So all of these generate a lot of cash flows, which are then redeployed in creating the AI infrastructure or even building the models. So out of all of these 4, I think Google is the only one which has the entire stack, right from the hardware for AI infrastructure, then they have the model themselves, and then they have the user base or even the software layer where they can offer it as a service and people can pay for it as a paid subscription. So that is very unique for Google. So Google has been in a portfolio since the inception of the fund. We like that business and it has been growing very well over a period of time. But within the AI stack, I don't want to call leaders just yet, but I think every company has their advantages, and Google, I think, is right now looking like the most advantaged of them all.
NVIDIA is missing from
I was going to ask him. So you didn't, NVIDIA never was there. Was it because it was never making the valuation cut for you? Or was there some other thought to it?
It was always that case. Every time the valuation looked a little expensive, but one has to be a little imaginative, which I was not as a tech analyst in the firm. And the earnings growth was far higher than I anticipated. We missed the stock, basically.
Oh, okay. Happens to the best, I guess. But anyway, otherwise you've done phenomenally well. From the few, fund managers who managed to get onto the US tech bandwagon in a very sustained way, well ahead of the time. But just to come back to this large cap offering now that you all are thinking of, and I believe that, I read somewhere that the return expectations should be slightly better than the index. I think the underlying for it is going to be the Nifty 100, if I'm not mistaken.
Yes.
With a cost structure that will be similar to passive, not as cheap as passive, but similar. So what is the thought process here, Ronak? Do you see a lot of value in that space, in the large cap space? Some argue that valuations at 22 times are not exactly cheap for the Indian market. So just walk us through it. Why are you looking at a large cap offering which will be slightly better than a passive fund linked to the same index.
Agreed. So if you see our fund house, we have limited fund offerings, and based on what we think is the most demanded by our investors and what we think can add a little differentiation is when we decide to launch a new scheme. And this is where the large cap scheme came into picture. That's a category we did not have a fund in. And over here, we saw that there's a demand from our investors over many years that why don't you launch an ETF or passive fund? But we realized that the economics for a passive fund and even the kind of way the passive funds operate, where they have to be fully deployed in the way the index is there and the restructuring has to be followed at a regiment. We didn't like that kind of a restricted way of approaching a passive fund. So we thought, can we do a better way? Can we have a fund which basically tracks the index and little bit efficiencies we can provide by doing right execution, by providing merger arbitrage. So for example, in the past, in the FlexiCap fund, we did this. When HDFC bank was merging, we in fact bought HDFC Limited so that we got the arbitrage benefit. A little bit benefit we can win here and there. And I think that will make the differentiation. But broadly, the returns should track the Nifty 100 index. And it's for an investor who does not want to have too much of an active management in their portfolio. Can they have a low cost equity exposure through a slightly passive strategy? This is what we're trying to achieve. So it's a different investor, not the FlexiCap investor. It's an investor who does not generally invest in equity and wants to start exposure through something like this.
All right. Hi, Ronak. Good afternoon. Good to see you. And Ronak, I need to ask you about two stocks, which are out of flavor, at least as of now. We've been talking about exchanges, the unlisted NSE 4-5 lakh crore. You have the BSE at 1.2 lakh crore. MCX as well, is run away. But you have IEX that's around 13,000 crores of market capitalization. You all have been loading for the last few quarters out there. So give us the top rationale out there with regard to IEX. Why do you all like it? And what are your expectations? Because this market coupling had spooked the street, but you'll continue to add on. Tell us more.
So Nigel, if you see IEX position, we only added when the latest news flow cracked the stock price. And what we realized is that although the intention is great in order to have a diversified ecosystem for exchange traded power contracts, but unfortunately, IEX right now has the highest market share, and it is basically the buyers and sellers are both used to coming to that platform and discovering price on that platform. So if the market coupling comes in, we would actually like to see how market coupling really affects a market share of an incumbent who has such strong network effects already. Again, it's not proven. So it's basically a probabilistic bet. We will see if over a period of time, IEX is able to retain market share, provided same value that it has been providing to all its buyers and sellers transacting there. And secondly, we look at slightly longer term period, where if you want to scale up renewable power within our ecosystem of power, demand and supply, I think over a period of time, exchange-driven power transactions are going to be a larger volume of the market. And that is the intention of the regulator as well. So that's been the trend over a period of time. And I think longer term, there is a lot of volume for all the players to enjoy. So I did not see too much of a problem in when the IEX price cracked and the market coupling was announced. Until there is an execution and actually we see the evidence that market share will erode for IEX, we will see how the stock performs over a period of time. But from the business point of view, so far, not much has changed for IEX.
Okay, all right. We leave it there. Thank you very much for joining us. And Ronak and sharing all that with us. Appreciate it. Well, I think you got the market, which is, right there, dear highs. Some mid-caps are at the bottom of the screen, things like Saman Capital, etc., which are up about 3.5%. We'll take a quick commercial break here. We'll come back and get you a quick sense of what's happening in dealing rooms. Nimesh joins us for that. D Street Chatter and some technical trading ideas follow after that. Stay tuned.
Welcome back. Well, the markets, it's a bazooka start actually for the December series. 300 points on the Nifty, 700 points on the Nifty Bank. But that's not the story. The story is in the broader markets. Advancing stocks, 3:1. Nimesh joins us to help us out with what he's picking up. Nimesh, after a while, the breadth of the market is looking good. It's at least feeling like Christmas as well as, portfolios are feeling better.
Well, Nigel, I think it's too early to call a Christmas rally, honestly. So there were initial signs of some bit of uptake in the broader markets, which I highlighted yesterday as well. And today it's followed up. But again, I guess it's a early start. I don't think we can call it as a trend as we speak. But yeah, it's a good relief, and it's just come as a bit of a surprise to most of the traders and investors. Nobody thought of a 300-point rally on day one of the new series. The index is up almost 1%. I guess the big directional move seems to be in the financials, and that's the space which is relatively outperforming on a daily basis. Whether it's NBFCs, private banks, or PSU banks, that's one space which is outperforming, and it's backed by institutional flows as well. So that's clearly standing out. I guess from a technical point of view, we are about that level, but on a closing basis, 26,120 is a level to watch. If that gets taken out, which looks like it will be a day today, you might see further short covering rally, because even at the start of the new series, the FIs are net short almost 85% on the option side. So that's something to watch out for. I guess with today's move, the PCR is now back to the upper end of the channel of 1.5, 1.4 at 1.5. Typically around 1.6, we see profit booking as well. So keep that in mind. But as I said, this is just a trailer. I would say don't read too much into it. And of course, there is still no clarity on when the US deal will happen, or if indeed it will happen in the very near future. About the broader markets, Nigel, again, to me it looks like more of a technical pullback. All the stocks were extremely oversold, and there is really no participation. Even in today's pullback, if you ask anybody, have they bought anything, the answer is no. It's just a relief rally, and people are happy that, okay, my stocks have come up a bit, but not that there is big momentum or a chase from retail or HNI investors in the broader markets as well.
Okay, all right, got that point. And maybe it's at times like this, when there is not too much participation, even on the upside, suddenly there's a left out feeling, which could result in an additional fill-up upwards as well. Let's see how that plays out. But individual stocks, what are you picking up?
Okay, so in terms of individual names, the first on my list is Angel One. That's been buzzing in trade today, but there is a strong indication in the market that maybe you'll see a large block in Angel One very soon. So that's the trigger there. So that's something to track. The second stock is VIP Industries. This is interesting. The stock has recovered in today's market of 4-5%, but it's still trading below the open of a price of 388, and it has seen a one-way correction for all the high from 450, 460, all the way to 350 in yesterday's trading session. A bit of a pullback in today's market, but I understand even in VIP Industries there could be some corporate development. A potential 6-7% block, I guess, is still pending, and that may happen very soon. So that's the trigger there. The third couple of stocks, basically OMCs are seeing a bit of a buying interest today. After what we saw yesterday, a bit of shorting on a brokerage downgrade, some bit of small buy flows as well as covering as well in HPCL as well as in IOC in today's market. And the last is Ashok Leyland. Against the trend, while the stock has seen a bit of momentum of late, there is aggressive selling from a larger FI in Ashok Leyland today. So the volumes would be on the higher side and maybe on the sell side. So watch out for the delivery volumes towards the end in Ashok Leyland as well.
Nimesh, on VIP, right? Corporate development soon, right?
So, Prashant, as I said, there is a strong indication that maybe there is one more block left where the promoted entities will sell, and the funds who bought, including multiples and a couple of HNIs who participated and who have done an open offer as well. So they may buy. That's the buzz as far as VIP is concerned. Also, the fact that this was a kind of a kitchen sinking quarter for VIP. From here on, how the numbers pan out and whether they appoint a new CEO, that is something to track as far as VIP is concerned going forward.
Yeah, no, absolutely. It's an interesting one. So Angel, VIP, the oil marketing companies, and Ashok Leyland are the 5 stocks on Nimesh's chatter list. 65 points away from a new all-time high. Time for a quick commercial break. But before that, I think Mitesh is with us for a quick trading idea. Mitesh, what do you have?
Yeah. On the stock side, MFSL is looking good. It's closing at the day's high. So PTSD here will stop at 1726 for targets of 1750, 55. And the other one which I like is Multi. I think Auto has been going through some consolidation but picking up space again. So Bajaj Auto was called earlier. Multi is a BTSD. They stop at 16,100 just below it, and a target of 16,225 to 40 on the upside.
Okay, all right. Thank you very much, Amitesh. We'll leave you to enjoy the rest of your day, and we'll see you with the market again tomorrow morning. For the time being, let's welcome Mayuresh Joshi into the conversation. And Mayuresh is joining us on a bright green afternoon. Mayuresh, the market's moving from strength to strength. Let's see, last time, I think it was somewhere early last week when we were teasing and testing around these all-time high levels. We came barely 35 points away from it. So I don't know, now we're 74 points away from it. So we'll see. But tell us, Mayuresh, give us some new stocks at all-time highs. New ideas.
Afternoon, Surabhi. I think the flavor is green. I'm wearing green. So I think there is optimism around the corner, around the street as well. No, I think from a new stock addition perspective, what we've recently added at MarketSmith India is the online portal TBO Tech. Again, I think our thesis here has been considering very strong rating rankings that the company has been posting, very strong set of top line numbers. EBITDA margins have been very, very strong for TBO Tech as well. And we are entering into the best season as far as travel, tourism, and hospitality is concerned. Considering their platform itself, more than 12,000 transacting agents on a monthly basis. And therefore, I think if one really assumes a large part of their contribution coming in from Europe, a large part of their contribution coming in from the Middle East, and spread across US, Latin America, and the rest of Asia. I think there is significant amount of business strength that comes through. Arguably, I think the entire perspective in terms of better numbers going ahead and sustainability of numbers is something that we believe TBO Tech can probably keep on posting. So I think very strong rating ranking institutional holding as per Cancelim on what makes us very, very optimistic on this counter. The second one that we continue liking from the Rodal space is VST Tillers, stroke Caraco India as well. So both these companies have a distinctive feature in terms of the agri exposure that they've probably got. The tiller and feeder sales have been exceptionally good for VST Tillers year to date. Tractor sales are a tad bit sluggish, but the expectations is second half, it should be relatively better. The utilization levels, both for tillers, feeders, as well as tractors, are absolutely at manageable levels. And therefore, I think additional capex might not be required for some length of time, giving the boost in terms of stronger cash flows that might continue onto their balance sheet. As a proxy to VST Tillers, Carrero India, I think it's looking exceptionally strong as well. Again, supplies equipments in terms of axle gears to both the 40 HP and higher tractors as well. And the entire axle, the tractor axle industry itself is transiting from 2WD to 4WD, which is very, very beneficial for Carrero India. And therefore, I think both the construction equipment segment, the expectations in terms of the tractor segment doing well, both domestically as well as globally as well in terms of their client reach, seems to make a base case scenario that domestic operations had been a little bit softer for both tractors and construction equipment, but should come back very, very strongly. Again, very, very strong balance sheet dynamics and very, very strong rating rankings as we see in markets. So a few recent stocks that we've added to our model.
Stay on, Mayuresh. Just want to get a quick handle on how the December series has started. Nigel has moved over to the F&O desk. Nigel?
Well, as I said earlier this morning, the December series has started off actually with the open interest at the lower end. You know, if you compare it to the start of other series, it's much, much lower. So we're light at the start of the series, which helps you in terms of a bigger move on either direction. And in today's trading session, you know, what's clear is the 20-day MA, that's the first reference point that you want to look at. The 25,800 mark is crucial to defend on the downside. And the range, if you look at it, 25,500, 25,800, till that's defended, you'll say that the bulls, you know, they have some unfinished business at higher levels. The Nifty Bank is the one that's leading the way. It's up 700 points. And today's a trend day. The Nifty Bank, it's a trend day. You bought at any point of time, you would be making money. And that's precisely what you're seeing on the screen. The problem is now the PCR is moving to the upper end of the range. And, you know, when I send these graphics, it was at around 1.45. The last time I checked, it's at around 1.5 or thereabouts. So 1.6, 1.65 is when we see some kind of topping out of the PCR. So just keep an eye out on that particular factor. The reason that the PCR has moved up is because at the start of today, 25,900 put was active. Then we had the 26,000 put. Then we had the 26,100 put. So put writing is very, very aggressive. And the premiums have crashed on all those strikes. Individual stocks that are in focus, Geo Financial, you know, I think that's a stock you really need to track. It's moving with good amount of momentum. The big boy Reliance Industries is moving up. Geo Financial derives a lot of its value from Reliance Industries, and that's clearly come in for a bit of a short covering bounce. A stock like RVNL as well, that's been quite volatile, that as well as seeing a bit of a bounce in today's trading session. And in terms of fresh buying, Saman Capital, that's moving very, very well today. There's a massive open interest built up out there. So keep an eye out on that one. Fresh buying being seen out there. And also you have MCX that's seeing some fresh buying out there. So it's a good trading session. The bulls will like the start that they've seen to the December series. And the most heartening aspect is the breadth of the market. Number of stocks advancing to the number of stocks declining, 3:1. Good day for the bulls. Back to you guys.
Indeed, 2,200 stocks currently in the green and so many individual names. SMS Pharma, earlier Hormus was telling us the kind of volumes, 18% up. Natco Pharma, 11% gain on that. Fino Payments Bank, it's a 10% surge. You go down the list, very large volumes for Pesalo, Digital, Hoodco, Varun Beverages, a very green looking screen. Get into a break, we'll come back with the closing rates.
Welcome back. Bombastic trading session. Things looking very, very good. But Mayuresh Joshi is still with us. Mayuresh, I wanted to ask you about Saman Capital. Now, the stock has come down from the recent high of 190 to around 150 odd. And there's clear signs of fresh buying out here. If there's no problem with regard to that deal coming in from the Middle East, the money that's coming in there, more than $1 billion, then this could be a good entry point. Would you take the risk? Or do you think that the cases on the erstwhile promoter and the question marks on the erstwhile promoter could actually impact the business going ahead? You'd rather stay on the sidelines?
Nigel, again, afternoon to you as well. I think it's a catch-22 situation. I think if nothing comes out and the stock moves significantly higher, I think in hindsight, it might be a good buy. But again, I think there is an overhang onto the stock. And therefore, I think it's always better to wait for clarity to probably come through. Once we get sufficient amount of clarity in terms of what is expected to happen, the other triggers are already existing for the stock, which might actually propel the balance sheet on the higher side. Therefore, we prefer to be on the sidelines to understand and await what kind of news flow probably comes through. It's a risk if nothing untoward comes through. But again, I think it's worth taking that risk because if something comes up which is not favorable as the street believes, it might turn out to be worse than what we probably are at the current juncture.
Mayuresh, there's some amount of uncertainty on the kind of refining margins for Chennai Petro and MRPL going ahead. So you're seeing profit booking after a strong run-up. Chennai Petro looks like it's going to end with a double-digit cut. Where do you stand on these two stocks?
So, Rima, again, I think it really depends in terms of how the crude movement probably remains. And therefore, I think with Singapore GRMs, which are around $9 at this juncture, if they're able to sustain quite significantly at these levels, there might be some respite that probably comes through. Now, in the quarter gone by for Chennai Petro, if you've probably seen, volume throughput was relatively better. In fact, the distillate yield for Chennai Petro was 80%, which clearly indicates that the Singapore GRMs and the refining margins played out, the cost efficiencies probably played out, and with better distillate yields that probably played out, numbers were relatively better. So it's an if and but scenario. Therefore, I think one really needs to wait and watch on how GRMs will play through, how the throughput will probably happen, and what probably happens, whether they're able to maintain that distillate yield higher percentage, which gives them that greater chances in terms of sustainability of profitability going ahead.
I guess clearer in that sense for the oil marketing companies, which have refining but also have marketing, right? And of course, oil prices coming off kind of does benefit. And they've not had the kind of rallies that some of the standalone refiners have had. Clearly not. This company, Capillary, have you looked at it? The new listing?
No, Prashant. Sorry, apologies. Not right.
Okay, all right. What else? I mean, I think M&M Finance is taking a bit of a knock. It's down about 3%. Had a bit of a move after the investor day at Mahindra & Mahindra. Went up from about 320 to 350. Actually, it went up to about 360. And today it is coming off. MTAR Tech is one of those massive movers. 2 months back, stock was 1,400. In 2 months flat, from 1,400 moved up to about 2,700. And it's giving back some of those gains. Yatra, of course, I mean, news-related name. And we saw a very large move. We spoke with the management yesterday. The management clarified stocks saw a reversal. Today it's down about 4% as we speak. Stylum Industries is another one where there is a deal afoot, as we've reported. It was up some 7-8% yesterday and it's down 6% today. So back to about 2,050. I think we reported deal should be between 2150 to 2250. If I remember correctly, what we pick up is that it's around the corner. So that's that. At least on the way down, this is what is going on. Natco, do you have a view? Mayuresh, do you track it?
Yes.
Natco Pharma?
Yes. Yeah. And again, I think the expectation largely here is that it should have a sustainable earnings growth going forward. I think the kind of applications that it probably has, both pending and due for registrations, I think that creates a very good pipeline for Natco Pharma. And again, I think the R&D expenditure, it's not just for Natco, but for the other pharma players as well, are now on a sustainable track, which means overall EBITDA margins should be far more sustainable going forward. Any resolutions that we're probably getting on the Trump part, specifically when it comes to the developed market, obviously aids. So anybody holding that, we should continue.
All right, just a few seconds to go before we wrap. And what a trade it's been. The Nifty is ending at 26,200. The countdown to all-time high is on. It's a gain of 1.25% coming in on the benchmark indices. Sensex has skyrocketed 1,000 points and ending above 85,600. Midcaps moving in step. Nifty Bank up 700 points. The bell has gone with the advanced decline ratio firmly in favor of the gaining side. Nearly 2,200 stocks in the green, and many of these heavyweights. Reliance Industries on the way up. Metals were shining in trade. Interglobe Aviation had a strong up move. NBFCs, Bajaj Finserv, Finance, Geo Financial, and look at HDFC Life, that too up and about in trade.
You know, you just cannot complain with today's day at all. Sectorally, every single sector is in positive territory. The least performing sector is FMCG, which is also up about 0.75%. So it's that strong a day. And of course, metals have led from the front. On the mid-cap screens, there's plenty of cheer. Look at some of these names. JK Cement, 6%. Tata Investments, 5.5%. PG Electroplast, 6.5%. GMDC, of course, we've already discussed on the rare earth excitement. Natco Pharma, rate gain, 5%. So many names up and about. Raymond Realty, I could just go on and on. But short point is it's been a very well-rounded day. Lots of momentum. It's been a very broad-based move, and the bulls will ask that question that this time, have they indeed taken out this congestion zone of 26,100 to 150 decisively? I think we'll have more clarity and answers tomorrow. But for now, a fantastic Wednesday comes to a close. Well, with that, the team of Closing Bell will take your leave, but don't go anywhere because all the market action continues. Up next is Markets Forward.
Nifty and Sensex near record highs, gain over 1% each. Nifty Bank hits an all-time high. All sectoral indices end in the green.
Bharti Group sells 0.57% stake via block deals in telecom arm Bharti Airtel at 2,100 rupees a piece, rakes in over 7,000 crore rupees. Promoter holding post the sale slips below 50% in Bharti Airtel.
Steel stocks gain on expectations of an early decision on the safeguard duty as domestic prices trade in line with Chinese and Korean steel. A possible peace deal between Ukraine and Russia could also be positive for global demand.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra and with me is my colleague Vivek Iyer. Vivek, good afternoon. What a stellar rally. The first day of the December series, it was an all-round green. Nifty and Sensex closer to the record highs, but Bank Nifty, a stellar move touching those record high levels. The advance decline ratio absolutely in favor of advances. 45 out of the 50 Nifty stocks were in the green. 5 of them touched 52-week high. We did have all sectoral indices higher. Metal index, of course, on our radar. We'll discuss that in greater detail. But all in all, it was a green-looking screen today.
Absolutely right. Good afternoon, Sonal. And like you mentioned, absolutely nothing to complain the way we've started off the December FNO series. All of the sectoral indices did very well. In fact, some of the key outperformers were sectors that were so far not participating in the rally. Sectors like the Nifty Pharma Index, the metal pack that was languishing so far, all of them also participated in the session today. But let's look at the lineup that we have in store for you on the show today. First up, the top movers and shakers of the day with Hormuz Fatakia. We then put the spotlight on steel stocks, decode the bar Seattle stake sale, and tell you all about Tata Motors' newly launched Sierra. Last but not the least, we delve into the key market events as well to keep an eye out for. But now on to our first segment of the day. Hormuz joins in now from the big wall with the top movers and shakers.
A strong start to the December series, and the index was the headline of the day, closing close to its record highs yet again. And of course, the index heavyweights were batting for the bulls today, be it ICICI Bank, Reliance Industries, Infosys, or even the other banking names like Axis Bank. Almost 45 names on the index ending higher today, almost a 300+ point gain for the Nifty. As a sector, metals was the one that did well. Of course, all sectoral indices did well, but metals was an outperformer today. And Lloyds Metals, JSW Steel, Vedanta, you name it, and they were up anywhere between 2.5% to 4.5% in today's session. The broader markets too were not too far behind, and there were enough and more names that saw double-digit gains in today's session. Look at Best Agro was up 20%. SMS Pharma, of course, was a news-driven reaction. That stock ended 18% higher as well. The best single-day gain in 5 years. Igarashi Motors, Responsive Industries, all of them saw double-digit gains today. Stocks at a 52-week high. MCX crossing the mark of 10,000 for the first time. GMR Airports, we spoke to Shriram Finance earlier in the day. That ended at a 52-week high as well. And Max Financial also having a good day at the office. But to balance things out, of course, there were stocks that didn't do well today. That was bucking the trend. Chennai Petro was down 12% in today's session. Also not having a very good day. Stocks like Stylum, Orient Electric, and of course, Meglanic Cloud as well, ending 20% lower in today's session.
Some interesting moves in the broader markets. Thank you so much, Hormuz, for joining us as always. Well, what did do well? Metal index gained over 1%. It was boosted by positive commentary from the steel secretary in an exclusive chat with CNBC-TV18. He said a decision on the safeguard duty on steel is expected soon. Let's get Nigel D'Souza here with the details. Nigel, take us through why the steel stocks rallied this time around, and what did you make of Steel Seki's comments?
Well, the big question is why are metal stocks up? There are two big factors, right, at play today. Expectations of Fed rate cuts, well, they have moved up in comparison to the past week. And fresh commentary that came in from the Steel Secretary who spoke to us here at CNBC-TV18 exclusively yesterday. First, let's address what the Steel Secretary said, right, with regard to the protection measures. Remember, this provisional safeguard duty expired on November 6th, which means, as of now, there's no safeguard duty in place. But the Secretary assured everyone that the government decision on reinstating the safeguard duty is expected rather soon. So it's giving hope out there. That's actually a bit of a delay, but it's likely to come about. That's the hope that the street is clinging on to. He added that adjustments in the BIS norms as well as the quality controls, well, they are aimed at balancing the interest of both the steel producers as well as consumers as well. So he clarified on that protectionist stand that the government has. But you'll be asking me, why is the safeguard duty important right now? Few factors. Point number one, China's output is down. We all know that. Year to date, it's down. But exports still remain high, and Chinese exports are continuing at around 10 million tons on a monthly basis. That's a worry, because elevated exports means more Chinese steel in the global markets. That's what will put pressure on prices. Second point is domestic prices, well, they are now at par with imported steel. But if you get that safeguard duty at around 12%, then it makes domestic steel far more competitive, as it makes the domestic steel price 12% cheaper than that imports that will come in from China. and 8 to 9% cheaper on those imports that are coming in from Japan as well as from Korea. A safeguard duty would protect margins, support domestic pricing at a time when the global steel pricing on the whole is rather cheap. And point number 3 is large new steel capacities, they are coming online in India, which could create higher supply in the near term and export opportunities, well, they have been narrowing. And with EU's carbon border adjustment mechanism, which is known as CBAM, that is likely to increase the compliance cost as well as reduce competitiveness in Europe. This in turn will add pressure on the industry to ensure that domestic market remains viable, strengthening the case actually for a safeguard duty to come in place. And finally, the steel secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward. And steel pricing, which is suppressed right now, he's expecting it to stabilize in 2026. So put everything together, the Fed likely to cut rates, steel secretary giving hope that there are duties that could possibly come about rather soon. So on the back of that hope, we have the metal index that's flying away.
Well, thank you so much, Nigel, for joining us and taking us through all of the important reasons why the steel stocks did very well in the session today. But it's a good time to welcome our guests, both Mayuresh Joshi, who's the Head of Equity Research at William O'Neill, and Shrikant Chauhan, EVP at Kotak Securities. Good afternoon, gentlemen. Thank you so much for joining us. Well, Mayuresh, let me come across to you first. You heard what Nigel had to say, especially as far as the entire steel thesis is concerned. What is your view on the stocks at the current levels? Do you feel steel prices can hold out? Mayuresh, I believe you're on mute.
Sorry for that. Yes, Vivek, I think afternoon to you. I think I believe they should, because I think domestic demand is holding up very, very strongly. And expectations are that both government and private capex should probably aid volume growth. And now if that probably happens with input costs, which have largely moderated over the last few quarters, will provide respite to the ferrous players. And therefore, I think frontline counters like JSW, Tata Steel are obviously having a very resilient show. And what Nigel said, I think all the triggers probably working for them. But even the second run counters, look at counters like Sandhu Manganese as an example. Look at counters like Prakash Industries as an example. I think all of them are making steel and value-added steel at that, with integrated processes and green steel at that. So I think that can have further say when it probably comes to realizations and volume growth. So I think the frontline players obviously have the momentum and the advantage, but the second run players can also do well if this continues.
Okay, take that point. Shrikant, if you look at the charts, any specific stock that stands out, how do you look at the metal index overall from a trade perspective?
Yeah, I think, see, like all these stocks, they are consolidating at higher levels. Most of these stocks have crossed their previous highs, and despite this particular crossing, we have not seen any major rally in all these stocks. But this time, after this particular statement and news flow, I am of the view that now they are going to break the consolidation, which was there since last almost, we can say, 7-8 weeks. And now all the stocks are ready to move towards the next level. So Tata Steel, which is currently around 165, 167, is quite attractive at these levels. The downside is quite limited. I'm not expecting this stock to fall below 160, but again, the stock can move towards 190, 195 sort of levels. We also like Jindal Steel and Power. There also we have a bullish view, and there also we are expecting at least 10 to 15% sort of rally. From the few other stocks, GMDC as well as Vedanta, I think both these stocks, they have also recovered from their lows, and in fact Vedanta is into breakout. So the next level to watch out for would be 540 or 550. Broadly, I think this space should do well.
Okay, thank you so much, Shrikant. But gentlemen, stay on. A whole lot of questions coming your way. But moving on, shares of Tata Motors passenger vehicle division witnessed an uptick after the auto giant unveiled the launch of the new Tata Sierra SUV priced at 11 lakh rupees. Sudarshan Kumar joins in with all the latest developments. Sudarshan, take us through the highlights of the launch and what brokerages are making of this particular vehicle.
It's a big launch for Tata Motors passenger vehicle, and that to Sierra. It's a known name. Even in the older version, we had Sierra. Now it's reborn. And if you talk about all the SUVs that Tata Motors Passenger Vehicles PV has, it's the one which has the maximum number of features. And now introductory price is 11.49. That is looking aggressive and even like it's attractive as well. What about the bookings? It will start from December of 16 and deliveries are expected to start from January mid, that is January 15. While most of the brokerages remain cautious on the stock, but they have a very positive views as far as Sierra goes. So Nomura has written a note on the stock. It maintains neutral rating. Target price is 395 per share. But it says this car carries forward the Sierra design into a modern avatar. Even pricing is aggressive, and even given the base variants are too feature loaded, and now they are expecting this Sierra to have bookings of at least 10,000 units per month, and it seems well positioned to benefit from the consumer shift that we have been seeing over the last few years, that most of the consumers are now have a preference towards SUV. And now this could create a meaningful upside for PV growth expectations we have from Tata Motors Passenger Vehicles over FY 26-28. Overall, it's looking very good for Tata Motors Passenger Vehicle. For a standalone business, it can be a big booster, but everyone knows that JLR is still struggling. That's the reason. That's one of the main reasons why all the brokerages remain cautious on the stock. If you take a look in 2025, it's the biggest underperformer, down more than 51%. But today, on the back of this launch, it's trading higher, up around 2%.
Sudarshan, thank you so much for joining us and telling us what's happening with Tata Motors passenger vehicle business. Let's get back to our guests. Mayuresh, what do you make of this particular stock? And otherwise as well, we spoke about the big rally in auto space post GST cuts. Do you think valuation-wise there's still some steam left?
Afternoon, Sonal. I think the stocks are pricing in a significant amount of volume growth coming through. However, there will be outliers within this segment as well. For Tata Motors in particular, as Sudarshan mentioned, I think the standalone business might do well, but JLR still continues to be a major EBIT contributor. And therefore, I think with the guidance that they've probably given, lowering their EBIT margins, lowering their free cash flows, there is some element that competition, how markets like US, Europe, and China will fare on volumes. And pricing itself, when it probably comes to development of their EV platforms and powertrains as well. How is that going to probably play out on absolute numbers? And therefore, it's a neutral in our view as far as ratings and rankings are concerned. For the space, we remain optimistic. So I think we do continue holding stocks like Hyundai Motors within four-wheelers, Maruti within four-wheelers, Hero MotoCorp within the two-wheeler space. Also, auto ancillaries, in our opinion, can continue very well. So stocks like Uno Minda, as an example, is a diversified play as far as the entire auto anchor space is concerned. So neutral on Tata Motors, but a little bit more optimistic on the other ones.
Got that, Mayuresh. The other stock that was in focus today from the Nifty pack was Bharti Airtel. In fact, at one point of day, it was the sole Nifty laggard in the session. Now, this was after the stock saw a large block deal, almost 0.6% of the total equity changed hands. And as per the term sheet we managed to access last evening, it was the promoter entity from the Bharti side of the promoter, Indian Continental, that exited close to 0.6% stake in the company. They earlier held 1.45%. Now, this particular block deal, helped the promoter to mop up almost 7,200 crore worth of equity, and this was something that the street was looking for, because at the start of the month you actually saw the other promoter entity, the Singtel entity, sell close to 3% stake. Remember, both of the promoters in fact have mentioned that eventually going forward there will be parity when it comes to the shareholding. On the back of that, Bharti today under a bit of pressure.
Okay, that stock on our radar today. Srikanth, from a charts perspective, what is this stock suggesting? What are the next important levels to watch out for?
So see, this particular stock is forming higher top, higher bottom series on a regular basis. And today also, after this major block, the stock is holding above its important level of 2100. So while looking at its entire longer term pattern, I am of the view that the next stop for the stock is between 2250, 2375. And any correction will be an opportunity for traders as well as investors to take long positions on the stock.
Well, Srikanth, thank you so much for that. So you continue to remain positive despite the marginal dip that the stock saw today. But with that, it's time for a short break. We'll get you the top corporate voices along with the key market events as well that we will be tracking tomorrow.
Welcome back. You're still tuned into Markets Forward. It's time to take stock of all the big corporate voices of the day. HEG's Vice Chairman Riju Jhunjhunwala told CNBC-TV18 that the company has increased its stake. The promoters have increased its stake in the company and they continue to see both short-term and long-term value. He added that the upcoming demerger is expected to drive significant value creation, with the green tech business alone having the potential to generate over 1,000 crore rupees in EBITDA. He also said the company would be debt-free post-demerger. Okay, all right. So HEG, that stock surged to the day's high after management commentary that came by. Srikanth, any take on this stock from a charts perspective? Okay, before we go to Srikanth, let's go to Mayuresh. Mayuresh, the graphite electrode space, it is always interesting. What do you make of these names, especially HEG at this point in time?
So they have been very, very volatile, Sonal, to be honest. And therefore, I think how graphite electrode prices probably move is going to be one key aspect for HEG. The second aspect, obviously, is how needle coke prices are expected to move. So they have been relatively softer as we speak. And therefore, I think as prices move higher, as there is more clarity in terms of volume growth that probably takes place, and we all know graphite electrodes is an absolute substitution in terms of the entire green steel revolution that is taking place across Europe and the rest of the globe. So I think these two variables are very, very important, very, very volatile at this juncture. And therefore, Q3 numbers will be key in terms of the re-rating for this.
Well, thanks for that, Mayuresh. But moving on, the MD of Brigade Group, Pavitra Shankar, told CNBC-TV18 that the company's premium inventory continues to see strong demand on the ground. The company is targeting 15 to 20% pre-sales growth in FY26, with about 40% of current revenues already coming in from new launches. She added that sales are likely to be driven more by volumes rather than by pricing. Well, Mayuresh, within the realty pack, what is it that you like? What are your thoughts on Brigade? And would you prefer players from the south or would you prefer players from the north?
It's going to be very region specific. You're absolutely right, Vivek. And again, I think the kind of demand supply dynamics that you're probably seeing, I think a large part of the exuberance that we saw over the last few quarters is now stabilizing. Secondly, I think inventory levels across some developers in some pockets are actually showing signs of a built-up. And the third aspect is that now you're seeing far more calibrated launches. So in terms of the pre-sales velocity for a whole host of players, I think it's going to be very, very selective in key areas. Obviously, I think a large pool of these developmental projects that are expected to come through are on the JDA basis, which means an asset-light model is getting deployed even by the larger developers, which creates lesser stress and leverage on their balance sheets. With all these things put in perspective, our take is that a stock like DLF is something that we continue holding in our global portfolios. At the same time, Phoenix Mills is something that can continue doing well because the kind of expansions that Phoenix is probably going through, both in terms of its core mall stroke annuity business, which is expected to be reasonably better as we head over the next few quarters, as well as their hotel stroke keys development that they're probably doing without creating any additional stress onto the balance sheet. So a couple of names that we are still carrying on to in our global portfolios.
A trend that has been very obvious in all these real estate companies is how they have been able to deleverage balance sheets during COVID. But we'll have to see. A lot of capex also has been announced post that because of launch pipelines and other reasons as well. So we'll watch out for that. Shriram Finance, that is the company on our radar. The management told CNBC-TV18 that the company does not require capital for growth at this stage. The discussions are always ongoing. They added that talks are underway with various entities, but there is nothing concrete on a fundraise so far.
There will be many discussions going on. I cannot be talking about it. So there will be always some interested party who are, as you are rightly putting it, India is attracting a lot of capital, both for the debt and the equity. Everyone is seeing India as a large economy growing well. So that is where the interest levels are very high. And that is likely to continue. We are at 20% plus on CRAR, so we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital. So I can't disclose beyond that. The rural market is actually, the demand is much faster than the urban right now. And I believe with the government now have cleared some of the infrastructure project in the last cabinet meeting, there will be a much bigger thrust on the infrastructure part of it. And that will help the growth coming back in the urban area also. So both an urban and rural put together, the demand should be much higher. So we believe the growth can be much higher than the guidance given. We gave the guidance of 15%. We should be growing at around 17-18% if everything falls in line.
Well, Shriram Finance, they say that they should be able to grow more than 17-18% for the year. Well, Mayuresh, a gush of liquidity, especially a lot of foreign interest coming in for the Indian BFSI space, a large deal in RBL Bank, Shriram Fin also expectedly in talks, while the management did not confirm that. Well, what are the positives you can draw in case such a deal does fructify?
So I think we continue remaining positive on larger NBFCs like a Shriram Finance or a Bajaj Finance. Rating rankings look absolutely strong. The biggest advantage is that the cost of borrowing has gone down substantially for these players. Their capital adequacy remains extremely strong. For a player like Shriram Finance, even the unsecured portfolio, including personal loans, is a very minuscule part that does not exceed 4 or 5% of their overall revenue. And it's very, very diversified, both in terms of their lending business, which is the application business, as well as the borrowing mix that they've probably got, which gives them better return ratios. Asset quality pressure also probably looking far more manageable on their balance sheet, and sufficient amount of ALM across buckets. So I think larger NBFCs is something, in our opinion, that can continue doing well, and a lot of drivers and tailwinds as far as their earnings are concerned over the next few months.
Okay, take that point. Thank you so much, Mayuresh, for joining us today. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty move closer to record highs. After gaining 1% in trade, the Nifty Bank hits a record high. All sectoral indices close in the green. The semiconductor war heats up between Google and Nvidia. Jensen Huang says Nvidia's chips are a generation ahead of Google. This comes after Meta, a major client of Nvidia, considers buying AI chips from Google. India is all set to become a $4 trillion economy this financial year, but economists expect a 2-year delay to hit the $5 trillion mark, citing lower inflation and a weaker rupee. The Union Cabinet is likely to approve a production-linked incentive scheme for rare earth magnets worth 7,300 crore rupees. Sources say the scheme is likely to continue for 7 years. That's a CNBC Awaaz exclusive. Prime Minister Modi flags the French major Safran's aircraft maintenance, repair and overhaul facility in Hyderabad with initial outlay of 1,300 crore rupees. The MRO center is Safran's largest aircraft engine MRO facility in the world. It could employ over 1,000 technicians and engineers once it becomes fully operational by 2035. A phone transcript released by Bloomberg reveals that Steve Witkoff, Trump's envoy to the Middle East, advised a senior Kremlin official on how to pitch the Ukraine peace plan to the U.S. president. Russian official has hinted that the phone call was authentic. Trump calls Witkoff's reported approach a standard negotiating procedure. Jakarta topples Tokyo as the world's most populated city with nearly 4.2 crore people, according to a UN report. Dhaka takes second place as Tokyo moves to number 3. New Delhi and Kolkata are the only Indian cities in the top 10. South Africa thrash India by 408 runs in the Guwahati Test to sweep the series 2-0. This is India's biggest defeat in Test history. Well, we'll get to that Test match debacle in just a second, but let's start with the day's market action. No debacle there. In fact, big moves across the Lal Street with all-round gains coming in today. The Sensex and the Nifty ending near record highs. So that's the picture for the Nifty, up 320 points. 26,205 is where it closed for the day. The Sensex up over 1,000 points today. That's a gain of over 1%. The Nifty Bank at a new record high, 700-point gain there. And the Midcap index also adding about 700 points. So broader markets also seeing major moves today. All frontline indices closing with gains of more than 1%. 45 Nifty stocks closed in the green, with 5 stocks ending at 52-week highs. Prashant standing by now to wrap up the day's market action. Very strong close. Prashant, what triggered this rally?
A good day, and the market basically back within kissing distance of a new all-time high for the Nifty. Now, you'd wonder why, right? Was there a big trigger? There wasn't any. Maybe after the expiry yesterday, lighter positioning in the market, perhaps one. Obvious thing that one can think of, expectation that perhaps this Russia-Ukraine war, which has dragged on for over 3 years perhaps, is now closer to ending than any point we've seen in the recent past. And of course, global markets which have bounced for 3 days in a row. I think it was a combination of things. But, as you can see, and I'll read out the stocks, it's not as if it was the large, liquid, well-known names which were all jumping up and about. It was the lesser-known kind of names in the broader market, especially the mid and small caps. I'll get to those names in just a bit. The Nifty up on your screen, the Nifty Bank doing pretty well, ending at the day's high. Mid-cap index, small-cap indices also bouncing quite nicely. Metals as a space did well, steel in particular. Of course, after our steel secretary interview, and you also had the capital market space, which bounced a little bit. Now, I'll start with the large caps, right? Nifty. JSW Steel was the biggest Nifty gainer. HDFC Life, the Bajaj Twins, Finserv and Finance, and Jio Finance also did well. Downside, Bharti, there was that big block which sort of went through successfully. Adani Enterprises, of course, under some pressure. Now, broader gains, broader markets, and advanced decline, of course, clearly with what was up. But just look at the names, right? Natco was the biggest volume-led gainer. Tata Investment Corporation, Carborundum Universal, GMDC on the back of the story at CNBC that on rare earth and the scheme which the cabinet is taking up. Fino Payment Bank was up from the word go. SMS Pharma, Reliance Power, PG Electroplast, Igarshi Motors, Tourism Finance Corporation, JK Simon, Black Box, and Goldium International, the lab-grown diamond company. On the way down, Capillary, which has had such a large move in 4 days since listing, lost CPC, that is Chennai Petro. Diesel margins have been very high, and they'll probably fall if as this conflict looks like it's nearing an end between Russia and Ukraine. Orient Electric, again, big gains recently, some profit booking. MRPL on the lines of CPCL, HDFC AMC, Mahindra & Mahindra Finance and Stylum were some of the other stocks which came under selling pressure. So, very, very close, at least at the index level, to a new all-time high as we ended today's session. Back to you.
All right. Many thanks, Prashant, for joining us. In fact, the Union Cabinet briefing is currently underway. Ashwini Vaishnav, the Minister, is speaking about the decisions that the Cabinet has approved, including one that we broke right here on CNBC-TV18, a 7,300 crore rupee incentive scheme for rare earth magnets. Listen in.
इस पे करीब 7,280 करोड़ रुपए का इन्वेस्टमेंट होएगा. 7,280 crore rupees will be invested, and the focus will be on the entire value chain. It will be an integrated manufacturing facility. और केवल एक नहीं, up to 5 units will be established. Up to 5 units will be established, each one having 1,200 metric tons per annum capacity. देश की रिक्वायरमेंट करीब 4,000 से 5,000 मेट्रिक टन की देश की अभी रिक्वायरमेंट है, और ये रिक्वायरमेंट बढ़ती जा रही है. जैसे जैसे इलेक्ट्रॉनिक्स की मैन्युफैक्चरिंग बढ़ रही है, जैसे जैसे मेडिकल डिवाइसेस की मैन्युफैक्चरिंग बढ़ रही है, इलेक्ट्रिक व्हीकल्स की मैन्युफैक्चरिंग बढ़ रही है, वैसे वैसे देश में परमानेंट मैग्नेट की इंपॉर्टेंस बढ़ती जा रही है, डिमांड बढ़ती जा रही है, रिक्वायरमेंट बढ़ती जा रही है. तो टोटल 6,000 मेट्रिक टन्स पर एनम मैन्युफैक्चरिंग कैपेसिटी डेवलप करेंगे in 5 units. So within next 2 to 3 years, these plants will be set up, और इन plants में manufacturing production start हो जाएगा, and this will be a major strategic win for the country, because permanent magnet और semiconductor chips, इन दो के बिना आज कोई manufacturing practically नहीं हो सकती है. इसीलिए प्रधानमंत्री जी ने पहले semiconductor chips, फिर critical mineral mission, और आज परमानेंट मैग्नेट की मैन्युफैक्चरिंग का ये प्रोग्राम, ये स्कीम लॉन्च की है. बहुत इंपॉर्टेंट है. इसके बारे में और डिटेल आपको मिनिस्ट्री ऑफ हेवी इंडस्ट्रीज से डिटेल मिलेंगे, लेकिन करीब करीब सारे पॉइंट्स आपके इसमें आ गए. हैं उनको बहुत बेनिफिट होगा. जो इंडस्ट्रीज परमानेंट मैग्नेट का यूज करके आगे की मैन्युफैक्चरिंग करती है, जैसे इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग है, तो उसमें इसका बेनिफिट मिलेगा. इलेक्ट्रिक व्हीकल्स, बैटरी व्हीकल्स, उसमें इसका बेनिफिट मिलेगा. मेडिकल इक्विपमेंट, उनको बेनिफिट मिलेगा. हमारे डिफेंस से रिलेटेड जितनी मैन्युफैक्चरिंग है, उसमें इसका बेनिफिट मिलेगा. लंबे टाइम से एक बहुत बड़ी ये रिक्वायरमेंट थी देश की, जिसको आज माननीय प्रधानमंत्री जी ने कैबिनेट में अप्रूव किया है. ये बहुत बड़ा फैसला है और बहुत ही स्ट्रैटेजिक डिसीजन है ये, और इस डिसीजन से देश के लिए एक बहुत इंपॉर्टेंट एक रोड मैप तैयार होगा. मैं आता हूं अगले डिसीजन पे आज के. पुणे, वन ऑफ द लार्जेस्ट सिटीज इन द कंट्री नाउ, अमंग द टॉप 10 सिटीज, पुणे 80 लाख से ज्यादा इसका पॉपुलेशन है. जैसा आपने देखा पिछली कई कैबिनेट ब्रीफिंग्स में, आपने देखा 1 by 1 पुणे के मेट्रो नेटवर्क को स्ट्रेंथन करने का, एक्सपैंड करने का लगातार डिसीजन लिया जा रहा है. आज बहुत बड़ा फैसला लिया गया. इस एनिमेटेड इसमें आप देखेंगे, ये एग्जिस्टिंग दोनों लाइंस हैं जो कि नॉर्थ साउथ और ईस्ट वेस्ट को कवर करती है. ये दोनों ऑपरेशनल लाइंस हैं. और जो येलो में आ रही है, ये सारी अंडर कंस्ट्रक्शन लाइंस हैं. इनका कंस्ट्रक्शन अभी चल रहा है. ये इसके डिटेल्स आ गए. ये लाइन मेगापोलिस से लेके सेंटर तक जाती है, चांदनी चौक से वनस तक जाती है, और कटराज से लेके स्वारगेट तक जाती है, और इधर रामवाड़ी से विठलवाड़ी तक जाती है, और ऊपर निगदी से पीसीएम से.
Well, that's Minister Ashwini Vaishnav on the decisions taken by the Union Cabinet. A CNBC-TV18 News break now confirmed 7,280 crore rupee investment scheme to manufacture permanent rare earth magnets in the country. Our colleague Abhimanyu Sharma joins us now. Take us through the contours of that scheme that the Cabinet has cleared, Abhi.
Well, the scheme aims to promote domestic manufacturing of rare earth magnets, which are extensively used in several components across several industries, on which there is a certain degree of dependence on imports, which the government wants to mitigate. And there have been supply chain concerns which have been witnessed in the past 1.5 years with respect to availability of rare earths and also rare earth magnets. So that has been a constant demand from the domestic industry as far as overall availability is concerned. Now, speaking about the overall production of rare earths per se, and not just magnets, there have been several schemes which have been initiated by the union government, particularly the National Critical Minerals Mission, in which the government has also started resorting to through trawling of all tailings of minerals, of all mineral deposits and even waste for that matter, to ensure that none of these minerals are wasted and these rare earths are mined and refined to the best possible extent. However, availability of technology continues to remain a concern, which this PLI scheme intends to mitigate, and it intends to incentivize several companies to get into manufacturing of rare earth magnets, which will possibly also involve MOUs and several tie-ups with foreign players. India is also in touch with several other countries as far as ensuring ample availability as well as refining of rare earths and rare earth magnets is concerned. So overall, the PLI scheme aims to incentivize the production of rare earth magnets, which is possibly going to ensure ample availability for several sunrise sectors which are extensively using these rare earths.
All right, Abhimanyu, many thanks for joining us. That's the big decision that's been cleared by the cabinet. But let's talk about the action in the commodity space. Gold prices rising for the second day in a row, closing in on a 2-week high. This after U.S. economic data boosted expectations of a Fed rate cut in December. Safe haven demand also rose, and lingering tensions between Japan and China adding uncertainty. Of course, the Russia-Ukraine truce is still awaited. India is all set to become a $4 trillion economy this financial year. 4 eminent economists tell CNBC-TV18 that the $4 trillion goal can be achieved even if nominal GDP grows at a slower pace of 8%. Growth in the current fiscal, that is. However, they also believe that India's ambition of becoming a $5 trillion economy could be delayed by 2 years because of lower inflation and a weaker currency. So India is likely to achieve that milestone in FY29 instead of FY27. Now, shares of Bharti Airtel declining over 1% in trade on the back of a large trade deal. As many as 3.5 crore shares, amounting to 7,400 crore rupees, sold at 2,108 rupees a share. The buyer and the seller of the deal have not been disclosed yet, so a big block there for Bharti Airtel. Shares of IIFL Finance gained after the company's board approved a public issue of non-convertible debentures of up to 2,000 crore rupees. The issue will be launched in 1 or more tranches and will also include a green shoe option. This will allow the company to raise the size of the issue if the investor interest is higher than what is expected. Packaging company AGI Greenpack is likely to raise up to 800 crore rupees through a qualified institutional placement in December. Sources say the fundraise is likely to include a base size of 500 crore rupees with an option to add another 300 crore rupees. The funds will be used for a new beer bottle manufacturing plant in Madhya Pradesh. Shriram Finance Executive Vice Chairman Umesh Revankar has brushed aside reports of a possible capital infusion. Speaking to CNBC-TV18, he said the company does not need fresh money for its growth plans. He added that though foreign investor interest remains high, capital discussions do not imply a need for funding.
We are at 20% plus on CRAR, so we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital.
Shriram Finance is in discussions for potential equity fundraise, but nothing concrete as of now.
So as I was telling you, we have been talking for a long time, not now.
Okay.
Okay.
And do you think a deal you're reaching, I mean, there's progress with regard to these conversations?
Nothing to comment right now.
Well, the speculation continues. Nothing to comment right now, says Umesh Revankar. Electronic giant HP has announced that it plans to reduce its headcount by at least 4,000 to 6,000 employees. This equates to around 10% of the company's global workforce. HP says the layoffs are part of its long-term restructuring plan. These cuts come after HP reported weak guidance for the fiscal year. Prime Minister Modi flagged off French major Safran's aircraft maintenance, repair and overhaul facility in Hyderabad with an initial investment of over 1,300 crores. Now, the MRO Centre is Safran's largest aircraft engine MRO facility anywhere in the world. It could employ over 1,000 technicians and engineers once it becomes fully operational by 2035. Madhya Mujawar gets us a sneak peek into Safran's new Hyderabad MRO.
We are in Hyderabad at the GMR Aero City, and what you see behind me is a brand new aircraft engine maintenance facility by French engine manufacturer Safran. It's their biggest ever engine maintenance facility anywhere in the world. It is also the first time that an OEM, an engine manufacturer, is setting up a maintenance facility in India. The facility got inaugurated by Prime Minister Modi a short while ago.
आज से भारत का एविएशन सेक्टर एक नई उड़ान भरने जा रहा है। साफरान की नई फैसिलिटी भारत को एक ग्लोबल एमआरओ हब के रूप में स्थापित करने में मदद करेगी। ये एमआरओ फैसिलिटी हाईटेक एरोस्पेस की दुनिया में युवाओं के लिए नए अवसर भी बनाएगी।
You have seen that India has grown tremendously in civil aviation with a growth rate of more than 10% over the last 11 years. Especially the growth has come in the number of airports we have opened, in the number of passengers, the air travel passengers that we have, and also the number of aircrafts. But then we wanted to dig deeper into the aviation sector, and we want to become the global aviation hub for aviation in the world. So for that, we wanted to expand the MRO network in the country.
Over 500 aircraft in India are powered by Safran CFM or LEAP engines. The engine that you see next to me is the LEAP engine, and there are Indian airlines, including Indigo and Air India, have ordered more than 2,000 engines from Safran. Right now, there is no capability in India to service engines, to maintain engines. So Indian airlines have to send the engines overseas, and when Safran, the OEM, the engine manufacturer, sets up shop in India, it becomes easier not only for the OEM to provide maintenance services, but also for airlines.
India is so fastest growing country, so important. It was making sense, a lot of sense for us to accompany our Indian airline customer by setting up a maintenance, repair and overhaul center here in India.
It is not just the commercial aircraft maintenance facility that Safran inaugurated today. What you see here is the Rafale M88 engine that Safran makes for Rafale, and they today laid the foundation stone to make a maintenance facility to also provide maintenance services for M88 engine. So even these engines in the next few years will get the maintenance services right here in Hyderabad. And the capacity that Safran is talking about is 300 engines per year, and they will not just cater to Indian airlines but also global airlines. So that takes this closer to India's dream of becoming a global MRO
Well, that
hub.
is a big development for the Indian aviation sector. Safran setting up an engine MRO in Hyderabad, the largest MRO facility for the company anywhere in the world. Madhya Mujawar reporting there. We will head into a break, but up next, the semiconductor war heats up between Google and NVIDIA this time. A special report when we return. Well, the big global story, US President Trump's special envoy Steve Witkoff reportedly told a senior Kremlin official how to pitch the Ukraine peace plan to the US president in a phone call in October. Bloomberg released a transcript of the phone call which reveals that Witkoff suggested that Putin could congratulate Trump for the Gaza agreement and propose a Ukraine peace deal along similar lines. He also advised scheduling a Trump-Putin telephone conversation before Zelensky's White House visit later that week. President Trump described Witkoff's reported approach as standard negotiating procedure, while the Russian official did not deny the authenticity of the transcript, telling Russian state TV that the leak was an attempt to hinder the talks. Both Trump and Russia have confirmed that Witkoff will meet President Putin in Moscow next week. Now, the semiconductor war between NVIDIA and Google is heating up. NVIDIA CEO Jensen Huang has said that NVIDIA's chips are a generation ahead of the industry. This post came after NVIDIA's shares fell 3% after reports suggested that Meta, a major client of NVIDIA, is considering buying AI chips from Google. The market capitalization of Google's parent Alphabet is racing towards the $4 trillion mark, and a big part of the story is its expansion into AI hardware. Rachna joins us now with more. Rachna, tell us about Google's hardware ambitions and how it could impact NVIDIA.
Well, global attention in the AI race has now shifted sharply towards infrastructure and hardware. And for years, NVIDIA has been the uncontested leader. But the landscape is beginning to change. Google is widening its AI ambitions beyond software and into the hardware layer. Alphabet has started offering its in-house TPUs to external customers through Google Cloud. Now, TPUs are custom-built AI accelerators designed specifically for training and running large AI models. These are unlike NVIDIA's more general-purpose GPUs, and that push has been accelerating. Anthropic has already reserved up to 1 million TPUs for 2026, and Meta is in advanced discussions on a multi-billion-dollar arrangement that would see it rent Google's cloud chips next year and install Google accelerators inside its own data centers from 2027. Those moves position Alphabet as a credible alternative to NVIDIA in high-end AI infrastructure. The market reaction has been swift. Alphabet shares are up nearly 70% this year, taking the company close to a $4 trillion valuation. At the same time, Google has been building independence across the rest of the AI stack. The Gemini family now runs across Search, Android, Workspace, and Cloud. DeepMind continues to advance frontier research with systems like AlphaFold 3 and the RT series robotics models. And Google is training its largest models on its own compute platform inside AI-first data centers it designs and operates. From NVIDIA's side, the response has been to highlight its lead. Jensen Huang maintains NVIDIA's GPUs remain a generation ahead and continues to emphasize the breadth and maturity of his platform. But the fact that Google's chips are attracting serious interest and that major rivals are preparing multi-year commitments points to a widening hardware market. So taken together, Google's custom chips, its homegrown frontier models, and its vertically integrated infrastructure explain why investors now see Alphabet as one of the most comprehensive AI platforms globally. And why is it moving within the reach of the $4 trillion milestone? Back to you.
Rachna, many thanks. Now, Indonesia's capital, Jakarta, has dislodged Japan's Tokyo as the world's most populated city. The UN has released a report on megacities across the world to take stock of the progress in urbanization. Jakarta is on top with a population of over 4 crore people. Dhaka at number 2 with a population of 3.6 crore. Tokyo, number 3 on the list. New Delhi comes in at number 4 with a population of 3 crore. Shanghai and Guangzhou in China take the 5th and the 6th spot. More than 33% of the most populated cities are in China and 17% in India. Egypt's capital, Cairo, is the only non-Asian city in the top 10. Manila, the capital of Philippines, along with Kolkata and South Korea's capital, Seoul, complete the top 10. The other Indian cities in the list include Mumbai at number 12, Bengaluru at number 24, and Chennai at number 29. These are the only cities in India with a population of more than 1 crore people. The report also highlights how the world is becoming increasingly urban. 45% of the world's population of 8.2 billion now live in cities. For comparison, only 20% of the world's population lived in cities in the 1950s. And urbanization is expected to rise, with 66% of the global population estimated to live in cities by 2050. Dhaka is also projected to overtake Jakarta as the world's most populous city by 2050. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Let's talk money.
Hello and welcome to Let's Talk Money. I'm your host, Surabhi Upadhyay. India has finally ushered in a new era of labor regulation, a long pending reform that is aimed at improving worker welfare and boosting the ease of doing business in the country. On the show today, we will understand how exactly these 4 new labor codes impact us, corporate employees, what happens to our salary structures, what happens to our take-home pay, and do our retirement benefits actually improve? Well, joining me to shed light on this very important subject are Sonu Iyer from EY India and Vaibhav Bharadwaj of Khetan & Co. Ladies and gentlemen, thank you so much for joining in. You know, last couple of days, so much has been said about what happens, and there's been a lot of talk of whether we get our gratuity early or not, and whether PF goes up, but our take-home salary comes down. So plenty of excitement for obvious reasons. So thank you for joining in for this. And I want to start by getting your opening thoughts, because this indeed is a landmark reform. And these codes were actually, I think, set up in way back in 2019 or 2020, if I'm correct. Sonu, so let's open with you. Your first thoughts.
Thanks, Ruby, for having me on the show. So as you rightly said, long time coming. We've ushered in an era of new labor laws, which is really needed. I'd say in one word, these are game changers. It is the beginning of the new era of labor laws, which was much needed to modernize our workplace in sync with the modern workforce, as also making much more stability, uniformity. I mean, the whole idea of 29 fragmented laws coming together, being compressed into 4 labor codes. Simplification is the game. Universal wage, trying to bring in social security for the informal sector, gig workers, platform workers, which is the modern workforce. So, game changer for women, allowing them to work for night shifts with their consent and ensuring safety and ensuring that security is there, transport is arranged. So, and gender neutral policies, equality in recruitment at the time of salary fixation, retention. So that gender neutralization is a great thing and really, really sets the way to get to a $10 trillion economy that we want to become.
And change in our labor laws has been one of the long-standing demands from India Inc. as well. Vaibhav, I'm sure you'll agree. So what do you think? I mean, now that we have these 4 new codes, are they more industry-friendly or are they more employee-friendly, or do they manage that fine balance?
No, I think it will be able to. It's a balanced reform, and honestly speaking, it's a very welcome change and a welcome reform. Because if you look at our legislation, some legislations even date back to our independence era. So, and of course, given the fact that over a period of time, the businesses have changed, the business model have changed, but unfortunately, the dated legislations never thought through about these legislations. And that was one of the reasons why there were several legislations, specifically as far as labor is concerned. And with these changes coming in, of course, there will be uniformity. But still, there is a long way to go. It's a long journey because implementation is the key aspect. As Sonu has also pointed out, there has been a lot of welcome changes, specifically with respect to recognition of gig workers, gig economy, because gig economy has grown exponentially in last 6 to 7 years. And the biggest issue was that the gig workers were never protected. There were no laws regarding gig workers, and now with labor codes coming in, there have been something in place wherein, yes, there are safeguards in place. They will be subject to certain benefits. There will be health insurances and so far. So far, it's a welcome change, but the biggest challenge is on the implementation part.
Yeah, and we need to see. We need to see if all the supporting legislation, how quickly it gets underway, when are the final rules notified, actual rules and the details that will operationalize these codes. And there are 4 codes, by the way. So let's just have that graphic up on your screen. And a lot of these changes that we're speaking of, whether it's women working at night, whether it is the definition of wages itself, all of them come under one of these 4 codes. The first one is the Code on Wages 2019. Then there is a Code on Social Security 2020, the Industrial Relations Code, the Occupational Safety, Health and Working Conditions Code, which among other things, by the way, one of these codes, I think is the last one, which mandates health checkups for employees who are over 40 years of age. So lots of new things coming in and generally lots of good things for employees. But Sonu and Vaibhav, I want to start right there. The definition of employee and the definition of worker, right? Just tell us from our perspective, and a lot of people who watch this show, they are working with the corporate sector or maybe even with the public sector, but they end up being salaried employees. So do we need to go into this nuance of employee, worker? Is there anything new that we should be aware of? Sonu?
So Surabhi, we need to focus on this change. Definition of worker is same as the definition of workman under Industrial Disputes Act. Why this becomes critical is the worker being defined across all codes uniformly is to say that anyone who's not in a managerial or supervisory role is likely to be treated as a worker. If someone is not in a managerial or supervisory role, will become a worker, and therefore job descriptions, roles and responsibilities all need to be well defined to ensure who's an employee, who's a worker. Because workers have additional benefits, they are entitled to overtime, they get additional compensation on being asked to leave. So there are benefits that are attached to workers, which we need to be mindful of.
This is important. Vaibhav, come in on this, because even in corporate organizations, I mean, if I'm not a team leader, if I'm a team member, and therefore I don't have any managerial responsibility, then do these new laws mean that I'm a worker? In which case, like Sonu was saying, then, overtime pay, a lot of other benefits come into the picture. So what's the interpretation?
Case as well, because worker is equivalent to a workman under the Industrial Disputes Act, which was the erstwhile legislation. So yes, on-ground role and responsibility and actually what the employee is performing on ground is the key factor to assess whether a person is a workman or not, or worker in the present case. And now if you look at employee versus worker, employee is a larger definition, or it's an umbrella definition under which a worker would fall. So yes, there are certain legislations and there are certain provisions which will only be applicable to worker, and such as retrenchment compensation, which was earlier in the Industrial Disputes Act and now it's in Industrial Relations Act. So that will still extend, but that would only be for worker. So there has been no change from that perspective. Yes, but they have aligned the definition with what was in the erstwhile legislation.
And what about overtime benefits? I'm sure that's a phrase that caught everyone's attention. But does anything change? And I'm talking about, again, this question pertains to salaried employees who do not have managerial roles, who are in execution roles. So what about provisions of overtime?
So I'd say that workers are entitled to overtime, and overtime is 200% of your wages. So it is not everybody who gets overtime, it is. But I think the other good thing that has happened is rationalization of working hours. So the overall governance around 48 hours in a week has been maintained, but there's much more flexibility for the employer to be able to set working hours according to that. But a lot of work needs to happen for harmonization of all of this, because state governments will come out with their own specific rules. There are already Shops and Establishment Act which have working hour conditions, etc. But work, as we spoke about earlier, the good thing is that the framework has been given, but a lot more needs to happen from a detailed perspective in operationalizing all of this. But yes, the codes say that working hours will be capped at 48 hours in a week, 125 hours in a quarter, which is towards rationalization and ensuring there is much more governance around working hours.
Okay, all right. So that's something that we're going to watch out for, all the final rules as they are operationalized. Now we come to the crux of this. The definition of wages and the 50% cap, which has been now imposed through these labor codes when it comes to exclusion. So we need to start understanding our salary structure very carefully. So Sonu, if you could just illustrate this, because anyone's total cost to company has a lot of components. There's a basic, there could be an HRA, there could be a special allowance, etc., transport. Will salary structures need to change because of the new codes?
Okay, I'll answer this in a way. Right now, in our sort of the outgoing labor law framework, definition of what should be considered as a basis for calculating benefits was different for different things. You had a different way to compute gratuity, you had a different way to compute leave encashment or other retrenchment compensation, etc. So the reform is to have a consistent definition of wages across all such retirement benefits and payments, so that we have consistency and nobody uses different this thing. Now in a salary structure, what they're saying is that the employers will also have to look at it from a perspective of workers' right being protected, that exclusions that can be excluded from the definition of wages to compute benefits will be capped at 50%. So like we have exclusions like house rent allowance, conveyance allowance, statutory bonus. All of these are excluded from the definition of wages for computing, gratuity, etc., as per the new law. But the cap is at 50% of these exclusions are permitted only.
So Sonu, let's take an example. Your numbers always help illustrate this point. If we can actually just break this down, like I said, someone will always have different components to that salary structure. So how will this 50% cap be calculated, and what could be the change in the wage itself? If you could give us one or two examples.
Okay, so if you would want me to look at an example, I then have to look at my notes. So base salary, say if I have basic salary of 20,000 and I have a house rent allowance of 10,000 and a conveyance allowance of 8,000 and a special allowance of 12,000, which adds up to 50,000, right? Now, if I were to say that my total salary is 50,000, let's look at it as per the definition. And right now on an example one, what can be excluded from the definition of wages? House rent allowance can be excluded, conveyance allowance can be excluded. So my exclusions are 18,000 rupees. what is 50% of 50,000, which is the comp salary? That is 25,000. As per law, I will be able to exclude from the definition of wages whatever is the amount of exclusion or 50% of salary, whichever is lower. So in this example, it's 18,000, which is excluded. For the remaining, you have to pay compute gratuity and benefits on that definition, which is basic and allowance, right? Earlier, many of these allowance benefits were computed only on the basic salary. So to that extent, there is a cost increase that is happening for the employer. If you look at the second example, which is where, which is more telling, where it brings out what is really the change. When I'm talking about the fact that, if my basic salary is 20,000, the house rent allowance is 14,000, conveyance allowance is another 14,000, and special allowance is only 2,000. Now, if I add up the exclusions, which is HRA and conveyance allowance, that adds up to 28,000 in this example. Now, if that is the case, if you remember the 50% of the total remuneration, 50,000, which is only 25,000 rupees. So when I compare 28,000, which is my exclusions as per the structure, with the 50% of the total remuneration, I will be capped at 25,000 only. So irrespective that my, HRA and conveyance allowance are adding up to more than 50% of CTC, but as per the new definition, my exclusions will be capped at 50% and rest will be added back to basic salary and allowances to compute the benefits.
So essentially, in cases where the exclusions have been very high and the basic salary has been low, that's where there's likely to be a change. And some of those high exclusions will be plowed back from the exclusions bucket into the wages bucket. So the actual wage ends up being higher. It cannot be lower than 50% of total compensation. Got that point? We need to take a break, but we'll dive a little deeper into this, and we need to understand then what this change in the definition of wage, what does it mean for our benefits? We'll discuss that after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we are discussing the all-important brand new 4 labor codes that have ushered in a new era of labor reform in the country. Now, we've just understood how the definition of wages itself is changing. And let me go back to our guests. Of course, Sonu Iyer of EY with us and Vaibhav Bhardwaj of Ketan & Co. also with us. Vaibhav, this question to you, because Sonu just explained to us how the definition of wage will change and the calculation could change if your employer has been giving you too many exclusions as part of your CTC. But the other worry is that with a higher definition of wages, what happens to my provident fund? The worry is that I'll be, a lot of my salary will go into PF. I won't have enough to spend right here, right now. Is that the way the law is being worded?
Yes, from a long-term perspective, there are huge benefits. But just to explain to you, the definition of wage, I would say it's one of the instrumental change under the wage code. And just to take a step back, there have been judicial precedents, and it's a settled position of law that the allowances that are universally payable to everyone should be included as part of basic wages while calculating provident fund. Now, this is something which is a settled position of law, and in fact, the Supreme Court has also recognized this particular matter. Now, with the wage definition, it has become extremely clear that what allowances can be included, and if the allowances are over 50%, then the remaining portion or the extra portion need to be included as part of basic wage for the purpose of calculating all retirement benefits, because now it's a uniform definition. So whether it's PF, whether it's gratuity, whether it's ESI, everything has to be calculated basis the definition of wages. So, of course, the impact is twofold. The employer contribution would also increase. So there will be an increase in the financial burden of the employer. And from an employee perspective, their take-home salary would reduce. But ultimately, the employees would be better off from a retirement perspective, because their corpus will be accumulated at the time of the retirement.
I am sure this debate is not going to end anytime soon, but Sonu, weigh in on this. And also the original definition of the calculation of PF, right? It used to be that 12% of basic, and then I contribute that much, and the employer contributes that much, and that's how you get a nice little PF kitty. But now it's not necessarily the pure term, the basic pay, right? Because like you explained to us, that if you have any retainership allowance, the DA, all of that is wages. So will PF be paid on this wages, which could be a bigger number itself? Is it still 12%? Will the employer still contribute as much? I mean, just tell us what we can expect on the PF front.
Okay, so maybe just add in on what Vaibhav said. First of all, the fact that, the government has been, working on a larger stated objective of social security for all, and ensuring that as longevity of lives is there is a retirement kitty. So provident fund towards is that one major benefit that employed workforce and now the informal workforce through social security, we are aiming to create a retirement kitty. Keeping that objective in mind, the government wants to be able to make sure that there is a resizable corpus available to employees once they retire. What is changing right now in labor codes, there is, of course, the new definition of wages, which will be used across Code on Social Security 2020. But on Provident Fund, I think there's a lot more that needs to come in, because what the code says is that it will be 1 year from the date of notification of Code on Social Security 2020 that we will see a new scheme of Provident Fund come in. As things stand today, whilst we have a definition of wages which is applicable, but because in the existing Provident Fund scheme itself, we have, 15,000 rupees is a salary for reference for calculation of Provident Fund, which will continue until the new scheme is notified. So in the short run, I do not expect any changes on the take-home salary because of anything going up, because this is still something that is work in progress. The rules will be notified, the schemes will be notified for Provident Fund. So we expect to see final word come in only once the scheme is notified. So there should get impact, but in the long run, it is a reform that is intended to bring in greater financial security and a larger corpus of retirement fund available to employees. So it's a positive change, and because there is rationalization of definition of wages, it ensures that anyone who is working is able to create a sizable kitty for themselves towards retirement.
Vaibhav, just come in on this, this whole PF calculation. Now, like Sonu mentioned, that the actual cap, the mandatory sort of threshold for corporates is only, I think, 15,000. They have to pay PF on a 15,000 salary. Over and above is, depending on your salary structures. Just explain how this could play out, because in most cases, even the employer's contribution to PF ends up being part of your CTC. So is it really going to be hitting the corporates? Will it really add to the wage bill at all? And once again, on PF, what would your 2 points be right now? I think you're mute.
Sorry. So as Sonu also pointed out, it will be interesting to see how the PF schemes comes through. But yes, as of now, of course, the employer contribution is only capped at 15,000, and more than 15,000, and some employer wants to contribute, it's as per the discretion of the employer. But yes, purely from a PF perspective, I would say in the long run, the take-home salary would reduce because the PF contribution would increase because of the change in the definition of wage, and a lot of allowances will be included as part of basic wages.
Okay, all right, got that. Which brings us to another important subject, and that's gratuity. Now, good news if you're a contractual employee, because I think here, Sonu, now instead of waiting 5 years and then finally getting gratuity, even if you've worked on contract with a firm for 1 year, even then you're entitled for gratuity. Is that right?
Okay, let me sum up the changes in gratuity, because there are all kinds of interpretations in gratuity. As we understand it, the two changes which are relevant from a gratuity perspective is, in case of fixed term employment contracts where you have a contract for a fixed term of employment, gratuity will become payable after 1 year of employment. So gratuity comes in for fixed term employee, which was not there earlier. So it's a very positive benefit. There is also, of course, parity in all kinds of benefits for fixed term employees as is available for permanent employees. Now, in case of permanent employees, the eligibility for gratuity only kicks in after 5 years of working. And what is changing there is that the calculation of gratuity will be on the new definition of wages. Up until now, gratuity was computed only on basic salary and dearness allowance, if any. But now it will be on the new definition of wages, which we just discussed, which is basic salary plus allowances, exclusions being capped at 50% of the remuneration. So that's the change on gratuity. Again, currently the gratuity ceiling is also capped at 20 lakh rupees, but there will be a new notification that will need to be issued under the newly notified Code on Social Security 2020. So we'll see if the gratuity ceiling goes up, but the current 20 lakh ceiling continues, as was the case under Payment of Gratuity Act.
So sounds good. I think the sum and substance of this is that this is a good reform. It's good for employees and perhaps not too bad for employers either. So win-win in that sense, perhaps, truly speaking. Thank you so much, Sonu and Vaibhav, for joining in and making sense of these all-important labor codes for us. And thank you, viewers, for watching. If you still have any more questions, please keep writing into us and we'll make sure that they are answered in the coming shows. See you next week with another theme.
Let's talk money.
Hello and welcome. You're watching News Centre and I'm Parikshit Luthra. The Cabinet has approved a 7,280 crore rupee scheme to promote the domestic manufacturing of rare earth permanent magnets. The initiative aims to build an annual production capacity of up to 6,000 metric tons, designed with a validity of 7 years. The scheme comprises sales-linked incentives of 6,450 crore rupees on sales for 5 years, a capital subsidy of 750 crore rupees for setting up manufacturing facilities in 2 years. The total capacity will be allocated to 5 beneficiaries through a global competitive bidding process. Each beneficiary will be allotted up to 1,200 metric tons per annum of capacity. The move comes amid China's export curbs on rare earths, which are crucial for manufacturing electric vehicles, electronics, wind energy, defense equipment. This new scheme could help meet the growing demand in India, as rare earth magnet consumption is expected to double in the next 5 years.
भारत की रिक्वायरमेंट लगातार बढ़ती जा रही है परमानेंट मैग्नेट की, और परमानेंट मैग्नेट को भारत में मैन्युफैक्चर करने के लिए आज एक रेयर अर्थ परमानेंट मैग्नेट्स स्कीम REPM स्कीम अप्रूव हुई है कैबिनेट में. माननीय प्रधानमंत्री जी ने अप्रूव किया है इसको. इसमें फोकस रहेगा एंड टू एंड कंप्लीट इंटीग्रेटेड मैन्युफैक्चरिंग सिस्टम बने, भारत में integrated manufacturing facility bane.
And joining us to discuss the significance of the scheme is Vinny Mehta, Director General at the Automotive Component Manufacturers Association, Siddharth Nautiyal, Head of Strategy and New Initiatives at Loham, a lithium-ion battery recycling company, and Saurabh Agarwal, partner with EY India. Gentlemen, thank you very much for joining us right now. Siddharth Nautiyal, if I can come to you first. The incentives under this scheme: a capital subsidy of 750 crore, a sales incentive of 6,450 crore for the industry. 5 beneficiaries in total will get incentives. Is this really enough to help set up an ecosystem of manufacturing rare earth magnets in the country? And will there be enough domestic demand?
I think this is an excellent start. India needs rare earth permanent magnets. We import pretty much all the magnets that we use today. And that is actually not a good situation for us to have at all from a strategic, geopolitical, and risk point of view. So to de-risk that, this I think is an excellent scheme that the government has come up with. It's in line with the National Critical Minerals Mission that was announced, for which a budget allocation of 34,000 crore rupees was made earlier this year. And this will be a great scheme to move things forward. India's demand of permanent magnets is likely to double in the next 5 years or so. Today, all that we use in terms of permanent magnets is imported, mostly from China. And we've seen that that is a risk that our country cannot take today, because if we give so much power to one country, the ability to switch on and off exports is a risk that we...
All right, I believe we're losing that link with Siddharth Nautiyal. We'll try and get him back. But let me take that question to Vinny Mehta at this point. Vinny Mehta, we saw the Chinese government easing restrictions of rare earth magnet licenses. Have those rare earth magnet consignments started coming in to India? Have more companies started getting licenses? Or is there a status quo?
So it's sort of a blow hot, blow cold. We had just about 4 or 5 odd companies get license, and this is about 3 weeks ago, and thereafter there have been no new licenses. So as Nautiyal said, that if you are overtly dependent on a particular economy, then they can close the tap and you could be in trouble. So in that sense, this is a really very, very welcome step, and we much appreciate. We have been working very closely with the Ministry of Heavy Industries on this, and I'm hopeful this will really help the country become self-reliant, at least in case where there is manufacturing of heavy rare earth magnets required, yes.
Right. So you're saying post-issuance of licenses for about 4 to 5 companies, you've not heard of consignments coming in or other companies getting licenses?
Over 50 companies who applied for the licenses, and as I said, just about 4 or 5 of them have gotten them, and there's been no movement beyond this. Yeah.
Right. Let me also get in our other guest right now. We have Saurabh Agarwal, partner with EY India. Saurabh, what will be critical in terms of achieving success with this scheme and having a domestic ecosystem? Currently, yes, India has rare earth minerals as resources, but we don't have refining capacity. What will it take, as per your analysis, to set up that refining capacity? And we're talking about a 7-year horizon right now, 2 years to set up factory, 5 years for incentives to be given. So in the next 2 years, will we have an ecosystem up and running where these permanent rare earth magnets will be made?
So Parikshit, if we have to put a 3-step process, there is an upstream followed by a midstream and then a downstream. If you look at as far as upstream is concerned, which is rare earth oxide is concerned, both Department of Atomic Energy and IREL in India have been working on this particular space. India is amongst one of the 5th largest rare earth, you can say, reservoir which we have across the globe. The midstream is something which is the subsequent processing activity is not there. And downstream, of course, is BLDC motor, all these things which goes into renewable energy devices, etc. That downstream also exists. I think the larger problem was always midstream. And of course, when I see the integrated word being used, it appears that, and of course, the final document has to come out, it appears that it's a combination of upstream and downstream, which will be looked as an integrated policy when it comes to this particular PLI scheme. Now, sometimes when I look at and when I read through the press release, which got released just now, it is appearing that it will be like a RFP, which will be more of a similar type of a tender, which happened in case of advanced chemistry cell. Now, what it needs to be looked into is how lucrative the policy is, what are the eligibility conditions for the same with respect to net worth criteria, etc. How much is the incentive being offered? So I did a rough maths. It is coming somewhere around 2,150 rupees per kg. That's like an average. But of course, in the first year, it will be higher. Second year, it will go down. Third year, it will. So it's over a period of time, it will go down subsequently, like it happened in case of a battery PLI scheme as well. Now, therefore, the overall capacity which India expects, or the demand which India expects, is around 8,230 metric ton by 2030. That is what we all have been saying. 6,000 metric ton is a right approach which the government is taking. The only thing is 2 years is the gestation period. What needs to be looked into is this is a capital intensive industry. I think the government was kind enough to grant a combination of hybrid scheme, which is a capital subsidy plus a turnover linked incentive scheme as a part of this particular RFP document, whatever I can see where the bidding will happen. Next thing which government needs to bring in, which Ministry of Finance needs to work on, along with Ministry of Heavy Industries, is to bring in a BCD exemption on import of any capital goods which are required for setting up of this rare earth manufacturing in India. I think all these things put together integratedly, and of course, some bit of technology being there, which can be sourced from outside India, as well as we can rely upon our own scientists. I think overall, it's a great step by the Indian government. While 2 years is a tough timeline, but appears it will be met if our industry works together with the government.
Right. Let me also go to Siddharth Nautiyal now. Siddharth, when it comes to Loham, give us a sense of whether Loham as a company, as a private entity, is considering refining of rare earth magnets. What stage are your plans at? Would you be interested in investing or applying for this scheme by the government?
Absolutely. So we are today India's largest critical minerals producer, and rare earth magnets is a very important part of our roadmap. In fact, around a couple of weeks back, we announced that we'd be setting up a new integrated rare earth oxide to permanent magnet facility in UP to be coming up over the next couple of years. We believe this announcement from the government of India is extremely timely. It will encourage us and many others like us to set up capacity. We will certainly be evaluating this announcement more closely. It just came out a few hours back, as you know. But we believe it's a positive announcement and will spur us certainly and many others like us to do more and invest more.
Right. Vinny Mehta, could you give us a sense of within the automotive industry, when the consultations were on, when the Secretary Heavy Industries was speaking to various stakeholders, including those from ACMA, from the Society of Indian Automobile Manufacturers, what's the interest within automobile companies? Do they want to set up manufacturing plants to make rare earth magnets in the country? Or do they believe that despite these incentives, capital subsidy and also turnover incentives, it may still be easier and cheaper to import?
So you look differently. I think one, there's a strategic intent to be self-reliant, and as I said, you don't want anybody to be switching off the tap. And that's why the government and ACMA believes in localization as much as we can. I'm very, very hopeful that there'll be several of the ACMA members who would come forward for applying for this particular scheme. And I'm sure they're waiting for more details on the document to do the mathematics. Well, we do hope that the incentives will be sufficient enough, even if China, which is now restricting export of these items, says that, okay, you can have them imported to your country without any bars, and that country can play havoc by dropping prices. So we believe that the industry will work towards a model that secures itself from this kind of a risk. And I'm hopeful that the industry and the government will work together on this to make sure that the supply chain disruptions are minimal. Yeah.
Right. Let me get in Saurabh Agarwal once again. Saurabh, when it comes to the kind of rare earth minerals and magnets that we need, now there are 10 or 15 kinds of rare earth minerals. Would you say that there are 4 to 5 rare earth categories that we need to focus on more? The applications for which we would need those minerals and magnets the most, and which will be most important for our national security? Do you think the scheme has any of those contours and specifications?
So, Parikshit, first, in my view, there are around 17 types of rare earths which are there. Now, there are different grades of rare earth magnet which comes into picture. And based on each grade of these rare earth magnets, the price changes. Now, what is there in the scheme is something which no one knows as of now, because the RFP is still not out. So therefore, I cannot comment upon what's there in the scheme, but I'm sure that the government would have surely looked into that what is the demand which is likely to come into various sectors. So if I have to talk about sectors, electric vehicles, industrial motors for different applications, BLDC fans, smartphones and computers, solar powered pumps, elevator motors and escalator motors, wind turbine, other applications in consumer electronics. So see, these are type of applications where rare earth is being used. Looking into demand of these particular applications over a period of time from 2025 or 25 to 2030, I am sure that when we look into the fine prints of the RFP, which will be rolled out to the relevant bidders, I think we'll get more insights around it. I am sure government would have taken care of the same, and accordingly, the incentives will also undergo a change depending upon the grade of the rare earth.
All right. My final question to Vinny Mehta at this point. Vinny Mehta, what would be your recommendation to the government now? How is the industry faring at this juncture? Companies are coming up with ferrite motors. They're trying to come up with models which require low rare earth magnets. Some are trying to find supply chains in other countries. How is the industry managing currently? And is there any recommendation to the government now?
No, I think the industry is a very, very resilient industry, and I myself get surprised that they come up with solutions when we are literally pushed up to the wall. But in this particular case, this has been one of our recommendations. ACMA and SAM have worked very closely with the government of India, the MHI, on this particular scheme. And one step at a time, I think the only thing is that we need to see how we can hasten the gestation period, You cannot hasten a childbirth, but in this particular case, we have to work on a war footing, because what if there is no supply for next 2 years? We've been able to willy-nilly manage somehow at this juncture. But as Saurabh said, the permanent magnets are used so ubiquitously in the vehicle industry. A passenger car uses it in 30 applications. Right. The two-wheelers use them, the commercial vehicle uses it, the aerospace, the defense. Everybody has been using them so ubiquitously. So we need to be mindful of this, and we need to really be self-reliant in this particular aspect. So full marks to the government.
Okay. All right. Thank you very much, Vinny Mehta, Siddharth Nautiyal, Saurabh Agarwal for joining us on the program. It's time for a short break, but coming up on the other side, a glimpse into Bajaj Auto's e-rickshaw Ricky brand and India's first Tesla center in Gurugram. Stay tuned for that and much more. Welcome back to News Center. Bajaj Auto has expanded its electric three-wheeler lineup with the launch of the Bajaj Riki, an e-cart, and plans to enter 25 cities. Speaking to me earlier, Samardeep Subandh, President Intracity Business at Bajaj Auto, said that despite over 500 e-rickshaw brands in India, Bajaj Auto has already captured a 4 to 5% market share during its pilot run. Samardeep, thanks very much. You have a leadership in the three-wheeler segment. Why get the e-rickshaw at this point? You've been working on this for a few years now.
Yeah. So thank you, Parikshit. It's a pleasure. And as you may know, that over the last few years, this e-rickshaw category has been really exploding. So this was around 10 to 15,000 units a month a few years back. And now it's a 45,000 unit per month industry. So it's a big growing need, number one. Number two, we find that a lot of the products in this segment are local, they're assembled, they're not built to the highest standards of durability and quality. And we feel that with our R&D engineering capabilities, we will be able to bring a much superior product to the market. And you know, really for these two reasons, we've entered this segment.
Okay, so give us a sense of the kind of market share that e-rickshaws actually have in the three-wheeler segment around the country. How much of it are you targeting?
So over the last few years, e-rickshaw has become a bigger part of the market, and today around 38% of three-wheelers is e-rickshaws. Yeah, so it's a large proportion, and we are right now in the phase one of our launch. So we tested the product in 4 cities. We're going to 25 cities now. We don't have a volume or a market share objective in mind right now because we know that we've got a distinctly better product. We want to test it for the next few months, and then probably by the next quarter we will start putting down what our volume or market share objectives will be.
Right. Any initial offtake that you can give us color for?
So this is an interesting and very fragmented market. So there are 500 brands of e-rickshaw in the country today, or more than 500. And the number one brand has a market share of 8%. So in that context, in the first 4 markets we launched, we hit I think 3 to 5% kind of market share. So in the first 60 days. So that's how the...
So you're looking to grow that significantly. There is an e-cart that also has been launched. Will there be more products to probably give a greater variety to the customer?
Yes, absolutely, Parikshit. We believe that this growing segment can be further segmented into various needs, you know, different load categories, different range, different speeds. So I think there is much more segments and segmentation waiting to happen. So we will have more products coming in.
Okay, and my final question to you would be, what's the sentiment right now for three-wheelers in the market? What is the kind of offtake you expect for all your products in this fiscal year?
So, Parishit, three-wheelers is a category that has been growing at between 5 to 8% CAGR. And this has been consistent over a long period of time. And as Bajaj, we aim to keep growing share on that. So maybe a couple of percentage points ahead of this market growth is what we expect out of ourselves.
All right, let's move on. India's first Tesla center is going to open at Orchid Business Park in Gurugram tomorrow. Earlier, outlets in Mumbai's Bandra Kurla complex and Delhi's Aerocity function mainly as display and product familiarization centers, while this experience center combines sales, service and logistics all under one roof. Abhimanyu Sharma gets us a sneak peek into the Gurugram center, and we also try to understand from the company as to what will be the roadmap for increasing sales so far.
This is India's first Tesla center in Gurugram, which combines sales, service and logistics under one roof. With its D2C model, the company is focusing more on getting customers by highlighting the fact that there is a reduced cost of ownership for customers who are going to buy the Model Y of Tesla, which is already there in the market. The company has indicated that the sales have been good in the past 5 months, even as the company is not focusing on volumes for now. It's focusing more on building an entire ecosystem around EVs. It intends to focus on the lower cost of ownership for electric vehicles and wants to dispel any range anxiety and concerns over resale value as well as software updation, which it's looking to encash on as far as getting new customers is concerned. The company is also in process of installing more superchargers across the country, across shopping malls, and even at several destinations. It intends to collaborate with hospitality chains to ensure that EVs become more popular and superchargers become more accessible for potential customers moving ahead.
In a bid to strengthen economic ties, India and Israel recently signed the terms of reference to begin free trade agreement talks. The move is expected to provide greater market access and boost the flow of capital and investment. Speaking to my colleague Abhimanyu Sharma in Tel Aviv, Israel's economy minister Nir Barkat called for a shift from classic deals of the past to innovation-driven partnerships in AI. Listen in.
One of the things we're talking about is not do the classic deals of the past. One of the things we're going to focus on is AI. The innovation in AI is different than innovation done before. It's based on huge databases that we have to synchronize, and we have a lot of work to do that is futuristic. And so by the trust that we built together, by the collaboration, the high collaboration, I believe we'll be able to create an ecosystem probably the best in the world.
But if we speak about the existing areas where cooperation already exists, be it aerospace, defense, what kind of further collaborations, JVs or technology transfer can be looked at in terms of increasing investment and manufacturing capabilities in India?
Israel has 10,000 startups that look outbound to the world. The classic areas is defense, of course, agrotech, food tech. Agrotech is agriculture-oriented technologies. Food tech is industry-oriented technologies. Then we have food for aquatech, food from the sea. We have a huge interest in creating food from the sea. And then you have health. There's huge amount of interest in collaborating around health, precision medicine into the future. Israel's really cutting edge on that, and we'd love to share that with our friends. We have advanced industries, capabilities of how using technology to improve industries and technology. So these are areas that we have many, hundreds of companies and thousands of companies in each of these areas, and we know how to synchronize them with the relevant partners in India.
My final question to you, any deliverables, any metrics or targets being looked at with respect to bilateral investment, with respect to collaborations and more contracts to Indian companies in Israel, as you alluded to in your speech?
Yeah, the answer is yes. Because India respects IP, intellectual property, it's easy to invest in India rather than some other places in the world that don't respect IP, which are challenging. So the idea is that when an Israeli company invests in India, we're willing to see how to increase the financial help manage risk in a way that will enable to increase investments made by Israeli-related companies to India. This is something that we feel very comfortable considering and looking and reviewing, and we would strongly recommend our Israeli entrepreneurs, if and when they do business in India, we'll be happy to increase the investments there and make it 1 + 1 = 3.
And shifting focus to the aviation sector, Prime Minister Narendra Modi inaugurated Safran's Advanced LEAP engine maintenance, repair and overhaul facility in Hyderabad, marking India's entry into the global aircraft engine maintenance ecosystem. Safran CEO Olivier Andres spoke to my colleague Madiha Mujawar about the company's €200 million investment.
India is an obvious country for us because we've been here for more than 70 years, accompanying India in their journey for more sovereignty, and also because India is the fastest growing market in civil aviation. More than 10% of growth each and every year. And so there's a big growth from the Indian airlines, and most of them have ordered hundreds of aircraft from Airbus and Boeing. But the fact is, be it Airbus or be it Boeing, we are powering 80% of the aircraft, narrow-body aircraft, that are flown by the Indian airlines. And there's a very significant number of engines on order. 500 aircraft are today flying with our engines, and much more to come. We have 2,000 engines on order, and this is just the beginning.
The second important thing for you today is also the foundation stone for the Rafale M88 engines. What gave you that confidence?
Because the Indian forces, Air Force and Navy, have already ordered the Rafale fighter. And they are one of our biggest and more trustful customers for the Rafale fighter. And so for us, it was also an obvious move that for the first time in our history, we are going to set up a maintenance, repair and overhaul center for a military engine outside of France. And so this center is going to be able to serve not only the Indian forces, but also, why not, some other Rafale customers around this region.
All right, with that, it's a wrap on this edition of News Center. More news and updates continue right here.
Welcome to a very special in genomics. The 4 new labor codes notified by the government last week are a huge exercise in simplification. They reduce 1,228 sections to just 480, 1436 rules to just 351, 31 returns, and that's very important, 31 returns that companies have to file to just 1, and 4 licenses to just 1. It has, of course, other employer-friendly rules. For instance, it decriminalizes 65 sections, and it has employee-friendly rules like the eligibility of gratuity after just 1 year of service. There's much more, which is probably well known. But to discuss the implications, I have with me an elite panel, but we are going to discuss 2 very different and specific issues. One, can it help more job creation, which is an economy question, and 2, a very legal question, how does it impact listed companies because of the new gratuity rules, which has to be calculated on 50% of the C2C and not just basic? Joining me are Manish Sabarwal, the founder of TeamLease, Amit Basole, professor at Azim Premji Institute, Somraj Roy, the CHRO, Chief Human Relations Officer at CIAT, and Atul Gupta, partner, Labour and Employment Practice at Trilegal. Gentlemen, good morning, and thank you very much indeed for your time. Deeply grateful to Manish, who has had to, who's just landed from a flight, and to Atul Gupta, who has put off a flight. Thank you, gentlemen. Manish, first to you. Give us the macro implications. Do you think small-scale enterprises are the ones that are benefited most?
I mean, the 5 victims of India's labor laws have been MSMEs, they have been backward states, they have been women or labor market outsiders, and they've been farmers, right? The most embarrassing number about India 35 years after reforms began in 1991 is that 45% of our labor force is still on farms. The only way to help farmers is to have less farmers. You can't make farming viable with almost half your labor force. But the high-wage non-farm job creation in India has been limited, muted, and disappointing. And I think infrastructure, skills, and finance have shifted from being a dagger in the heart to a thorn in the flesh, right? They need to get better, but they have improved substantially in the last 35 years. But I think regulatory cholesterol, and a big emblem of that was labor laws, there's a lot other things, is possibly the only explanation why 35 years after reform, in the same period, China has moved 300 million people from farm to non-farm employment. I know I don't want to live in China, but I do admire them moving, 400 million people from farm to non-farm employment. So I think labor laws have held back India in various ways, but they have held back employers. There is no other explanation for 63 million enterprises translating only to 30,000 companies with a paid-up capital of more than 10 crores.
Oh, yes, that's extremely well put in terms of numbers. Coming back to you, Manish, we'll handle the macro question and do the micro question as well of gratuity. Amit, first thoughts from you. Are you convinced, as an economist who concentrates on employment a great deal, that this is clearly liberalizing or liberating India's MSMEs?
So thanks, Lata. It's definitely a very big step, right? It's one of the biggest things we've seen in a while, especially in this field. Now, when we talk about labor laws, you're always balancing 2 things: the rights or protections for workers and making employers competitive. And going, economics, going back to Adam Smith, we know that employers are in a more dominant position. That's the way the economy works. So the state has to step in to protect worker rights. I think everybody agrees on that. The question for a country like India always is, when you have so much surplus labor and so many workers competing for the same few jobs, how do you enable more job creation? And that job creation will then make the laws more easy to implement. Yes. I think this is the really key point here, and the vision behind the laws is that implementing labor laws when there's a lot of surplus labor in the economy is very difficult. It's very easy for employers to work around those laws because there are workers willing to take up jobs. So tightening the labor market is really critical. Job creation is really critical to enable laws to function. And this, I think, is a vision here. So when we talk about things like fixed term employment, the new things they've introduced, hopefully we can talk more about that a little bit later, or allowing women to work in night shifts, or raising the ceiling from 100 to 300 nationally for the industrial disputes and so on. These are all ways to hopefully enable employers to become more competitive, expand, and create jobs. I say hopefully because many other factors matter. Okay? This is a supply side reform.
Yeah.
Demand matters. Whether the investments will come or not, that depends on many other factors, infrastructure, logistics.
Absolutely.
Labor is not the only issue.
Yeah, no, I take your point. Technology, staring us in the face could be a, job destroyer. In fact, Amit, Manish, I spoke to, it is easy to get big corporates to speak. I had to, struggle hard to get a lot of SMEs, and their single point was life is much easier. ये जो number 2 का काम करता है cash का, वो लोग तो करते ही रहेंगे, लेकिन हमारे लिए the ability to compete with these informal guys is much better because, as Manish says, the regulatory cholesterol is much less. We have to spend much less time. The small industries are genuinely happy. I can tell you that. Will you create more jobs? I asked them. They said, "Arey, that will depend on our orders." No. All we are saying is life is easier. But they did not commit that they will be able to create jobs immediately. Now, with that, let me come to the formal sector big question, and then I come back to both of you for the economy questions. Somraj Roy, the big question that almost all the big corporates threw at me was, our gratuity bill will go up. Is that your worry as well?
Thanks, Lata, to have me on board. Look, we are still awaiting certain clarifications on various inclusions and exclusions of the wages. Whatever it seems from whatever I have read, yeah, the base for calculation of gratuity is to be upwardly revised. And that would mean there would be certain employee costs going up when gratuity base increases.
Okay. Now, let me put that to Atul Gupta as well. Atul, what is the legal position? There are many companies which say that 20 lakh is the maximum gratuity. I'm not going to pay more than that, and I'm not affected by the new law, which says that 15 days of last pay, basic pay, but not now going to be calculated as 50% of C2C, not just basic. So they are saying it doesn't bother us because our cap of 20 lakh helps. But there are yet other companies, and one of them has written in detail to me, saying that it is important to note that the new labor codes include a specific non-reduction clause. Any existing benefit cannot be reduced. And they also go on to say that companies like ours operate through an approved gratuity fund whose trust deed and rules clearly specify how gratuity is to be calculated and disbursed. Once established, these rules cannot be changed. So they are very clear that gratuity bill goes up as they understand the law now. Manish, since you also run a company, what's your fear? Is this fear of corporate India legitimate?
I mean, in a cost to company world, all benefits come out of salary. They're not over and above salary, right?
Okay.
This is a myth which, Haath wali salary versus chitti wali salary is a myth perpetuated by people in government where benefits are not counted as part of employee cost. So I think that, yes, there may be some transition cost, but over time, we will just include the higher gratuity or whatever benefits the government may prescribe as deductions. I think, we are already the world's highest gap between Haath wali and chitti wali salary. It can go up to 42% for low-wage employees. I don't think people can live on 68% of their salary. So I think that this notion that the government can sort of treat obesity by mandating small sizes. We need higher wages through higher productivity employers. Issuing regulatory creating regulatory cholesterol that somehow people believe raises wages. It doesn't. We raise wages by raising the productivity of our firms, our sectors, our cities, and our individuals.
No, your point is absolutely correct for the bottom of the pyramid, where, it becomes formal. The problem that big companies have, especially old companies which are in existence for 40, 50 years, they have quite a few employees whose gratuity goes well above 20 lakh. And now it will be double almost because the basic pay becomes 50% of C2C. So, Atul, can you rewrite the policy midway?
Yeah, thanks firstly, Lata, for having me over. I hope you can hear me now.
Yes.
Yeah, so there's a lot to unpack here, right? Organizations have to contend with not just the new codes, but also a new definition of wages. Now, there is a common misconception in the market that basic pay has to be at least 50% of the gross. That's actually not an accurate reading. what has happened is that the definition of wages has changed. And under the old law, gratuity was paid only on two components, which is the basic pay and dearness allowance. Under the new law, the definition has expanded, and other guaranteed allowances could also be counted towards the calculation of gratuity. It could be even more than 50%, number one, right? Now, to your question of whether or not I have the ability to limit gratuity, yes, the old provision from the law, which has been repealed, has found its way into the new codes as well. There is an ability to now cap gratuity payments as before. The current limit of 20 lakhs still continue to apply, subject to any future notifications from the government.
Okay. Okay.
Right? The other issue that you
No, the
raised
point is, even if that 20 lakh cap is there, many companies are not respecting that cap. They are paying ex gratia, which is taxed. Now, that ex gratia is suddenly doubled for a section of employees. So can they change?
Yes. So I don't think there is anything in the law which expects organization to continue to pay uncapped gratuity infinitely. Organizations will have to do an impact assessment to see how much their gratuity bill is increasing by and whether or not that's something that they can continue to budget for. If not, I do anticipate, and I don't see a legal bar in organizations capping their gratuity payments and grandfathering the accrued benefits for people who've already accrued a larger sum, but going forward limiting gratuity amounts to the legal limit.
Okay.
Right, which is currently 20.
Got it. Which means a one-time hit as and when the rules are notified is possible. I want to check that with Somraj. Have to take a break. Back in a minute with more questions. Welcome back to the Special Indianomics, which is discussing the 4 new labor codes which are ushering a veritable revolution in the way in which the law is treating employers and employees. A great deal of simplicity, but we are discussing only two specific issues. One, the macro question of whether it can generate more jobs, embolden people to employ more, and the other specific issue of how listed companies or large companies may be impacted because of their gratuity bill. I've been speaking with Amit Basoli, the professor at Azim Premji, Manish Sabarwal, the founder of Team Lease, Somraj Roy, the HR guy from CIAT, and Atul Gupta, the legal expert from Trilegal. Somraj Roy, to you, assuming that you cannot cap or you do not wish to cap the extra, gratuity that you all have been giving your employees earning over 20 lakh, how much will the hit be to earnings or profit? How much is employee cost itself as a percentage of your total cost?
So employee cost as a percentage of our revenues is around maybe 6-7%.
Okay.
I think the cost will go up by another 2-3%. This is just a ballpark figure that I'm saying, because we'll have to see how basically the gratuity is factored in. Different organizations will have different impact. People with younger workforce will have lesser impact, whereas those, as you rightly said, having long tenured employees will have a higher impact. So that's my take. So we'll have to wait and watch. And I once again repeat, what comes as an exclusion and inclusion and what forms the base for 50% is going to be the factor which will determine how it will pan out, Lata.
Okay, so assuming it is made mandatory now, okay, notified this year, is there a likelihood that there will be a hit to P&L? If it is, how much is it? Is it like, the total cost goes up by a few basis points as a percentage?
Yeah, it will obviously. I mean, it is implemented from the 21st of November.
Yeah.
So I'm sure there is going to be a retrospective impact to it.
Okay.
And the cost will go up by 2-3% at least.
Okay.
The minimum, that's what I'm saying.
Okay.
It could be hovering anywhere between 3 to 6%.
Okay. Fair enough. Atul, you will agree with that number that even if it is, life continues the way it is, it's going to be a small percentage of total revenues.
Yeah, I mean, it's going to be very organization specific, Lata. But like you correctly said, long tenured employees will potentially be in the category with the highest exposure as compared to the employees with lower tenure. And it's all going to depend on what organization's overall size is, right?
Okay, yeah, absolutely. So, if total cost, as Somraj Roy says, is 6%, total employee cost, what will gratuity be as a percentage of that 6%? It might be minuscule. So any incremental rise in that could be just in basis points is what people are guessing at this juncture. Okay, now, gentlemen, thank you very much, Roy and Gupta. Let me get the macro question in. Amit, a lot of MSMEs were not expanding simply because that will mean more things to register, more submissions to be made. With that, binding constraint gone, do you see MSMEs expanding faster?
Well, this is a difficult question. I mean, I would put it, easing the regulatory environment is a necessary condition for having a vibrant MSME sector. I wouldn't say not MSME because the problems for M are very different from S and M. So we tend to club these together, but they're actually very different things.
So the SMEs have a better deal now.
So if you talk about firms that, let's say, are already formal 20, 30, 40 worker firms who want to expand further, I think those are the ones that have the capacity to create a lot of jobs, are vibrant and so on. This is a necessary condition, I think, no doubt about it. It is not a sufficient condition for the simple reason we've discussed, that many other factors matter for whether we will grow or not. But I think this was a good, it was a long time coming and it's a good thing to do. I'll just point to one particular interesting aspect of it, which is this category of fixed term employment. And what is not clear to me is this sort of stands somewhere in the between of permanent employees on the one hand and third-party contract workers on the other hand. So the expectation is that firms will now have the ability to hire a lot of fixed-term employees without worrying about long-term implications for them. And they can in-house them. They don't have to do third-party. But they will have the same benefits as permanent. That's the idea. But it's not clear to me whether employers will be incentivized to do this because the third-party contract system still exists. Right? So you can always go around and do that. Not clear why they would choose to in-house. Maybe other panelists can enlighten us
Yeah,
on this.
Manish, yeah, that question straight away to you. Do you see, less of contracting out and more people taking employees on their roles as fixed-term employees?
I think different companies will do different things. I don't think you can model it, depending on which sector you're in, depending on how your costs are fixed and how they're variable, how much seasonality you have in your demand side. So I think that modeling is really not important. I think the implication of the labor code to your first question is, yes, I do think that MSMEs will create more jobs. I know labor inspectors used to paraphrase Talon and say, show me the company, I'll show you the crime. It is quite obvious that that level of criminalization, I mean, those 75 provisions which you talked about, which have been removed, actually led to almost 8,000 criminal compliances. One provision can be used 8,000 times across state and central laws. So the implications are quite substantial. So I would, obviously many of the other things have to happen. But I think, the biggest outcome of this is allowing chief ministers to create fertile habitats. Now, India can't be run from Delhi. There's no such thing as India's labor market. In fact, there may be no such thing as Karnataka's labor market, because Bangalore and Mysore have completely different sort of situations. So my sense is, I think the delegation to chief ministers, the decriminalization, the deregulation and digitization all will lead to higher job creation.
Okay. And do you also believe that, there were some employers, large employers telling us that, the unions would come and scare us that this guy is working here, he's not on your rolls. That kind of strong arming by the unions may not happen. Is that something you heard as well? Because you deal with a lot of companies.
Well, the criminalization of politics and the politicization of trade unions has been a toxic combination. Why is the biggest factory in India only 55,000 employees in a single location? The biggest factory in China is 600,000 people.
Okay.
I mean, there's nothing cultural about scale in India. So I think that the regulatory cholesterol was weaponized by people to basically keep most of our companies dwarfs rather than babies. Dwarfs are small, that will stay small. So I think that the toxic combination of trade unions being overly politicized and politics being overly criminalized in backward states is now something that will be blunted. So if backward state chief ministers want to raise the Industrial Disputes Act from 300 to 1,000, they don't have to talk to Delhi anymore. I know a state which is considering making it 10,000.
Okay.
Because they have nothing to lose and there are no trade unions. There's their economic wasteland. So I think the competition between states and provinces that was the sort of China's genius may sort of be enabled by these labor codes also.
Okay, we definitely live in hope. Just a final question to SIAT. Do you think because things have become simpler, you don't have so many submissions, eight submissions reduced to 1 and so many sections removed, people will employ more, you think, Somaraj Roy?
Yeah, very much. I mean, it's a very welcome change. Things have been simplified. Obviously, bringing in a lot of gig workers and other workers also into the fold of social security and appointment, etc. This is going to give a strong boost. And obviously, the employment will go up in some way or the other because flexibility has gone up.
Okay, yeah, go ahead.
Sorry, I just had one view to make, Lata, on one of the comments that was made here.
Yeah.
So there is also an important change that organizations need to take into account with respect to the engagement of contract labor.
Mm-hmm.
The codes now do say that engagement of contract labor in core activities is prohibited.
Okay.
So that can have a bearing on the comments that were made earlier by Mr. Roy about the fact that why would people want to take more people in-house? Because now even engaging contract workers in core activities can be a big problem for organizations and they would potentially violate the code.
Okay.
Right. So that is going to have a significant impact on how organizations are designed.
Okay.
And what people do permanent roles, what people do fixed time roles, and what people do contract roles.
Okay, this opens a new line of debate for which I don't have the time, but I can give a few seconds to Roy and Manish who are involved in this. Manish, you want to add?
There's no change to the status quo for the last 50 years in the code.
Okay. All right. You're not convinced. But Mr. Roy, core jobs cannot be contracted out. Is that a big deal?
Core jobs, yes, cannot be contracted out, and we'll wait and watch. And of course, in the contractual employees, it would bring somewhat rethinking. However, as Mr. Gupta also pointed out, I think the fixed term employees being brought in also adds to a lot of flexibility. To your question whether employment could go up, yes, there is a lot of flexibility in the system today.
Okay. On that positive note, we have to call it a day because we're out of time. My deepest gratitude to Manish and Atul Gupta for, one for taking the call immediately after the flight and another for delaying the flight. My thanks also to Amit Basole and Somraj Roy. The positive is that both small, medium, all of them, small, medium and large companies are saying that they feel the regulatory burden less, simplification, flexibility, and therefore they could employ more. Clearly positive comments coming from Indian industry. Thank you very much for joining me, all of you. That's it on this edition of Indonomics. Thanks for watching.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty move closer to record highs. After gaining 1% in trade, the Nifty bank hits a record high. All sectoral indices close in the green. The semiconductor war heats up between Google and Nvidia. Jensen Huang says Nvidia's chips are a generation ahead of Google. This comes after Meta, a major client of Nvidia, considers buying AI chips from Google. India is all set to become a $4 trillion economy this financial year, but economists expect a 2-year delay to hit the $5 trillion mark, citing lower inflation and a weaker rupee. The Union Cabinet is likely to approve a production-linked incentive scheme for rare earth magnets worth 7,300 crore rupees. Sources say the scheme is likely to continue for 7 years. That's a CNBC Awaaz exclusive. Prime Minister Modi flags the French major Safran's aircraft maintenance, repair and overhaul facility in Hyderabad with initial outlay of 1,300 crore rupees. The MRO center is Safran's largest aircraft engine MRO facility in the world. It could employ over 1,000 technicians and engineers once it becomes fully operational by 2035. A phone transcript released by Bloomberg reveals that Steve Witkoff, Trump's envoy to the Middle East, advised a senior Kremlin official on how to pitch the Ukraine peace plan to the U.S. president. Russian official has hinted that the phone call was authentic. Trump calls Witkoff's reported approach a standard negotiating procedure. Jakarta topples Tokyo as the world's most populated city with nearly 4.2 crore people, according to a UN report. Dhaka takes second place as Tokyo moves to number 3. New Delhi and Kolkata are the only Indian cities in the top 10. South Africa thrash India by 408 runs in the Guwahati Test to sweep the series 2-0. This is India's biggest defeat in Test history. Well, we'll get to that Test match debacle in just a second, but let's start with the day's market action. No debacle there. In fact, big moves across the Lal Street with all-round gains coming in today. The Sensex and the Nifty ending near record highs. So that's the picture for the Nifty, up 320 points. 26,205 is where it closed for the day. The Sensex up over 1,000 points today. That's a gain of over 1%. The Nifty bank at a new record high, 700-point gain there. And the Midcap index also adding about 700 points. So broader markets also seeing major moves today. All frontline indices closing with gains of more than 1%. 45 Nifty stocks closed in the green, with 5 stocks ending at 52-week highs. Prashant standing by now to wrap up the day's market action. Very strong close. Prashant, what triggered this rally?
A good day, and the market basically back within kissing distance of a new all-time high for the Nifty. Now, you'd wonder why, right? Was there a big trigger? There wasn't any. Maybe after the expiry yesterday, lighter positioning in the market, perhaps one. Obvious thing that one can think of, expectation that perhaps this Russia-Ukraine war, which has dragged on for over 3 years perhaps, is now closer to ending than any point we've seen in the recent past. And of course, global markets which have bounced for 3 days in a row. I think it was a combination of things. But, as you can see, and I'll read out the stocks, it's not as if it was the large, liquid, well-known names which were all jumping up and about. It was the lesser-known kind of names in the broader market, especially the mid and small caps. I'll get to those names in just a bit. The Nifty up on your screen, the Nifty bank doing pretty well, ending at the day's high. Mid-cap index, small-cap indices also bouncing quite nicely. Metals as a space did well, steel in particular. Of course, after our steel secretary interview, and you also had the capital market space which bounced a little bit. Now, I'll start with the large caps, right? Nifty. JSW Steel was the biggest Nifty gainer. HDFC Life, the Bajaj Twins, Finserv and Finance, and Jio Finance also did well. Downside, Bharti, there was that big block which sort of went through successfully. Adani Enterprises, of course, under some pressure. Now, broader gains, broader markets, and advanced decline, of course, clearly with what was up. But just look at the names, right? Natco was the biggest volume-led gainer. Tata Investment Corporation, Carborundum Universal, GMDC on the back of the story at CNBC that on rare earth and the scheme which the cabinet is taking up. Fino Payment Bank was up from the word go. SMS Pharma, Reliance Power, PG Electroplast, Igarshi Motors, Tourism Finance Corporation, JK Siemens, Black Box, and Goldium International, the lab-grown diamond company. On the way down, Capillary, which has had such a large move in 4 days since listing, lost CPC, that is Chennai Petro. Diesel margins have been very high, and they'll probably fall if as conflict looks like it's nearing an end between Russia and Ukraine. Orient Electric, again, big gains recently, some profit booking. MRPL on the lines of CPCL, HDFC AMC, Mahindra & Mahindra Finance and Stylum were some of the other stocks which came under selling pressure. So, very, very close, at least at the index level, to a new all-time high as we ended today's session. Back to you.
All right. Many thanks, Prashant, for joining us. In fact, the Union Cabinet briefing is currently underway. Ashwini Vaishnav, the Minister, is speaking about the decisions that the Cabinet has approved, including one that we broke right here on CNBC-TV18, a 7,300 crore rupee incentive scheme for rare earth magnets. Listen in.
इस पे करीब 7,280 करोड़ रुपए का इन्वेस्टमेंट होएगा. 7,280 crore rupees will be invested, and the focus will be on the entire value chain. It will be an integrated manufacturing facility. और केवल एक नहीं, up to 5 units will be established. Up to 5 units will be established, each one having 1,200 metric tons per annum capacity. देश की रिक्वायरमेंट करीब 4,000 से 5,000 मेट्रिक टन की देश की अभी रिक्वायरमेंट है, और ये रिक्वायरमेंट बढ़ती जा रही है. जैसे जैसे इलेक्ट्रॉनिक्स की मैन्युफैक्चरिंग बढ़ रही है, जैसे जैसे मेडिकल डिवाइसेस की मैन्युफैक्चरिंग बढ़ रही है, इलेक्ट्रिक व्हीकल्स की मैन्युफैक्चरिंग बढ़ रही है, वैसे वैसे देश में परमानेंट मैग्नेट की इंपॉर्टेंस बढ़ती जा रही है, डिमांड बढ़ती जा रही है, रिक्वायरमेंट बढ़ती जा रही है. तो टोटल 6,000 मेट्रिक टन्स पर एनम मैन्युफैक्चरिंग कैपेसिटी डेवलप करेंगे इन 5 यूनिट्स. तो विद इन नेक्स्ट 2 to 3 years these plants will be set up, और इन प्लांट्स में मैन्युफैक्चरिंग प्रोडक्शन स्टार्ट हो जाएगा. एंड दिस विल बी अ मेजर स्ट्रैटेजिक विन फॉर द कंट्री, बिकॉज परमानेंट मैग्नेट और सेमीकंडक्टर चिप्स, इन दो के बिना आज कोई मैन्युफैक्चरिंग प्रैक्टिकली नहीं हो सकती है. इसीलिए प्रधानमंत्री जी ने पहले सेमीकंडक्टर चिप्स, फिर क्रिटिकल मिनरल मिशन, और आज परमानेंट मैग्नेट की मैन्युफैक्चरिंग का ये प्रोग्राम, ये स्कीम लॉन्च की है. बहुत इंपॉर्टेंट है. इसके बारे में और डिटेल आपको मिनिस्ट्री ऑफ हैवी इंडस्ट्रीज से डिटेल मिलेंगे, लेकिन करीब करीब सारे पॉइंट्स आपके इसमें आ गए. हैं उनको बहुत बेनिफिट होगा. जो इंडस्ट्रीज परमानेंट मैग्नेट का यूज करके आगे की मैन्युफैक्चरिंग करती है, जैसे इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग है, तो उसमें इसका बेनिफिट मिलेगा. इलेक्ट्रिक व्हीकल्स, बैटरी व्हीकल्स, उसमें इसका बेनिफिट मिलेगा. मेडिकल इक्विपमेंट, उनको बेनिफिट मिलेगा. हमारे डिफेंस से रिलेटेड जितनी मैन्युफैक्चरिंग है, उसमें इसका बेनिफिट मिलेगा. लंबे टाइम से एक बहुत बड़ी ये रिक्वायरमेंट थी देश की, जिसको आज माननीय प्रधानमंत्री जी ने कैबिनेट में अप्रूव किया है. ये बहुत बड़ा फैसला है और बहुत ही स्ट्रैटेजिक डिसीजन है ये, और इस डिसीजन से देश के लिए एक बहुत इंपॉर्टेंट एक रोड मैप तैयार होगा.
7,280 crore rupee investment scheme to manufacture permanent rare earth magnets in the country. Our colleague Abhimanyu Sharma joins us now. Take us through the contours of that scheme that the cabinet has cleared, Abhi.
Well, the scheme aims to promote domestic manufacturing of rare earth magnets, which are extensively used in several components across several industries, on which there is a certain degree of dependence on imports, which the government wants to mitigate. And there have been supply chain concerns which have been witnessed in the past 1.5 years with respect to availability of rare earths and also rare earth magnets. So that has been a constant demand from the domestic industry as far as overall availability is concerned. Now, speaking about the overall production of rare earths per se, and not just magnets, there have been several schemes which have been initiated by the union government, particularly the National Critical Minerals Mission, in which the government has also started resorting to through trawling of all tailings of minerals, of all mineral deposits and even waste for that matter, to ensure that none of these minerals are wasted and these rare earths are mined and refined to the best possible extent. However, availability of technology continues to remain a concern, which this PLI scheme intends to mitigate, and it intends to incentivize several companies to get into manufacturing of rare earth magnets, which will possibly also involve MOUs and several tie-ups with foreign players. India is also in touch with several other countries as far as ensuring ample availability as well as refining of rare earths and rare earth magnets is concerned. So overall, the PLI scheme aims to incentivize the production of rare earth magnets, which is possibly going to ensure ample availability for several sunrise sectors which are extensively using these rare earths.
All right, Abhimanyu, many thanks for joining us. That's the big decision that's been cleared by the cabinet. But let's talk about the action in the commodity space. Gold prices rising for the second day in a row, closing in on a 2-week high. This after U.S. economic data boosted expectations of a Fed rate cut in December. Safe haven demand also rose, and lingering tensions between Japan and China adding uncertainty. Of course, the Russia-Ukraine truce is still awaited. India is all set to become a $4 trillion economy this financial year. 4 eminent economists tell CNBC-TV18 that the $4 trillion goal can be achieved even if nominal GDP grows at a slower pace of 8%. Growth in the current fiscal, that is. However, they also believe that India's ambition of becoming a $5 trillion economy could be delayed by 2 years because of lower inflation and a weaker currency. So India is likely to achieve that milestone in FY29 instead of FY27. Now, shares of Bharti Airtel declining over 1% in trade on the back of a large trade deal. As many as 3.5 crore shares, amounting to 7,400 crore rupees, sold at 2,108 rupees a share. The buyer and the seller of the deal have not been disclosed yet. So a big block there for Bharti Airtel. Shares of IIFL Finance gained after the company's board approved a public issue of non-convertible debentures of up to 2,000 crore rupees. The issue will be launched in 1 or more tranches and will also include a green shoe option. This will allow the company to raise the size of the issue if the investor interest is higher than what is expected. Packaging company AGI Greenpack is likely to raise up to 800 crore rupees through a qualified institutional placement in December. Sources say the fundraise is likely to include a base size of 500 crore rupees with an option to add another 300 crore rupees. The funds will be used for a new beer bottle manufacturing plant in Madhya Pradesh. Shriram Finance Executive Vice Chairman Umesh Revankar has brushed aside reports of a possible capital infusion. Speaking to CNBC-TV18, he said the company does not need fresh money for its growth plans. He added that though foreign investor interest remains high, capital discussions do not imply a need for funding.
We are at 20% plus on CRAR, so we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital.
Shriram Finance is in discussions for potential equity fundraise, but nothing concrete as of now.
So as I was telling you, we have been talking for a long time, not now.
Okay.
Okay.
And do you think a deal you're reaching, I mean, there's progress with regard to these conversations?
Nothing to comment right now.
Well, the speculation continues. Nothing to comment right now, says Umesh Revankar. Electronic giant HP has announced that it plans to reduce its headcount by at least 4,000 to 6,000 employees. This equates to around 10% of the company's global workforce. HP says the layoffs are part of its long-term restructuring plan. These cuts come after HP reported weak guidance for the fiscal year. Prime Minister Modi flagged off French major Safran's aircraft maintenance, repair and overhaul facility in Hyderabad with an initial investment of over 1,300 crores. Now, the MRO centre is Safran's largest aircraft engine MRO facility anywhere in the world. It could employ over 1,000 technicians and engineers once it becomes fully operational by 2035. Madhya Mujawar gets us a sneak peek into Safran's new Hyderabad MRO.
We are in Hyderabad at the GMR Aero City, and what you see behind me is a brand new aircraft engine maintenance facility by French engine manufacturer Safran. It's their biggest ever engine maintenance facility anywhere in the world. It is also the first time that an OEM, an engine manufacturer, is setting up a maintenance facility in India. The facility got inaugurated by Prime Minister Modi a short while ago.
आज से भारत का एविएशन सेक्टर एक नई उड़ान भरने जा रहा है। साफरान की नई फैसिलिटी भारत को एक ग्लोबल एमआरओ हब के रूप में स्थापित करने में मदद करेगी। ये एमआरओ फैसिलिटी हाईटेक एरोस्पेस की दुनिया में युवाओं के लिए नए अवसर भी बनाएगी।
You have seen that India has grown tremendously in civil aviation with a growth rate of more than 10% over the last 11 years. Especially the growth has come in the number of airports we have opened, in the number of passengers, the air travel passengers that we have, and also the number of aircrafts. But then we wanted to dig deeper into the aviation sector, and we want to become the global aviation hub for aviation in the world. So for that, we wanted to expand the MRO network in the country.
Over 500 aircraft in India are powered by Safran, CFM or LEAP engines. The engine that you see next to me is the LEAP engine, and there are Indian airlines including Indigo and Air India have ordered more than 2,000 engines from Safran. Right now there is no capability in India to service engines, to maintain engines, so Indian airlines have to send the engines overseas, and when Safran, the OEM, the engine manufacturer, sets up shop in India, it becomes easier not only for the OEM to provide maintenance services, but also for airlines.
India is so fastest growing country, so important. It was making sense, a lot of sense for us to accompany our Indian airline customer by setting up a maintenance, repair and overhaul center here in India.
Is not just the commercial aircraft maintenance facility that Safran inaugurated today. What you see here is the Rafale M88 engine that Safran makes for Rafale, and they today laid the foundation stone to make a maintenance facility to also provide maintenance services for M88 engine. So even these engines in the next few years will get the maintenance services right here in Hyderabad, and the capacity that Safran is talking about is 300 engines per year, and they will not just cater to Indian airlines but also global airlines. So that takes this closer to India's dream of becoming a global MRO
Well, that
hub.
is a big development for the Indian aviation sector. Safran setting up an engine MRO in Hyderabad, the largest MRO facility for the company anywhere in the world. Madhya Majaba reporting there. We will head into a break, but up next, the semiconductor war heats up between Google and NVIDIA this time. A special report when we return. Well, the big global story, U.S. President Trump's special envoy Steve Witkoff reportedly told a senior Kremlin official how to pitch the Ukraine peace plan to the U.S. president in a phone call in October. Bloomberg released a transcript of the phone call, which reveals that Witkoff suggested that Putin could congratulate Trump for the Gaza agreement and propose a Ukraine peace deal along similar lines. He also advised scheduling a Trump-Putin telephone conversation before Zelensky's White House visit later that week. President Trump described Witkoff's reported approach as standard negotiating procedure, while the Russian official did not deny the authenticity of the transcript, telling Russian state TV that the leak was an attempt to hinder the talks. Both Trump and Russia have confirmed that Witkoff will meet President Putin in Moscow next week. Now, the semiconductor war between NVIDIA and Google is heating up. NVIDIA CEO Jensen Huang has said that NVIDIA's chips are a generation ahead of the industry. This post came after NVIDIA's shares fell 3% after reports suggested that Meta, a major client of NVIDIA, is considering buying AI chips from Google. The market capitalization of Google's parent Alphabet is racing towards the $4 trillion mark, and a big part of the story is its expansion into AI hardware. Rachna joins us now with more. Rachna, tell us about Google's hardware ambitions and how it could impact NVIDIA.
Well, global attention in the AI race has now shifted sharply towards infrastructure and hardware. And for years, NVIDIA has been the uncontested leader. But the landscape is beginning to change. Google is widening its AI ambitions beyond software and into the hardware layer. Alphabet has started offering its in-house TPUs to external customers through Google Cloud. Now, TPUs are custom-built AI accelerators designed specifically for training and running large AI models. These are unlike NVIDIA's more general-purpose GPUs, and that push has been accelerating. Anthropic has already reserved up to 1 million TPUs for 2026, and Meta is in advanced discussions on a multi-billion-dollar arrangement that would see it rent Google's cloud chips next year and install Google accelerators inside its own data centers from 2027. Those moves position Alphabet as a credible alternative to NVIDIA in high-end AI infrastructure. The market reaction has been swift. Alphabet shares are up nearly 70% this year, taking the company close to a $4 trillion valuation. At the same time, Google has been building independence across the rest of the AI stack. The Gemini family now runs across Search, Android, Workspace, and Cloud. DeepMind continues to advance frontier research with systems like AlphaFold 3 and the RT series robotics models. And Google is training its largest models on its own compute platform inside AI-first data centers it designs and operates. From NVIDIA's side, the response has been to highlight its lead. Jensen Huang maintains NVIDIA's GPUs remain a generation ahead and continues to emphasize the breadth and maturity of his platform. But the fact that Google's chips are attracting serious interest and that major rivals are preparing multi-year commitments points to a widening hardware market. So taken together, Google's custom chips, its homegrown frontier models, and its vertically integrated infrastructure explain why investors now see Alphabet as one of the most comprehensive AI platforms globally. And why is it moving within the reach of the $4 trillion milestone? Back to you.
Rachna, many thanks. Now, Indonesia's capital, Jakarta, has dislodged Japan's Tokyo as the world's most populated city. The UN has released a report on megacities across the world to take stock of the progress in urbanization. Jakarta is on top with a population of over 4 crore people. Dhaka at number 2 with a population of 3.6 crore. Tokyo, number 3 on the list. New Delhi comes in at number 4 with a population of 3 crore. Shanghai and Guangzhou in China take the 5th and the 6th spot. More than 33% of the most populated cities are in China and 17% in India. Egypt's capital, Cairo, is the only non-Asian city in the top 10. Manila, the capital of Philippines, along with Kolkata and South Korea's capital, Seoul, complete the top 10. The other Indian cities in the list include Mumbai at number 12, Bengaluru at number 24, and Chennai at number 29. These are the only cities in India with a population of more than 1 crore people. The report also highlights how the world is becoming increasingly urban. 45% of the world's population of 8.2 billion now live in cities. For comparison, only 20% of the world's population lived in cities in the 1950s. And urbanization is expected to rise, with 66% of the global population estimated to live in cities by 2050. Dhaka is also projected to overtake Jakarta as the world's most populous city by 2050. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. Zetwork is reportedly preparing to file for an initial public offering that may raise up to $750 million. If completed, the issue would be among the larger public market debuts by an India-based manufacturing company.
The company is expected to file its draft prospectus early next year through the confidential route. Enterprise AI company Fractal Analytics and cloud-led media SaaS platform Amagi gets SEBI's nod for its proposed IPO. Fractal's IPO will include a fresh issue of up to 1,279 crore rupees and an offer for sale component of up to 3,620 crore rupees, while Amagi looks to raise 1,020 crore rupees via a fresh issue of shares. AI startup Harmonic, co-founded by Robinhood CEO Vlad Tenev, bags $120 million in new funding. Company valued at $1.45 billion as it tackles AI hallucinations or incorrect or nonsensical answers by improving the ability to reason. Deep tech startup Eon Labs successfully completes Thermos vacuum testing of its ultra-lightweight electro-optical space telescope Mira, also touted as India's first indigenously developed miniaturized space telescope. The semiconductor war between NVIDIA and Google heats up. NVIDIA CEO Jensen Huang says that its chips are a generation ahead of the industry. This comes after NVIDIA's shares fell 3% after a report suggested that Meta, a major client of NVIDIA, is considering buying AI chips from Google. Those were the headlines that we're tracking for you this evening. But on what's brewing today, India's private space sector has hit another major milestone. Space tech pioneer Agnikul Cosmos has raised $17 million, taking its valuation to over $500 million, making it the most valuable space tech startup in the country. The funding will help Agnikul scale production, boost launch frequency, build the world's first reusable small satellite launch vehicle, and develop a massive integrated space campus on 350 acres allocated by the Tamil Nadu government. With growing global demand and more than a dozen customers lined up, the company says it is now building for the world from India. Joining me now to discuss this further is Srinath Ravichandran, the CEO and co-founder of Agnikul Cosmos. Srinath, thank you so much for taking time out and being here with us on Startup Street. You know, this fundraise takes Agnikul to a valuation of over $500 million, making it India's most valuable space tech startup, right? So what do you think are the key milestones that drove this surge in investor confidence for the company?
Hi. So in terms of milestones that drove the valuation, I think 3 points, right? One is the successful demonstration of technology. So we configured a flight last year, which was like no other done from India, where we got all the new technologies to be proven. Then the other aspect of it is, I think, a more sectorial thing happening, which is the private space sector is seeing more friendly policies at the government level. So investors are getting more confidence in investing in technology because they know that the government will not, be a sudden speed breaker in some way.
Sure,
and the third aspect is, a little more global, right? I think a lot of companies are doing well, and so this is also creating some positive momentum.
Absolutely. And you've raised this 150 crore rupees, right? So how do you plan to allocate it across scaling production, infrastructure build out, and advancing your reusable launch vehicle program?
Yeah, so I think a good chunk of it is going to be for increasing the launch frequency, right? So investing a little bit of, hardware in terms of like printers, we 3D print our rocket engines, we do more mission simulations and so on. So that's going to be one part of it. But I think the other part of it is also going into testing the reusability of the vehicle. And so we have a patent on this one where no part of the rocket is really thrown away, right? We are very committed to saying that, hey, the lower part of the rocket will come back, like you may have seen with companies like SpaceX, and the upper part of the rocket that will also survive beyond ejecting a satellite. So in essence, nothing is wasted, which means more margins for us, more revenues for us. And that I think is something that investors are seeing. So that's how we'll be spending this money.
All right. And you've secured this 350 acres as well from the Tamil Nadu government for an integrated space campus. What capabilities will this facility enable? And how does it sort of change Agnikul's scale-up trajectory?
Yeah, so again, 3 points there, right? So one is it's actually very close to the new and upcoming launch pad of India, the one near, Kulasekara, right? Which is actually going to be very interesting for at least one class of orbits. So once that happens, I think we can look at this as one place where design, manufacturing, assembly, and testing, all of this happens in one place. And literally 1 hour by road, you get to the launch pad. So for us, it's about when a customer sees us, it's like, okay, they have everything in one place. And then the only thing that's a little further away is a launch pad that is also not too far away. So that is how this location is going to be used.
So it sort of encapsulates everything that you guys are doing close to where you need to be. But with over a dozen customers that you've already lined up, right? It's across India, the Middle East, and Australia. What kind of revenue or launch pipeline visibility do you sort of have now?
I think there is a lot of demand, despite the fact that companies like SpaceX are launching quite frequently. They are not able to address the demands of today's customers. So I think there is meaningful amount of demand to be met. So this runs into hundreds of millions. I don't want to give a specific number over the next few years, but there is strong interest coming in terms of, okay, here is a flexible vehicle that can be launched from anywhere in India, and it is based on new technology, and the price is cheaper because it's reusable. Those are all strong selling points for customers.
So you're seeing strong demand, and you're saying you have this huge pipeline that's lined up, right? So how soon will we see the commercialization of it? What's the roadmap on that front?
So we're working with a couple of customers now, because we are also testing out the technologies that we want to go commercial with in the mission after the upcoming mission. So this mission that's upcoming will be basically a two-part story, right? One is going to be a primary mission of ejecting satellites into orbit for a couple of customers. And there is also going to be a second part of the mission where we are going to try out all these new things, right? Where the paying customer is out of the picture, but then we have the rocket to ourselves. And then we're going to say we're extending the upper stage that stays in orbit. The lower part is going to come back. So all of these things, we're putting it together. So we'll get to a point where we know the exact date and we'll announce it soon.
All right, we're looking forward to that announcement. You've spoken about lower stage recovery and sort of extending upper stage life, right? How close are you to demonstrating true reusability for small satellite launches? And if you could sort of put that out in layman terms for us.
Yeah, so far, the way most rockets have worked is that they throw away the rocket after one use, right? Every rocket is a single-use system. And we believe that is not the best way to price it. That's not the best way to make it. Maybe in the past, given technological limitations and so on, that's how things were. So now we are coming in with this basic, fundamental concept that don't throw away rockets after just one use. Try to make the most of it. Now, every rocket has at least two stages. That's how the engineering works today. You can't take a dead piece of hardware and go all the way to orbit. You'll have to shun some part of it, right? Now, when you're shunning it out, usually it's just thrown as debris in the ocean. What we are trying to do is actually bring it back to a barge and land it on a barge in the ocean. So this way, that part of the hardware, after serving its job, is still recovered, can be requalified and reused. So I'm able to literally cut down the price by 40-50% because I'm not building a new rocket every time. The second part of the rocket, the part of the rocket that goes to space along with the satellite, that's again after ejecting the satellite, that's again left as debris typically. We figured a way where, okay, after it ejects the satellite, that can still be an active asset. That can be a platform for doing multiple things. So that is one more way in which revenue can come to the company. So that's something also we'll be demonstrating. So all of these are planned for the upcoming mission.
All right, and you've also got the patented single-piece 3D printed engine that has also been sort of a breakout innovation, right? How does expanding metal additive manufacturing strengthen your cost and turnaround advantage? And if you could give us some use cases as well.
Yeah, so the metal additive manufacturing was the only way in which we could actually, match the unit economics of a small vehicle with that of a large vehicle, right? Because when you build something small, like we're building rockets, in the scale of rockets, it's a small rocket. I mean, this itself is huge, right? It's going to like 20-30 meters, but it's still small in the scale of rockets. Now, when you take a big machine and you shrink it, your overheads immediately go up, right? You start having more losses as a percentage of your total, profit. Now, the only way to work around that is by inventing or figuring out technology that works at that scale, at smaller scale. So we literally had to park 50 years of rocketry on the side, take up a new type of manufacturing and figure out how to do things with that, at least for the more complex parts. So the large format additive manufacturing unit we actually inaugurated very recently. It allows us to print entire engines in a single shot. So there is no human interference in the making of a rocket engine. It's almost like you're standing back and you're letting the printer make the rocket engine, and then you're directly attaching it to the vehicle after a few post processes, of course. So it's faster, it's cheaper, it's quicker. It allows you to make super complex geometries within the engine very easily. So it's also an efficient way to do things. So in an industry where people talk about reliability all the time, right? It's all about repeatability and reliability. Handing over the making of a rocket engine to a printer is the most reliable way to do it because you have automated the process. So that's how this helps us.
All right. And, before I let you go, if you could tell us quickly, the government has been giving a lot of impetus to the space tech sector in India. Do you see, with all the help that's happening, that Agnikul emerging as, a globally competitive private launch services provider, considering the demand as well?
Yeah, absolutely. I think we're always building for the world from India. I think India offers a very unique advantage, at least as far as the space sector is concerned. As a country, we are a spacefaring nation. ISRO has done so much. We're very lucky actually to start off from where ISRO is today. And we're always building technology for the world. So yeah, I think the policy is here. Investors are warming up. Customers are there. So nothing should ideally stop us from becoming a world-class player in space transportation. That's what we aspire to be.
So nothing stopping you to becoming a world-class player in this industry. All right. Thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you. Thank you.
On that note, it is time for us to head into a short break. But coming up next, Accel and Google's AI Futures Fund is set to launch the Atoms AI Cohort 2026, a partnership aimed at backing AI startups from day zero. We break down the key details of the new program on the other side. Stay tuned.
Well, Accel and Google's AI Futures Fund have come together to launch the Atoms AI Cohort 2026, which is the first of its kind partnership that's aimed at backing frontier AI startups from day zero. Now, these two are going to co-invest up to $2 million per startup, marking one of the largest early-stage capital commitments in India's AI ecosystem. Now, beyond capital, the founders will also gain access to Google's DeepMind research, Gemini APIs, compute credits worth about $350,000, global mentorship, and immersion in London and the Bay Area. The goal is to enable Indian and diaspora founders to build globally relevant AI companies from day one. Joining us now are Priyank Swaroop, partner at Accel, and Jonathan Silber, co-founder and director of Google AI Futures Fund, to break down what this means for India, for the startup ecosystem, and for the global AI race. Jonathan and Priyank, both of you, thanks so much for your time here on Startup Street. Jonathan, to start with you, why India? Why now? Google AI Futures Fund has worked with founders globally, but this is one of your most focused country-level commitments. What made India stand out as a market where AI innovation could meaningfully scale?
First, thank you for having us. I really appreciate the opportunity. So why India? Fantastic question. Look, India has an incredible history of innovation, and we firmly believe that its founders will play a leading role in responsibly defining the next era of global technology. And that's why we sought out the most renowned pre-seed scaling program in the country with Accel Atoms. This is also the Future Fund's first such collaboration anywhere in the world. And we chose India for that reason. Google has been committed to the country's journey to digital transformation for quite a while. Our partnerships have enabled significant multi-billion-dollar commitments, starting with infrastructure. As you're aware, we had a $10 billion India digitization fund, most recently a $15 billion AI data center investment to provide gigawatt scale compute. And this foundation allows us to really deliver specialized AI models for local needs. For instance, Gemma 3 supports 6 Indian languages. And by co-investing with Excel and standing up this joint cohort, we're really building on this commitment, directly backing the country's most promising AI talent from the very beginning to fuel the next wave of AI innovation from India for the world. And we're hoping that this program creates India's next breakthrough AI startup.
Well, we all want to see that. And Priyank, up to $2 million commitment on day zero combined across Excel and Google. It's not very typical for early stage India. Why did you decide founders now need this kind of upfront capital to build frontier AI companies?
First of all, Ritu, thank you for having me on the show. And this is the 5th version of Excel Atoms. And when we started the program, we were giving $250,000 to companies as investment. But over the period of time, and especially in the AI world, we realized that it is important for companies to compete very fast and grow very fast. And for that reason, we upsized the check. And thankfully, we had partners with Google DeepMind and AI Futures Fund. And that has been incredible to see, because now companies not only get the money, but they also get expertise working closely with Google DeepMind researchers. And, we are hoping this makes, like John said, fantastic companies in India.
Well, Jonathan, you are matching Excel dollar for dollar, and that sort of signals strong conviction. What gave you that confidence that, the founders here that you've seen, interacted with, can they build globally competitive AI companies, not just strong domestic ones?
Yeah, it's a great question. Look, we've been investing now for about 6 months. This is a relatively new initiative for Google. And in that period, we've invested in north of 30 companies to date. Some of those are very large names in the AI field, like Replit or Harvey or Synthesia. But we've also been investing in a handful of India-based startups as well, companies like Emergent and TuneSutra and Stan and Presentations.ai. And based off of the quality of the teams that we're meeting, the aspirations and the vision, we knew that there was something there, and that made us really want to double click and double down on these companies and make a really concerted push and effort to find really the next great startups that come from the world. And we think many of those are going to come from India.
All right. Priyank, Excel Atoms has now backed more than 40 companies, and there's been some strong follow-on funding with those as well. But what are some of the lessons you've drawn from these previous cohorts that shaped how you designed this new AI-centric one?
So that's a very good question. So just to set some context, we have funded 40 companies that have raised close to $300 million in the last few years. And the lessons, I think, were multifold. One was to just focus on one particular industry. So we have done Atoms Industry 5.0 in the past. We have done Atoms X. We have done Atoms for Bharat. And then the whole idea is the cohort comes together solving similar kind of problems. They're trying to understand similar kind of technologies they are using. So they get a lot of good mentorship. And we basically realize for AI, we need a deep subject matter expert, which we found as a partner in Google.
All right. Jonathan, you're going to give founders early access to Gemini, to DeepMind models, experimental APIs. But how do you ensure that, you sort of balance giving startups the cutting edge tools that you're giving while ensuring there's responsible and safe deployment, especially because, India is a pretty fast scaling market?
One of the big components of this program is yes, we're providing financial fuel, which includes, up to $2 million in co-investment from Excel and Google. We're providing them with, massive technical resources, up to $350,000 in cloud compute. But the real benefit, I believe, of the program is that these companies are getting early access to our models before many others in the world, so that we can kind of collaborate and co-build with them. So it's not just that we're handing them these models, but we're bringing in experts from Google DeepMind and from Google Labs. both researchers and PMs and engineers and go-to-market specialists so that we can work with them and give them access to Gemini for reasoning and Imagen for image creation and VO for video creation and so on and so on. And we can work with them to build targeted one-on-one plans to really help elevate their business and provide them with the opportunity that they need in order to build responsibly leveraging these models. So the level of hands-on support that they're going to get from the team here is really quite strong. And we're here to coach them and guide them along the way whenever they need that support.
Well, Jonathan, just continuing on that, the program also requires at least one Gemini integration, but it also says that founders have the flexibility in model choice. Why introduce both this nudge and the open door? What's the thinking behind that?
Yeah, it's a great question. So look, we right now, Google just released a new model. This is Gemini 3, and as of today, it's doing quite well. Very strong market reception. It's on top of the charts, and it's really state-of-the-art across the board. But this is a highly competitive market, and startup founders are oftentimes multi-cloud and they're multi-model. And we don't want to stand in their way because each use case is different. And sometimes the Google model might perform best in one use case, and then an OpenAI or Anthropic or other models might perform better in another. So we don't want to twist any startups' arms and force them to only leverage the Google ecosystem. We're hoping that our models stand on their own and that independently of us, these startup founders will experience what Google AI has to offer, and they will more and more and increasingly leverage our models once they find that they have great capability and they're able to provide really boundary-pushing features and functionality for their core use cases. So we really don't want to get in their way. We want to enable them to use whatever options they see best fit for building out their business.
Well, that's interesting, Jonathan, given that you very well could have made it compulsory, given that you're signing the check or at least half of it. But Priyank, AI compute is, cited often as one of the biggest constraints. How big a differentiator to your mind is Google's $350,000 worth of compute credit and infrastructure access going to be when it comes to attracting the right kind of founders here?
Yeah, I think it's a good question. And I will just tell you what another founder told me when I was telling them about this. And he was like, oh, I get $350,000 additional with no dilution, and that takes care of my cloud costs for next year. And if they're fast scaling, Axel and Google are here to invest more in the company and support them more. So the founder is pretty happy about it. So that's a way to think about it. Yeah.
All right. Jonathan, just a broader picture. I know we've asked you this in some form or fashion, but from your vantage point, where do you think Indian founders have a genuine competitive edge, compared to the emerging AI startups we're seeing both in the Silicon Valley and China and other places?
From the conversations that we've had to date with a number of founders that are based in India, the spectrum is quite wide. Specific to this program, though, we're trying to narrow the focus on 4 different areas that we think Indian founders are uniquely positioned to deliver on well. And so we're backing founders across the full AI stack. We're looking at founders that are building in the future of coding, the future of productivity, the future of entertainment, and the future of creativity. I'll give you kind of a couple of examples from this stack. So on the future of coding, we're investing in the shift from engineering software to orchestrating it and really empowering a new generation of makers and creating 100x engineers. I mentioned before, one of the companies in our portfolio is Emergent, and we think that they're on the path to bringing this to life. On the other end of the spectrum, we have the future of creativity. So this is really investing in AI that we would say dramatically lowers the time, the cost, and the expertise required to create. And so effectively, it unlocks a new age of expression for everyone. We're seeing a lot of really interesting companies in India bringing this to life as well. For instance, Toon Sutra, a webtoons provider who's bringing over a great deal of IP from some Western markets and creating their own in the webtoons and comic space, and then bringing this into a UGC format in order to open it up to the masses after the core artists and IP holders are able to help them build foundation for the app. So we think that there's a great opportunity in these 4 areas for Indian founders to really lead the way.
All right. Priyank, finally, given the AI hype at an all-time high really around us. What sort of concrete indicators are you going to use to differentiate founders that are solving real hard problems from those that are simply just wrapping features around existing models?
I think it's a fantastic question. I think it's the hardest question to answer in today's world. And I think we are investing at very early stages in the program. So we are investing when the founders come with ideas. Some they don't have products. So we are really banking on the founders' creativity, thought process, how deeply they are thinking. We, like John mentioned, we are also thinking about what impact it is going to have on billions of Indians, or is it going to be a globally competitive company? And the way we think about that is how much deep research the founder has done on their idea. We actually do research on our end. We talk to customers. Let's say you're building for enterprise. We'll go and talk to 5 or 6 different enterprise customers and say, does it make sense for you? We introduce those customers to the founders as well and see how the founders react, how the customers react. That is the kind of value add we want to bring so that the founder is solving the right problem. They don't spend their time solving for the wrong problem. And Axel has been investing in India for over 14 years. So we are investors in 200 plus companies. So at least building from India as well as building for India, we have a very good sense. We have a great network of Axel founders, Swiggy, Bluestone, Urban Company, Blackbuck, Flipkart. And we introduce these founders as mentors to all these companies as well, so that they can grow up much faster. They can get lessons learned from all these amazing founders and don't do the same mistakes. So during all of this process, we're evaluating the founders and understanding how the founder is thinking. And that's when we decide to jump in and invest.
All right, so you're going to put the might of your ecosystem behind investigating the kind of real problems that these founders are going to be solving for. But on that note, Priyank and Jonathan, both of you, thank you so much for your time. It's been a pleasure having you both join us here on Startup Street. Thank you.
Thank you. Thanks a lot.
Thank you.
All right, on that note, we're going to wrap up this edition of Startup Street. Many thanks for joining in, but stay with us. More news and updates will continue after this break.
The two most powerful warriors are patience and time. Leo Tolstoy's words ring true for my guest today. For 40 years, he's patiently built one of India's most diversified financial services conglomerates, spanning banking to asset management. A first-generation entrepreneur, he's always been a believer in the India story. He's not just built an institution, but has also been the force behind many significant institutional reforms in the country. A stickler for the governance premium, he was roped in by the government to avert a financial crisis when he was brought in to clean up the IL&FS mess. A man who's taken India global and brought foreign capital to India. It's been a long, steady and impactful innings for Uday Kotak. What has been your leadership language?
History has what you would call as lessons of history. You also have baggage of history. Therefore, being able to decipher between lessons and baggage is a very important part of leadership.
The name, Kotak Mahindra, I mean, that was your decision, right?
When I read books when I was growing up, it was about some of the leading financial institutions in the world. And the names were Goldman Sachs, JP Morgan, Merrill Lynch, Morgan Stanley, all of whom were family names started by founders and who said we must put our name onto the company's name to give a confidence of trust for all the customers and investors.
What's the perspective that you have on where banks should start to disrupt themselves?
First, I think banks should not think about themselves as banks. They should think about themselves to be in the business of serving customers. The mindset is, oh, we are a bank, and therefore we have the right to be lazy. We have a right to have the moat. I think that is the most dangerous thing because the pool of savings in banking is under threat. The banker of today and the future needs three human qualities: prudence, simplicity, and humility. We were never scared about being a small player in a large market. We were ready to take on the big guys, even when we were small. In the 90s, I was one of the 3 junior Ks. The 2 senior Ks were Kothari and Kampani. And I was this little two-wheeler trying to make his presence in the giant truck market.
You know, but now you're the truck. You're no longer the two-wheelers.
I'm a great believer in this 4-quadrant theory: Ram quadrant, Krishna quadrant, Duryodhan quadrant, and Ravan quadrant.
Good morning,
Good morning.
sir.
How are you?
Good to see you. Good to see you. Have you got your steps done for the day?
No, I haven't. I wish I was as meticulous as you.
How have you been, sir?
Very good.
What has been happening?
Enjoying?
Enjoying?
I was in US about a week.
You told me.
What about you?
What have you come ready with? What are you?
I don't know what you.
What acronyms are you throwing my way today?
I don't know what you're going to ask, so I'm coming with an open mind.
What acronyms have you got ready?
I just feel as good as
40 years ago. As you felt when you were 26.
You know, 40 is the new 20.
I totally agree.
And 60 is the new 40.
I totally agree with you. I'm completely on board with that. We have to be. We have no
Absolutely.
choice.
They don't have one which we did long time ago.
Which was?
Which was professional entrepreneur.
Ah, yes.
I'm a great believer in that.
Yes. Yeah, here it is.
Which year was it?
2006.
6-7. Yeah. This is before the global financial crisis.
You know, I want to start by talking to you about this 40-year journey that you were marking, Mr. Kotak. And I want to go back to your 26-year-old self and the audacity of hope, the audacity of ambition. What was it that made you believe that you could take this idea forward and build an institution with it?
We were a startup at Kotak long before startup got formalized as a structure in the financial markets. And we were on relatively small shoestring budgets. Raising capital was not easy, but there was hope and aspiration of an India on the verge of change. Therefore, 1985 was the time when India was on this cusp of really being different. And at some level, we were lucky to be at the right place at the right time.
Yes, right place at the right time, but really getting things started, you know, from the NBFC to eventually getting the first bank license for an NBFC in India. If I were to ask you today to map out the most significant milestones, the milestones that really stand out in your mind as being not just memorable, but also impactful in turning the journey and pivoting your journey to where you are today, what would those be?
First is the timing of when we started. Banking was 97% state-owned. There was a concept of borrowers not being able to raise more than 5 crores of debt. The rate of interest was fixed by the RBI for all borrowers at 17%, and depositors got around 6%. So here was a marketplace where small companies supplying goods to large, well-known companies like Tata's and Mahindras found it difficult to fund themselves even at 17%. So we started our lives as doing bill discounting, where the rate of arbitrage between banks, which banks enjoyed, which was 11%. We said, let's give it to the consumers and the customers and build this business. So we started giving bill financing to SME and small business customers at 16%, who used to supply to large, well-known companies, and went to individuals to rediscount these bills and gave them 12% instead of 6%. So 6 to 17, we made it competitive, 12 to 16, and actually funded a lot of small and medium businesses who had problems of cash flow supplying to large buyers. That was the first relatively open game which enabled us to grow our business in 1985-86. That's the time I met Anand Mahindra.
Yes.
And he was just back from Harvard and into his company, Mahindra Eugene Steel Company. He was designated General Manager Commercial. And I gave this scheme to Anand that we could provide him financing at competitive rates so that his suppliers can get funded. That really worked. Anand then became a shareholder of the company, and the rest is history.
Yes, in many ways, as you said, you know, you were a startup and he ended up being the first VC to come on board.
Absolutely. And then, we started with a total of 30 lakhs capital. I borrowed some money and put in a little over 13 and a half lakhs. Anand also put in, I think, 15%, around 4.5 lakhs. And then we had friends and others who chipped in a little bit. And we started this with 30 lakhs capital.
And the name, Kotak Mahindra, I mean, that was your decision, right? That you wanted both names to be there on the signboard, essentially.
And Shireen, there's a little bit of history to that. Because when I read books when I was growing up, it was about some of the leading financial institutions in the world. And the names were Goldman Sachs, JP Morgan, Merrill Lynch, Morgan Stanley, SG Warburg, all of whom were family names started by founders and who said we must put our name onto the company's name to give a confidence of trust for all the customers and investors in the company. And therefore, putting our name on the line was a part of a belief that we are putting on the line our names to be able to give trust and confidence to all stakeholders.
But you know, it's also interesting that in a way that this was a founder-led institution, but you've been a big believer in the idea of professional entrepreneurship, which is something that you have nurtured here at Kotak Mahindra Bank. Take me through what it takes to be able to operate with the founder's mindset, have that ownership mentality, and yet be able to professionalize the institution.
I think entrepreneurship is a very important quality, but as you grow creatively, the need to put process and professionalism is key. Therefore, many entrepreneurs don't really make it because they find it difficult to move to professionalism. Many professionals are outstanding professionals, but at times do not have an entrepreneurial mindset. Therefore, the concept of a professional entrepreneur has been deeply embedded at Kotak right from the beginning. As soon as we started the company, we kept on getting high-quality professionals. And there's one thing I tried to inculcate in them, is a spirit of entrepreneurship. And for me, it was a learning I was also qualified as an MBA to really ensure that entrepreneurship and professionalism blend. And there are many instances about how we made it quite a journey. So in 1989, not many people remember, India used to sell more than 75 or 80% Maruti cars by then.
Yes.
And there was a 6-month waiting period. So if you wanted a car, it took 6 months. And for the first time in India, Citibank started a car financing scheme, which was a 13% higher purchase rate, which if you converted to IRR, was 39% per annum. But Citi had the financing scheme, but there were no cars. So I recollect, we saw this opportunity where the bank cost of funds was 16% or around, and IRR was phenomenal. So I remember making a trip along with a colleague of mine, Jairam, and we went and met, then I think Mr. Bhargav was there in his early days.
And he's still there.
Yeah, 1991, I think, around that time.
Yeah.
And telling him that, Mr. Bhargav, what if we gave you interest-free money for 6 months? Will you allow us to book 5 and 10,000 cars with your dealers? He says, wow, I'm going to get free cash flow. And in the days of 16 to 17%, 6-month interest-free. So we started booking cars, and therefore we had cars available for our customers whenever they wanted delivery. Our competitor, Citibank, could not do it because New York believed that is, they are not in the business of inventory, they're in the business of financing. Therefore, we were the only game in town. We could offer our customers immediate cars. And being very reasonable financiers, we said our financial terms would be the same as Citibank. So we were, the car finance business built. Post that, of course, our partnership with Goldman Sachs in the 90s, which was a great learning for us because Indian capital markets were a little bit like a small well. That gives us ability to see how the global capital markets worked. We partnered with Ford Credit in the car finance business. We started thereafter from the NBFC. We started an asset management business in 1998, a life insurance business in 2000, 2001, and then banking opened up. And I remember talking to some of my friends at Goldman Sachs, and they said, Uday, why do you want to get into low ROE banking business? And my answer was, we want to be close to our customer, and customer centricity happens if you have a bank account of the customer. And that's why we want to get into it. So we got into banking in 2003. Global financial crisis hit in 2008. We sustained it. We realized we needed to grow. We acquired ING Vaishya Bank and merged it into Kotak in 2015. Post demonetization, we saw the digital wave coming. So we are very, very bullish about the future of digital. Therefore, we started 8/11, which is really 8th November, which is the date on which we thought about this idea. And I am a great believer that India is on the cusp of major ability to have a say in the global finance situation.
You know, I want to go back to some of the lessons that you've learned along the way. And I want to come back to the comment that you made that there are professionals who sometimes are not entrepreneurial enough, and there are entrepreneurs who are not as professional as they ought to be. And we've seen that play itself out specifically in the banking sector. What have been some of the non-negotiables for you as a professional entrepreneur as you grew the bank? I'm sure that there have been dilemmas on how fast you should grow, the choices that you were forced to make or perhaps not make in order to ensure that in the long term you could sort of stand tall. Take me through some of those dilemmas that you've had to face and the choices that you then made.
I do believe the banker of today and the future, as in the past, needs 3 human qualities. First is prudence, which is ensuring that you are stable and sustainable over long periods of time. 2, simplicity. Do simple products. Do not do things which are so complex that neither the customer nor the banker himself fully understands. And 3rd, at times bankers begin to believe that they are the masters of the universe. And the most important quality for a financial sector professional and a banker is humility. Therefore, the key to building long-term financial institution is prudence, simplicity, and humility.
And how have you worked on each of those and developed a culture of humility, simplicity, as well as prudence within the organization? And has there ever been temptation to sort of try and move faster, try and grow the bank faster, which could have perhaps made you take choices that you were not ready to take at that point in time?
No, I do believe in the concept of risk-adjusted returns. Therefore, we have to take the risk, but we need to ensure that the returns are commensurate with the risks. And that balance is one of the most important aspects of banking and finance. The ability to get that mix between risk and returns is critical. It's not about conservatism, it is not about aggression. If you are aggressive, are you pricing in the aggression in the what if? And at times, because bankers sit on large pools of money, they forget this first principle. It is not their money. It is other people's money. It's depositors' money. You just have the right to put it properly and ensure that money comes back. Because what people forget is the banks are perceived to be the safest institutions where people park their surpluses. But the structure of banking is much more leverage than any corporate business. Therefore, a highly risky business has been packaged as the safe place for people to park their money. And this dichotomy is the core to good banking.
take me through some of perhaps the riskiest bets that you made that have turned out to be beneficial to the bank. I remember at the time that ING was going through 2015, so almost 10 years on, it was like, is it too big for Kotak to be able to digest? And those were the questions being asked at that point. Take me through some of the risky bets that have paid off for the bank.
I think there are quite a few. First is venturing into an area as soon as it opened up. So think about each of the businesses we got in. Take life insurance. We did not know much about life insurance, but it was a very simple principle that if a new avenue in financial intermediation opens up, Kotak will get into it and acquire the knowledge and expertise as it moves on, and if required in the short run, get a partner. Therefore, getting a partner in life insurance in the early stages, which was Old Mutual, was a part of learning for us to be able to acquire expertise in the life insurance business. In the capital markets business, in the 90s, the concept of international financing did not exist. So we went out and sought a partnership with Goldman Sachs.
Yeah.
And the purpose was clear. We need to learn, acquire expertise through the joint venture, and ultimately do what's right for our stakeholders. Therefore, the risks we took were in many ways well calculated with the objective of learning. And that is the key to be able to do what I said, risk-adjusted returns. The partnerships and joint ventures were ways to learn about the business. Of course, we took some very interesting bets, like our distress asset business, which we started in the early 2000s, and which has given phenomenal IRRs. We started a tractor financing business in 2005 from scratch. Today, we are amongst the largest or the second largest lenders of tractors in India. And we have a market share of over 12% of all tractors produced in the country. That's how we finance. It was a business which didn't exist. And it was not a business where we were naturally comfortable historically, which is down to the farmer. But we built it from scratch and have made it into a significant business. Therefore, there are many, many areas where we have ventured at early stages, not fully sure about knowing this business. And we took bets on our people. People, we threw them into the deep end and said, this is a new business we want to do. None of us have learned it. Go ahead and do it, explore, make your mistakes, but get going. And I think the entrepreneurship culture in our professional teams was one of our successes. And that is important because one of the risks is as institutions grow, the entrepreneurship angle in the professional at times tends to become more bureaucratic. And in a very tight regulatory framework, you then have a very easy way where professionals start moving away from entrepreneurship to say, this is how it is. And we have to do it right from a compliance point of view, but we need to test the rubber band before we say it cannot be done.
But, that's interesting. And I'm glad that you brought up the rubber band analogy, because how do you test just the right amount before you actually snap? And I'm sure that there have been many instances where you've had to face that. And this is, of course, a highly regulated business. So how do you test just enough, so that you don't actually end up snapping the rubber band?
Of course. I think the issue there is India is an evolving financial market, or has been an evolving financial sector market. And we have to ensure that as weather changes, we are able to change ourselves with the changing weather, but being ready to ask the questions about what is right in substance versus form. And that's what takes me to the fact that I'm a great believer in this 4-quadrant theory, which is the 4 quadrants are Ram quadrant, Krishna quadrant, Duryodhan quadrant, and Ravan quadrant.
Okay.
The Ram is the one who does